investors are eagerly awaiting SEC approval for Bitcoin ETFs. Those are expected out next week. But outside of this event and away from the huge rally we've seen in the crypto space over the last several months, our next guest thinks the investing world is still not bullish enough on crypto as 2024 gets underway. Gautam Chugani is Bernstein's managing director and senior analyst in the digital asset space, joining us now to discuss. So Gautam, let's start with SEC approval, Bitcoin ETFs, your view on that. I guess the questions you get from clients, how you're having folks think about this event for the overall crypto space.
We do think we'll get the Bitcoin ETF approval by next week, hopefully. This is obviously a significant event, right? Because you're going to see funds flow from the traditional markets to the crypto markets. And this has usually been a challenge, right? Given how challenging the exchange space has been for crypto. We've had accidents in the past. We've got this massive fraud that happened in 2022 with FTX. So safekeeping and custody and sort of better user experience has always been a challenge with Bitcoin and crypto. So I think the ETF is a good start. We get to see regular people be able to safely custody the Bitcoin without worrying about safety, and I think that's quite significant.
And thinking about the role that retail plays in the crypto market overall, what have you seen from those investors in the last few months? How do you expect those investors to play a role in the market in 2024? Because it felt, at least to me, and maybe this is, maybe I'm wrong on this, it felt like late 22, early 23, that enthusiasm from retail really came out of the crypto market, and it feels like it's come back in a big way just in the last few weeks.
Yeah, for sure. So I think when an event like FTX happens, and obviously you saw many other bankruptcies with Celsius and Voyager, that directly hurt investor confidence, particularly retail investor confidence, because those were the ones that were mostly invested. Obviously, institutions didn't play that big a role in the last cycle. I think what's changed, in this cycle versus any other previous cycle, institutions have always been laggards in any crypto market, any crypto bull market. This time, actually, institutions have led the market, right? So the first news that came in June was the BlackRock filing of the Bitcoin ETF, and that was a big signal that went out to everyone else. And obviously, multiple other ETF applications followed, first with Bitcoin and then with Ethereum later in the year. So I think those two signals were very strong from an institutional standpoint. And even within for us as Bernstein, we've seen this play out where the overall retail sentiment was weak through 2023. But when it came to sort of large institutional clients, we were seeing that interest come back. So it's a different market. It's a different cycle. I think retail wanted that confidence. And now that institutions are leading it, now retail can come out in full force and feel confident about it. And this time they don't have to worry about custody and safety, which has obviously been one of the biggest challenges of crypto.
Yeah, certainly. And Gautam, when we take into account the run-up that we've seen in the price of Bitcoin and the price of a number of these crypto stocks there, how much of this has already been priced in? And when you take into account the other drivers, the other catalysts that you see here on the horizon for Bitcoin, what do you think then what that upside looks like?
Yeah, so I think there's been a bit of run-up, I think probably about 25% in the last 2 months. Clearly, that's not, what we call, the event being priced in. Maybe the event of approval is priced in, but what really needs to be priced in here are the flows. So we do expect significant flows, maybe a bit slow initially, and takes a bit while to, for the ETFs to integrate with the advisors and for it to become part of usual portfolio allocations of wealth managers and so on and so forth. But as the year progresses, I think we expect closer to about $10 billion plus in this year itself, kind of flowing into the market. I think we are being a tad conservative. And then obviously in the following year, we do expect overall about 10% of Bitcoin circulating supply to be custodied under the ETFs. And obviously that's quite significant. That's quite a significant number, which will mean, hundreds of billions of dollars of flows kind of playing out over the next 18 to 24 months.
Gautam, I think a lot of people are sitting at home listening to at least your forecast. They're very optimistic about what that pricing action could look like then between now and the end of the year and beyond. So what do you think are the top ideas or your top plays for investors at this point to really capitalize on some of that optimism that you see coming into the market?
Yeah, sure. So I think this year, the significant event after the ETF is going to be the halving. Halving is a significant event from the point of view of the fact that, the sell pressure is going to kind of be cut into half starting April 2024. The miners own Bitcoin and then they sell it in the market. And that's obviously known that this is going to happen in April. But when you combine that with the demand catalyst, right, the demand that's coming from corporate treasuries, obviously with something like MicroStrategy, but it could be even other corporate treasuries given the change in the FASB rules around how you account for Bitcoin on the balance sheet. And then as the ETF builds up, that's obviously another significant demand catalyst. So when you combine that supply from halving with the demand, that's where our bullish view comes from. And that obviously leads to, our forecast there. In terms of ideas, what we like are the Bitcoin miners. So we covered 3 names, Riot, CleanSpark, and Marathon. We have an outperform on those 2, which is Riot and CleanSpark. And there, obviously, it's interesting because we see miners as a high beta way to kind of play the Bitcoin cycle, given as the price improves, their revenue improves, that leads to operating leverage. And then obviously late into the cycle, you start to see their price multiples expand as well. So we do think that if Bitcoin, what we are saying goes to 150,000 in the cycle high, we think miners will do more than that, will outperform Bitcoin.
All right, Gautam Jagani, thanks so much for joining us here this morning. Bernstein's analyst there. Thanks so much.
Great, thank you.
Bitcoin pushing higher this morning as investors continue to wait for the Securities and Exchange Commission's January 10th deadline on updates over decision for the U.S. spot Bitcoin ETF. Let's get deeper into the cryptocurrency moves with Yahoo Finance's Jared Blickery. Jared, what are we seeing on our screen here? I thought we were in the red for Bitcoin.
You blink and the direction has changed. So let's take a look. You can see over the last 24 hours, Bitcoin up 3%, but it has been a rocky road this week. Here's what happened over the last 24 hours. Here is the 5-day, so we're going to go back to the last day of last year. And here we see we got a nice rise here. A lot of the rise that we've seen over the last 6 months or so has been in anticipation of the spot Bitcoin ETF. We're expecting that between January 5th and the 10th, and so that is right around the corner. But then yesterday we got a report. I don't want to get too much in depth about it because it didn't even have a lot of meat on it. It just said that there was some concern that some of the issuers who were applying for a spot Bitcoin ETF had hit a roadblock with the SEC, and that was the reason. But that has been unverified. I've checked with some of our tech reporters here and crypto reporters. They've checked with a number of issuers this week and have not heard any problems. Doesn't mean they don't exist, but at least from our end, we haven't heard of anything like that. So here's the 5-day. Lots of volatility there, but let me just back this up to a 3-year chart, and you can see we have tremendous price memory right around 45,000. We saw this little peak here right before, so this could be a stumbling block. I'd say 45 to 47,000, pretty big resistance area. But of course, this goes all the way up to what, the mid 60,000s? It's not until we punch above that we really have free sailing to those big targets ahead, which don't have any price memory. In other words, above those last record prices that we've seen. Want to also touch on Bitcoin seasonality. This is something I ran a couple days ago. This is a map for the entire year, January through February, and we can see it's very choppy. You take a look at S&P 500 seasonality for stocks, tends to go from the lower left to the upper right, but Bitcoin does not have enough bullish history yet, and we're just seeing that in January, we actually tend to come down a little bit, find our footing in February, but watch out because we're expecting that halving in April, that could be a little bit of a fake out. We don't get the big rise until later in the summer. Just historical tendencies. We'll have to see what happens this time, but lots of attention on that spot Bitcoin ETF.
Certainly has been, and lots of attention on exactly when we are potentially going to get it. Sounds like it could come very soon. Jared, thank you.
Madison Mills live on the floor of the New York Stock Exchange. Maddie, Jared talked a lot about what's happening in the equity market, but the big moves today really happening over in the crypto market.
Yeah, Miles, Bitcoin just absolutely puking, as I like to say, this morning. If you take a look at Bitcoin tied to the U.S. dollar, totally erasing some of those gains so far, taking out about $45,000 this morning. Prices tumbling by the most on an intraday basis since back in March. Now, this is, of course, ahead of the SEC's January 10th deadline to decide on a spot Bitcoin ETF. So that anticipation of that upcoming event might be part of this. We could be seeing heading into that day, a maybe buy the rumor, sell the news event as we get closer, but it doesn't look like that's what we're seeing today. Just to run through a couple specifics here, Bitcoin USD down 7.5%, Ethereum down 7.8% this morning, and we are seeing an uptick in volume if I take a look at the data on the Yahoo Finance platform right now. Again, though, I do want to anticipate a little bit of potential bullishness to come for Bitcoin. Bitcoin has rallied in 7 of the 8 past Februarys, and that 7 of the 8 past years in February, rather, and that is because of potentially some of the bonuses that folks get in February, able to put that money towards a little bit of asset diversification and putting that money towards a commodity like Bitcoin as opposed to some of the more traditional asset classes. So we could see that coming in up in February. But again, I think all eyes in the cryptocurrency space are on that upcoming SEC decision and whether or not we're going to see approval of that spot Bitcoin ETF to come. And that's part of why we've seen a lot of inflows into this space, maybe seeing a little bit of outflows today due to just the sheer amount of inflows that we've seen into cryptocurrency, guys.
Yeah, it's certainly been pretty astounding to watch there. Maddie Mills, thanks so much for giving us the latest there from the floor of the New York Stock Exchange.
Bitcoin swinging over $45,000 today for the first time since 2022. And this comes amid growing optimism we'll see approvals for the first spot Bitcoin ETFs. For more on this, we turn to Yahoo Finance's David Hollerith. David, seeing some of this enthusiasm from last year still swinging into the new year.
Yeah. Hey, Rochelle. Happy 2024. Bitcoin's price hasn't stood this high since April 2 years ago. And that it was also about a month before the blowups that shook 2022 for the industry. Another recent trend we've actually noticed too has been the return of Bitcoin advertisements. So between the price and the ads, both of these appear to be around the revolving speculative but growing chance of US spot Bitcoin ETFs to be listed later this month. So just to give you some context, it's a pretty mainstream moment for sort of an asset class that has kind of stood on the fringes, if we look back to it historically. And both these things are effectively, hedged around whether or not or when these ETFs launch. And the SEC notoriously has, been tough and a tough enforcer of crypto this year. On that front, on Friday, we saw a number of the asset managers that want to list a Bitcoin spot ETF update their applications. Not a lot new there. And since the weekend, nothing else has happened, but obviously momentum's sort of growing and a lot of people were off last week. Issuers we've spoken with have set their expectations to keep an eye out for between Thursday, January 4th, which is this Thursday, and Monday, January 8th. The ultimate deadline for approval of a spot Bitcoin ETF is set for January 10th. So the launch of Bitcoin-related products in the past has usually coincided with a run-up in prices like we have seen in this time period as we're waiting for the potential approval of a spot product. Now, what has traders excited about this year is that historically, that's tended to be sort of a sell the news event that has not been great, and it's kind of coincided with largely the end of kind of Bitcoin's bull run. And given where Bitcoin is trading now and some other positive or potentially positive events that are sort of expected to come this year, there's sort of some hopefulness that this will not be necessarily the end of the positive signs and signals for Bitcoin in 2024. So all that to say, there's growing optimism around these products. Not a lot new has changed since the weekend.
We'll continue to watch that. I remember all the celebrity endorsements and all the Super Bowl commercials just, a few years ago, and now you didn't see any of them. It'll be interesting to see what happens. And of course, looking forward to the Bitcoin halving event. It's supposed to be coming up in April as well. I know you'll be tracking all of that for us. Our very own David Hollerith. Thank you so much.
Investors are trying to cash into the crypto rush ahead of a possible spot Bitcoin ETF approval next month by buying into Bitcoin mining stocks. So much so that miners are outperforming crypto exchanges and Bitcoin this year. For more on this, we've got Yahoo Finance's Madison Mills here. Maddie, what do we know about this and why this move is taking place right now?
Yeah, guys, I remember a few years ago, Dan Ives explaining to me that during a gold rush, you don't want to buy the gold, you want to buy the picks and shovels. And that's exactly what we're seeing in this Bitcoin miner stock outperformance. These gains are just remarkable here. You've got Marathon Digital Holdings up 800%, Riot Platforms up 400% year to date. Both of those obviously outperforming those digital currencies themselves, given some of the gains there. Bitcoin itself having 160% increase in 2023. Now, what's interesting is this is an energy intensive process. It involves a lot of specialized computers. So miners are expanding their operations to boost Bitcoin production. That's, of course, in anticipation of that regulatory approval of the spot Bitcoin ETF, which could lead to a lot more demand for that Bitcoin itself. And as you can see here, a lot of firms on the street awaiting that approval. So that's, these firms are anticipating that, and especially Marathon Digital and Riot anticipating that, and they're investing in the technology that would be needed to support that increase in demand so that they're ready when the time comes.
And this may not be an end of January thing or end of February in terms of the spot Bitcoin ETF approval. I mean, we're getting ready to head out to the World Economic Forum in Davos, and a lot of folks that we're talking to in the lead up think this could happen within 2 weeks, Brad.
Yeah, and I think the other thing is what could take place in April of 2024, which is the halving. And one of the huge things that I've been tracking is for all of these miners right now, the halving is going to create even more costs for them because you essentially look at the computing power. If you're looking at a reward that gets cut in half for the operation of mining, then you're essentially doubling the costs for mining. And so for a lot of these operators out there, there could be another inkling of a thought out there within the markets of which one of these miners looks most apt to be acquired by a larger player out there, perhaps a major bank, perhaps one of the firms that's applied for a spot ETF, Bitcoin ETF as well, because then that would increase the number that they actually have in their own holdings as well here. So I think that's one other thought that might be permeating out there, or at least rumbling out there in the market as of right now, especially going into that halving that's set to take place or expected in April of 2024. Marathon, as you were mentioning them, as we were talking about them, they just made an acquisition, about $179 million worth of Bitcoin mining operations. So that is one particular thought that kind of struck me this morning that could come forward as well here that's perhaps pushing this play.
And if there's any positive here besides the obvious, at least this is being driven by a potential catalyst.
Yeah.
This is not the broader stock market taking off, trading at record highs on hopes for rate cuts, and that's dragging in like the likes of cryptocurrencies. There's some real potential here to unlock a lot of value with these names if that ETF is approved.
That's a great point. It's one of the only names that we've talked about this morning that's not going to be driven by what Jay Powell does, which could be an important thing for investors to think about in their portfolio mix.
Shares for Bitcoin mining companies are reversing course this morning. This comes after double-digit gains miners saw coming off hopes of a spot Bitcoin ETF and a positive outlook for cryptocurrencies in 2024. Let's bring in Yahoo Finance's David Hollerith to give us more details. Hey, David.
Hey, Rochelle. Yeah, Bitcoin has been down, or it's slightly up, but it's been more or less flat over the past week. And the important thing to know about Bitcoin miners is that they have to borrow a lot of money to make upfront purchases for mining equipment. And two notable publicly traded mining firms, Riot and Marathon Digital, have both announced acquisitions. Riot for purchasing more mining equipment, and Marathon to acquire 2 new Bitcoin mining sites. So they are heavily levered as a result of needing all this debt. So their stocks can be expected to trade fairly volatile. But, I would say outside of the on-the-day movements in general, the amount of investment that these firms are taking, given that they're so heavily levered, is sort of one more data point we can take around this optimism for what Bitcoin might look like next year. Obviously, there's the possibility of the Bitcoin spot ETFs to be potentially launched as soon as January. if the SEC grants approval. But we also have a more optimistic macro environment with the possibility of Fed interest rate changes next year, and then also the Bitcoin halving, which is sort of a specific Bitcoin type supply change that happens every 4 years. So in general, I think this is kind of a sign, despite the on-the-day moves, about there's a lot more leverage that industry firms are putting into an optimistic next year for Bitcoin.
And David, speaking of signs and kind of reading the tea leaves, so Cathie Wood, ARK Invest founder and CEO, she also sold the remaining 2.25 million shares in Grayscale Bitcoin and bought over 4 million shares of ProShares Bitcoin. Help us understand what's going on there and kind of what this means for the landscape within Bitcoin.
Yeah, so Wood was on Bloomberg TV this morning, and she also spoke to us earlier in the week. And on Bloomberg, she said that the GBTC shares were sold, one, out of an abundance of caution, given the uncertainty about whether Grayscale would be able to convert their investment trust into an ETF, given the tea leaves of potential approval for these products in January. She also indicated that GBTC has also had a very good run this year. Earlier this week, when she spoke to us, she admitted that in anticipation for the ETF movement, investors have seen nice profits. And because of the Grayscale Bitcoin Trust's historical discount, because it's not a full ETF, it's actually seen much higher return than Bitcoin this year. So they're in a fairly good place to take some profits. ARK is also in the running to gain SEC approval to issue one of these spot Bitcoin ETFs. And speaking with our anchor, Julie Hyman, this week, Wood actually admitted that of the dozen or so potential issuers of these products, if they are all to be cleared, there's still sort of only a chance of 1 to 3 or so, is what she said, winners to take market share. The ETF game is all about liquidity. And I think I would just add to that too. We don't have any clarification on this, but given that ARK is potentially launching an ETF, spot Bitcoin ETF in the near future, it would make sense that ARK could potentially be taking some of those funds it sold from Grayscale and maybe temporarily parking them in BITO. We don't know this for sure, and eventually putting that money into their own ETF to add sort of a liquidity boost or advantage when these ETFs, or if these ETFs are launched, to help them sort of gain market share.
All right, David Hollerith, always having us covered from Bitcoin to banks. Thank you.
You cover the ETF industry very, very closely. Presuming that we get approval here, and I believe you're in the same camp as Sam, what is going to be different about these ETFs? What sort of special boxes are the issuers going to need to tick to get these approvals?
Yeah, we have a note out today saying that just making it to the starting gate is half the battle. It's sort of the race before the race. And what we're hearing is, as was just mentioned, the big thing the SEC was concerned with was in-kind creation redemption. They don't want that, because that means broker-dealers and unregistered broker-dealers touch Bitcoin. They don't want that. Cash creations is more of a closed network where only the issuer touches Bitcoin. So you have more control with that. It's not as great for the investor, but I think largely it will be unnoticed by the end investor. So that's step one. Step two is the harder part. That is to get a signed agreement with an authorized participant. Every ETF needs an AP, somebody to step in, provide liquidity, do creations, redemptions. And we are hearing that not everybody is getting those signed yet. And we're basically, 24 hours before, 48 hours before the S1s are due. So I'm hearing there's a mad scramble as we speak to get, a Jane Street or a Virtu to sign on for each of these ETFs. So it's possible not all of these issuers even make it to day one. And if they don't make it to day one, unless you're BlackRock or Fidelity, you might as well forget it.
And Sam, another question I had was have there been any kind of changes in the spot Bitcoin market itself, Sam, that has regulators perhaps more comfortable with green lighting this product, or no, it doesn't have to do with market conditions? This is just, frankly, the SEC in some sense is boxed in here.
I think it's that the SEC is boxed in. I think that my personal view is the Bitcoin spot market is mature at this point. Bitcoin has been around since 2009. There are very well developed spot markets in it. You've had Bitcoin future ETFs that have been approved for, I think, around 5 years. So the market for Bitcoin has the depth and the liquidity to ward off things like manipulation. This is a legitimate asset class. With the court ruling in the DC court in the Grayscale case, and the fact that institutions like Galaxy, BlackRock, Fidelity getting in, you see that this is a serious market. The SEC can't ignore it anymore, regardless of SEC Chair Gary Gensler's position against crypto generally. But I will say, to the extent there has been some change, I do think after the Grayscale ruling, after it became clear that it was almost inevitable that some type of spot Bitcoin ETF would have to be approved, I think you've seen much more serious institutions get into the space. Many of my clients are institutions that you would see in traditional finance, who have the record of the reputation and the record with regulators like the SEC. They can offer a product that consumers can be confident in, that offer the type of investor protections that the SEC likes to see. And so those types of institutions, the Galaxies, the Fidelities, the BlackRocks of the world, are here. They're offering a real product. And so I think to the extent that there has been a change, you could say it's that.
As the markets price in rate cuts into the new year, those in crypto are betting big money on a spot Bitcoin ETF, and it becoming a reality as the SEC gives companies a new deadline of December 29th to make final changes to their applications. The new deadline has led many industry watchers to predict a wave of approvals come January, but not necessarily news there. Bitcoin is now trading above $42,000, reaching levels this month we haven't seen since April of 2022. And for his take on what is coming next for crypto, let's bring in Lawrence Latimer, the co-founder and CEO of Dinara, a crypto trading platform. Lawrence, thank you for coming in here today. So what is the importance of this spot Bitcoin ETF? I've been tracking this for months. I've been seeing the enthusiasm, but I guess the big question is, when we get this finally, maybe on January 10th, is it a sell the news event?
Yeah. And I thank you for having me, first of all. But as we come down to thinking about what's happening for the Bitcoin approvals, Bitcoin ETF approvals, the reality is that much of the enthusiasm, as you just said, much of the attention and much of the price movement has largely been priced in. That's what we think here at Dinara, and that's certainly what we believe. It's going to be a massive event for the industry. The work that's gone into that from some of the largest firms in the industry has been happening some of them over 2 years. So it is a really massive event. It's a great sort of support for the institutionalization of digital assets and the mainstreaming of digital asset, widespread adoption. But we do think there's maybe a little bit of frothiness there, and that the kind of price movement that many are expecting to see may already be mostly priced in.
And so with that in mind, you think about the perhaps the longer tail of it, where we'll see a jump perhaps early on in inflows into some of these ETFs, but then what after that? What is perhaps a good baseline for us to consider looking at the amount of flows that actually make their way into one of the riskier parts of the asset classes out there?
Yeah. Well, we made some predictions for 2024, and so this falls firmly in the space there. We think that there's going to be some real meaningful appreciation across the whole industry. In October, the overall market cap for digital assets sat at around $1 trillion. It's now about $1.6 trillion. We think by the end of 2025, you'll be sitting at about $2.5 trillion in overall market cap. So if you kind of average that across the industry, we think there's another 50% or so that upside built into the pricing of all assets. We think Bitcoin's among them. What we'll see is that ETF demand that's created there will put a nice floor and support for price movement. We also think there's some optimism around the legislative front. We hope to see some thoughtful legislative action in some point in 2024 as well. That'll again put some upward pressure. And then you have the Bitcoin halving, which is sort of a technical piece that's happening, I believe, in April. And that traditionally has also put some upward pressure on the price of the asset.
Coinbase getting regulatory approval this week in France, pushing deeper into the European market. Now the news coming amid excitement surrounding crypto assets. We have certainly seen a rally in Bitcoin prices in just the last month alone. We're looking at gains of about 16%. A lot of this excitement due to a potential approval of a Bitcoin spot ETF, the first one that could be coming to market here in 2024. We want to bring in John Todaro. He is Needham & Company's senior analyst. John, it's great to have you here. Let's first start with the news that we got out this week of Coinbase, because when you take a look at that chart, we're looking at gains here at the open. We're looking at pretty significant gains over the last week alone. Over the last 5 days, the stock up just about 17.5%. How big of a milestone is this for Coinbase's international growth strategy?
Sure. I think it's a strategy that they almost had to do with the lack of regulatory clarity in the U.S. We saw Robinhood do a similar push where they opened up in Europe. They offer more crypto assets there for trading than in the U.S. So it certainly makes sense for Coinbase to do that push. I would say a big part of the stock move, though, has just been the underlying performance of crypto assets, the expectation of a Bitcoin ETF coming down, because the miners are up quite a bit as well this past week. So it's not just related to Coinbase and their international push, but this does open up new growth strategies for them, and they do plan to push more internationally in 2024 and beyond, especially until we get a little bit more regulatory clarity here in the States.
John, you got some calls out this morning comparing Coinbase to perhaps the Amazon of crypto. You know, at the end of the day, what is going to be the driving force that has consumers look at this company and say ultimately that this is something that I need to have on my phone, that is so kind of integral in crypto to their everyday lives that Coinbase sits at perhaps the hub of that?
Yeah, I think the key to that is Coinbase becoming more than just a crypto exchange brokerage. So what it needs to do is become, to your point, have a lot more use cases within crypto besides just trading. And one way they can do that is their own blockchain. They have a base chain is their own blockchain, which they've launched. That could become very integral to a lot of aspects of the crypto ecosystem. It could underpin gaming applications, underpin other trading products. So there's a lot of things that they can do with that. And that's where users might even be transacting on one of the Coinbase blockchain and not even know it. So in that case, Coinbase could become this hub for a lot of activity within crypto, less so just kind of, hey, here's this retail platform to go buy and sell Bitcoin on.
John, when it comes to how investors, how advisors are thinking about Bitcoin or thinking about crypto, you recently did a survey. You spoke with advisors, individual investors, just trying to determine or gauge, I guess, a perception of a potential spot Bitcoin ETF, whether or not that approval is going to really be a catalyst here for the price movement that we could see in crypto. What did you find?
Yeah, so one, right now, there's a lot of disinterest still in Bitcoin and a Bitcoin ETF. We found that only 11% of individuals who haven't bought Bitcoin in the past said they would be likely or very likely to buy into a Bitcoin ETF. So we do think right now it's still pretty early innings, even though there's been a lot of talk about a Bitcoin ETF. Your average investor, they're not sitting there ready to go the moment a Bitcoin ETF is launched. So one, the big takeaway from that is we do think it's early innings. We think if Bitcoin gets above 50K or higher, that starts to get the excitement back in the space. Then you have this Bitcoin ETF product and capital might flow in. And then the second point is that the advisors is where we think the capital will mostly come in. You might have some individuals get excited about it, but keep in mind, there's a lot of avenues that exist today for individuals to buy Bitcoin. They can go to Coinbase, they can go to Robinhood, they can go to decentralized exchanges. So there's a lot of avenues for those folks where we think the new capital would come in from advisors. And so the survey did find a little bit more positive aspects about advisors getting capital allocated to Bitcoin ETF. But even that, we found that advisors mostly have had disinterest from their clients.
Crypto charging higher into the year end on approval hopes for spot Bitcoin ETFs and the promise of Fed rate cuts in 2024. Bitcoin is now trading above $43,000. a level we have not seen since April of 2022. It's now up more than 160% year to date. Joining us now to discuss is FundStrat Global Advisors Vice President of Digital Asset Strategy, Sean Farrell. So, Sean, when you think about where crypto is now, you say now is an opportune time to be fully allocated in the market. That's a quote. What's the thesis behind that?
Yeah, first, thanks for having me. Right now we have this perfect concoction of both macro and industry specific tailwinds. Obviously everyone knows the dovish sentiments from the Fed a couple weeks ago, or last week rather, really put bears on their heels. Certainly suggested that inflation was tamed, and regardless of whether it is or not, it does seem like the worst of the tightening is behind us. And then from an industry specific setup, we have, obviously, as you alluded to, an ETF approval that is anticipated to come within a few weeks, which, I think should bring a new cohort of investors into the fold, increase flows into digital assets. And then we have the halving coming up at the end of Q1 into Q2. So there's really this, perfect storm of positive tailwinds heading into next year.
And Sean, just to emphasize that one point on that spot Bitcoin ETF, I'm interested to know whether, do you think that's a real, if and when we see that approval, maybe early next year, right? Do you see that's a real positive catalyst for Bitcoin? Because, the team at JP Morgan, it was interesting, Sean, I don't know if you saw this note, they were telling clients recently, they actually assigned a pretty high chance. They think that ultimately is kind of a sell the news moment, but I guess you disagree with that?
Yeah, look, it depends on your time frame, and we'll be watching closely to see how we trade into ETF approval. Because functionally speaking, even if the ETFs are approved, we think they'll be approved between January 8th and January 10th. Even if they're approved on those dates, you're not going to see any sizable inflows until those products launch. And so there certainly is a scenario in which you could have people front running the ETF news, and perhaps you have some, acute drawdown following actual approval. But I think we're telling clients it's probably not worth trading around too cute of a manner, just because we think any consolidation post ETF approval is going to be short-lived.
So, Sean, I want to ask you about FTX in particular. There have been some new headlines about FTX and just investors cashing in around it. And, originally that kind of led to the crypto winter. What does that picture look like now?
Well, the FTX news is rather positive in terms of it seems like creditors are going to be made whole. This is on or at least close to it. And obviously this is on a dollarized basis, so they will not be receiving, their pro rata portion of the value of the crypto assets that they had, on the exchange. But I think it's a positive sign that, as an industry, we've cleared out a lot of the, malicious actors, and, a lot of more sophisticated players have come in to provide, better centralized infrastructure. And, I don't think that we're going to have another FTX scenario happen again. So it's a positive.
And Sean, I want to get you out of here on this. Let's say, Sean, I'm listening to this interview. I agree with Sean Farrell. He's making a ton of sense. I'm bullish on crypto in 2024. Where should you be investing, Sean? Where do you think people should be committing capital in the space?
Yeah. So obviously, it goes without saying, Bitcoin is a pretty great place to be. We're very excited about where miners are at right now. We think they offer pretty interesting beta to Bitcoin heading into next year. A lot of them are well capitalized after, a lot of, they issued a lot of equity last year to shore up their balance sheets. And as a result, actually underperformed this year by and large. But a lot of them are well capitalized, and there's a lot of interesting stuff happening within the Bitcoin economy. There's been a lot of activity with inscriptions, ordinals, an appetite to build a layer 2 ecosystem atop Bitcoin, and as a result, that's created a lot of fee pressure on the Bitcoin network. And this has been a windfall for miners, and I think a lot of analysts on the street are going to start to price that into a lot of their outlooks for miners, and we're going to see them really benefit in the coming 12 months.
Fundstrat Global Advisors Vice President Sean Farrell. Sean, thank you so much for joining the show today. Appreciate that insight.
Thanks for having me.
Bitcoin was trending all day long on Yahoo Finance as optimism grows over lower rates and the eventual approval of a spot Bitcoin ETF. Yahoo Finance executive editor Brian Armstrong sat down with Coinbase CEO Brian Armstrong and first asked him about his outlook for crypto in 2024.
Well, we really believe that crypto is the future of money, and that's already here. So it's not just a speculative asset class. People are now using it for all kinds of different types of utility. And we always believed that the industry would evolve in this kind of 3 pillars. We felt like it would start as an asset class. People would trade speculatively. Then it would become a new type of financial services with people doing stablecoin payments and commerce, remittance payments, earning yield on their assets, getting borrowing and lending with DeFi. And now, we're even starting to see this 3rd pillar come online, which is crypto as a new type of application platform. This is what people are calling Web3. It's a new way for people to build applications in a totally decentralized way with decentralized identity, decentralized social networks, decentralized scientific research. And it's kind of the future of the internet. So it's much bigger than people, I think, realize, who are still thinking about it just as one asset class. And that's something that's exciting.
Since we last talked, I think it was the Goldman Sachs Tech Conference a couple of months ago, but just the prices of Bitcoin and other cryptocurrencies have gone through the roof. What do you think is driving that? Is it fundamental, or is this a good old-fashioned speculative move in crypto?
Well, you can always look back at these things with 2020 hindsight and try to make sense of it. But I think in this case, a few things. One is we've had a number of ETFs being filed by the biggest, asset managers and financial service firms in the world. And by the way, Coinbase has been named as, of course, the custodian in almost all of those, which is great. But I think the market is hoping and anticipating, as we are, that in Q1 we'll see some of those approvals come through. But more importantly, I think what people are reacting to this year is crypto is here to stay. I mean, think about all the bad headlines, the enforcement actions. There were CEOs going to jail, and yet crypto prices are up 90% year to date. And so I think the industry is kind of sending a very clear message here that this technology is here to stay. 38% of young people, if you survey them, they say they think crypto is the best way they have to have some new sort of economic opportunity in life. 90% of Americans are frustrated and upset with the current financial system as it exists. And so, yes, there's going to be ups and downs, but this movement's here to stay. And we need to send that message to Washington too, by the way, because I think not everyone there is aware of that.
The Bitcoin, that ETF, when do you see that being approved? And then once and if something along those lines gets approved, what happens? What happens to the Bitcoin prices? What happens to this industry?
Yeah, well, of course, I don't have any kind of inside information about when exactly it would be approved, but I think myself and others in the industry, we're all kind of hoping that might happen early next year. But what happens is big new pools of capital can now flow into these ETFs. There's certain pools of capital where their restrictions or bylaws don't allow them to, say, sign up to a Coinbase account and own digital assets directly, but they can own an ETF. And so these are where the largest pools of capital in the world, pensions, endowments, hedge funds, things like that, where they may be able to now move into the crypto space. Now, just owning a Bitcoin ETF is great. You're going to be able to get exposure to Bitcoin, but I also think it's going to bring a lot of people into the crypto space who may want to trade and own other assets. They may want to use crypto. They might want to earn yield on their assets or do institutional financing. And so I see it as a benefit not only for Bitcoin, bringing more pools of capital, but also for Coinbase's existing business, Coinbase Prime for our institutions, Coinbase Retail for our retail customers. It's also just going to drive activity and awareness there. So I think it's all around good. And Coinbase has a place to play in the value chain here directly with customers, but also as a custodian for the ETFs.
You've been very vocal, Brian, on the need for regulation, whatever form that may be. I mean, do you think new laws would have prevented some of the blowups we saw in 2022?
Yes, I do. I mean, look, some of the rules are already clear that are out there. You have to follow AML, KYC rules, OFAC sanctions, and I think that part of the ecosystem is already pretty clear. But there's a whole bunch of questions which are not answered currently under the law about, just a great example is, are some of these assets a security or a commodity, right? Gary Gensler, when he was asked by Congress this question for Ethereum, which is one of the major assets, he couldn't answer that question. And so these are big unanswered questions in the space. Now, what has this done? I mean, it's basically driven a lot of the activity offshore to unregulated platforms. Those have had major issues this year, as everyone has seen, and that's caused a lot of consumer harm, including for American investors. And so when there's not a clear rule book, the industry is not going to be built in America. That's bad for the American economy, but it's also bad for American retail investors who are getting hurt by going offshore to these unregulated products. So ideally, the first case option would have been the regulators work with industry under the Administrative Procedures Act. They do a rulemaking process, publish clear rules. Everyone has to follow the same rules. That would allow the industry to kind of flourish in the US. Since that didn't happen, instead, we've had to kind of rely on the courts to create case law, to create some precedent. And we're ultimately, I think, going to have to rely on Congress to pass new legislation that would clarify, where does the CFTC and the SEC, what are their roles in this? So it's not having this turf war, lack of clarity, pushing the industry offshore. And the last thing I'll just say is I think the US is actually kind of behind on this. I mean, 83% of the G20 countries out there have already started work on crypto regulations and new laws. So the US is behind. There are 2 bills going through the House right now that have gotten bipartisan support in the House committees. We're hoping those go to a full floor House vote early next year.
You're really plugged into the DC and the regulatory scene, Brian, as you should. I mean, it makes sense. You have to be up to date on this stuff. Do you get that sense that regulators are taking what Jamie Dimon said seriously on a potential ban of crypto?
No, I don't think that's serious. And it's actually strange because although Jamie Dimon's comments were a bit perplexing, internally at JP Morgan, they're actually advancing several projects working on blockchain and crypto technology. So there's such a large organization. I think sometimes the left hand doesn't know what the right hand is doing. But no, there's no world in the United States where 52 million Americans have used crypto now. This isn't, 38% of young people believe this is an important tool for their economic growth in the future. I mean, it would be political suicide to be anti-crypto and try to ban it to that extent, right? And so I think next year we need to send a very clear message on that. There's an organization, standwithcrypto.org, which has been bringing together the crypto customer base in the US and trying to get to 1 million of them that will raise their hand next year before the elections and kind of say, all right, I really want to be a crypto advocate. I want to vote for pro-crypto candidates. I want to donate. I want to call my congressmen and representatives. So between the $78 million super PAC that came out yesterday, which is a huge step for the crypto industry, and this standwithcrypto.org grassroots movement, I think we've got a really big chance to send a message in DC.
That was our conversation with Coinbase CEO Brian Armstrong. Let's get into some trending tickers in today's trade. Check out shares of Affirm. They are soaring today, up about 17%. Company announcing it will bring its pay over time option to self-checkout kiosks at over 4,500 Walmart stores across the U.S. So that was the news today, Julie. I mean, basically, the news here, Affirm really expanding its reach with more potential consumers. This stock, by the way, is now up some 400% this year. So just a remarkable move for Max Levchin's company. Perhaps not a big surprise after a move like that. You've got about 45% of analysts covering Affirm. They're now on the sidelines with a hold. There are still some believers, though. I checked in with Dan Dolev over at Mizuho, friend of Yahoo Finance. Dan has been pounding the table on Affirm for a while. Continues, he says, to have a buy on this name. Says it still enjoys just a small penetration of what he thinks is just this massive TAM. Likes the product innovation adoption, he says, likes the Affirm card, thinks they can double GMV over the medium term. His target's 30.
On the flip side, you've got James Faucette over at Morgan Stanley, who downgraded the stock just yesterday, I believe, and basically said, it's not necessarily, and as you pointed out, there are more holds than buys on the stock right now. It's not necessarily because people don't believe in the fundamental story. It's because of that 400%
yeah, that'll do it.
Rally that the stock has had this year. And that's what Faucette said, that the valuation is just, you can't justify it given the outlook for the company. So yes, of course, it's up today, another big pop. all those guys might be wrong. Valuation doesn't matter if people keep buying, right? So we'll see what ends up happening.
431% in 2023. Not bad.
Not so bad. Let's talk about another rally that we've seen this year. That is in Bitcoin. We are seeing it up again today, 1.6%. Year to date, it's up over 150%. And there are some potential catalysts here. Investors are betting on Fed rate cuts. They're hopeful also, of course, the Securities and Exchange Commission will soon approve the first spot Bitcoin ETF. A couple of other things that are out there here. We have been seeing more inflows into crypto exchanges. CoinDesk citing some data from Into the Block and saying that it saw $860 million of net inflows into exchanges last week, which is the highest level since March. Now, on the flip side, they said when people move their assets to exchanges from, say, cold storage perhaps, that might mean they want to sell. So that could be maybe a little bit of a bearish counter indicator because Bitcoin's done so well, and coming into the end of the year, maybe people want to start taking some profits.
Yeah, I mean, a couple of big things. One is the expectation that the Fed's going to cut rates, so that obviously supports risk-sensitive assets, stocks, crypto. Two, the expectation is still out there, Julie, we've talked so much about this, that the SEC is really going to approve that spot Bitcoin ETF. And there's been, listen, plenty of heavy hitters. Can't wait to sell you that product. So BlackRock, Invesco. And we've had this kind of conversation with a lot of smart folks about whether that really is a catalyst for Bitcoin into 2024. There was a good note from the team at JP Morgan saying just that arguing actually kind of cautious on crypto markets next year, see a high chance of buy the rumor, sell the fact, they're telling clients, once that SEC does approve spot Bitcoin ETF. So we'll see how it shakes out.
Yeah, and there's also some evidence, by the way, that retail investors have not been getting in, or at least not getting in anew to this group. If you look at app downloads, which is something that some of the journalists out there have been doing, we have not seen the kind of downloads of Bitcoin or crypto buying apps that we saw during the past boom cycles, but maybe that's because people bought it and now they're hanging on to it. It's difficult to say.
Still, what a move. I mean, Bitcoin up somewhat, 150% this year. Tremendous. Finally, let's check out Chewy, rising today. That says Jefferies initiates coverage on that stock with a buy rating. You can see up about 8% on that news. So it has not been a good year if you've been long Chewy. The stock has been under real pressure. It's down about 40%, Julie, but that can mean, obviously, when that happens, risk reward can start looking more attractive. And that's what the team at Jefferies in part is saying here. They initiate coverage with a buy. Their target is 27, and they say, listen, this is a pure play on pet e-commerce. They see several growth and margin levers ahead, pet health, ads biz. And an interesting kind of macro point they made too, which is that, listen, we know some consumers are under pressure. Maybe they're not buying food and discretionary as much as they were, but they know that Chewy indexes to high income groups. So maybe kind of sheltered from that in some sense.
Okay, and at the same time, Pet IQ, also a buy. I don't even know what Pet IQ is.
I don't know what Pet IQ is.
And Fresh Pet Bark and Petco are hold.
Yeah. Do you shop for Sparky at Chewy?
No.
You don't?
No,
Where do you go?
I usually just go to Amazon.
Same here.
Yeah, or because
Maybe we're missing out. I don't know.
Bitcoin bulls were enjoying a nice ride last week. As of last Friday, 2023 was Bitcoin's best year since 2020 in terms of percentage gains, but we did see a bit of a reversal, Bitcoin erasing its week-long rally after one of the worst crypto sell-offs that we've seen this year. So with all this volatility in the crypto market, where are prices headed next? We want to bring in Greg Beard. He's Stronghold Digital Mining's CEO. Greg, it's great to see you. So I think there's a lot of talk just about in terms of the pricing action that we've seen with Bitcoin, a number of headlines that have been driving some of this optimism as we look ahead to 2024. What do you think is the biggest driver of Bitcoin here over the next several months?
Yeah, everyone's been paying attention to the prospect of ETFs being approved by the SEC and the prospective demand that will be brought to the Bitcoin market with those ETFs hitting the street. Which, if Bitcoin trades about $20 billion a day worth of coins, in ETFs themselves could be tens of billions of dollars of additional demand. So I think that's the reason for the recent run-up in Bitcoin in our view.
Is the potential for ETF approvals even bigger than the halving that is set to come forward or anticipated next year?
Yeah, so there's a lot of talk about what the halving would do, and the halving really just reduces the amount of the mining reward for the Bitcoin miners that approve transactions. on the network. And looking backward, that has been a big impetus for Bitcoin price to rise. But as Bitcoin has gotten bigger over time, the mining rewards are less important. So I think I might have the minority view that the halving will have a big immediate impact on price. I think it's a much bigger impact on the demand from the perspective of ETF acceptance or from broader market use and acceptance as Bitcoin becomes more prevalent.
So Greg, when you talk about maybe broader use and acceptance, you talk about the fact that there is so much optimism surrounding the ETF approvals. How much of that optimism has already been priced in, though, when you take a look at the massive run-up that we have seen in Bitcoin?
Yeah, I think certainly some will be priced in, but those ETFs actually have to go out and buy the Bitcoins. And so I think that's the demand, the prospect for demand might be in the market a bit, but keep in mind they actually have to go do it, and they can't do it until they're approved and created.
Where does that?
I don't think we've seen it all yet.
And so where does that potentially, from your purview, push prices towards if you have this inflow of necessary purchases of Bitcoin in order to build out an asset that is essentially holding what an investor would then be willing to hold in the ETF that's holding that Bitcoin?
Yeah, so literally, hey, Bitcoin has about an $800 billion value in aggregate. And ETFs themselves in aggregate could be north of 100 billion of additional demand. So it's meaningful. But I think more important than that is Bitcoin has made it through really dark days of SEC scrutiny, through failures in companies like FTX. And it's still here hovering around 40,000 a coin. And we still haven't seen the increase in use from like day-to-day citizens in using coins. So it's viewed today as really a store of value. And I think imagine what could happen to transaction volume if there were a buy it now button on Amazon in Bitcoin, for example. So I think we're just seeing still the early days of Bitcoin adoption. And so I think I would be quite bullish on what could happen to pricing when that manifests itself in the marketplace.
Greg, what about the near term? And you briefly touched on it, but in terms of all the volatility that we've seen for the price of Bitcoin, the fact that we have seen a number of companies collapse, most famously FTX here over the last year, how much has that really put a limit in terms of some of that demand that we have seen for Bitcoin?
You know what, I would say Bitcoin is the grandfather of the cryptocurrencies. It's based on the largest decentralized network in the world. And I think because of the success of Bitcoin, we saw the introduction of a lot of follow-on coins that don't have the same fundamental utility that Bitcoin has. And so, hey, while it's flattering to have a lot of followers, try to improve on the concept, there is only one Bitcoin, and it's the original one, which is why we at Stronghold mine it.
And Greg, while we have you, I mean, if we look back as well at previous crypto winters, we've seen the washout of some key kind of players at that point, but then ultimately were discovered to be, in some efforts, more fraudulent than actually based in kind of a fact or being able to have staying power. I think back to 2017 and the ICO wipeout. I think back to even earlier this year and some of the algorithmic stablecoin wipeout that we had seen too. So what does Bitcoin look like emerging after this most recent crypto winter?
Yeah, it's the favorite coin, right? It's essentially fraud-proof given that it's so decentralized. And so I think it emerges as the champion, which it always was. But obviously, I think its success is what allowed others to have follow-on attempts that weren't as valuable.
Greg Beard, Stronghold Digital Mining CEO. Greg, we appreciate you taking the time here with us today.
Thank you.
At the same time, along with the price surge, we've had the reemergence of some of the sort of hype men, if you will, or shills, to put it another way, of crypto more broadly and Bitcoin more specifically, and an almost sort of quasi-religious tone sometimes when you're talking about this stuff. Are investors more wary of that than they once were because now they've been through a painful cycle?
It's a great question. I think that we've been through a lot in the space over the past couple of years, whether it's FTX or even some of the more recent regulatory issues this space has dealt with. So on one hand, you absolutely have, I think, some of the hype. On the other hand, you have $20 trillion of really legitimate institutional asset managers sponsoring an ETF to actually bring crypto to the masses. And so I think you have to look at it through both lenses. On one hand, there are people that are just looking at price. On the other hand, I think there are asset managers that are very bullish here, and that's a pretty big indication of, I think, where we're going.
Do you think the approvals are going to come in January? And do you think at that point they're actually, because we've seen all of this rallying in anticipation, that there actually could be a pullback at that point?
Yeah, so I do think they're going to come in January, just based on kind of following the path of what's happened over the past couple of months here. In terms of the price action, you think about, there's a multiplier effect on capital. And so what's happening right now is the enthusiasm's there, people are getting a little bit ahead of the ETFs, but the ETFs, you think about $20 trillion of just the asset managers that are sponsoring the ETFs today. A very small fraction of capital of those asset managers, you think about, an asset allocation strategy for, private client, for example, that could be tens of billions of dollars. And I've seen, a lot of estimates, and $10 billion could mean hundreds of billions, if not trillions of dollars of market cap expansion. So that multiplier effect's important. Short term, yes, there could be some volatility, sell the news around that, but I think the long-term direction here is probably continue to move higher.
Bitcoin surging past $42,000. This coming amid news that the SEC may approve a spot Bitcoin ETF in early January. Yahoo Finance's very own Brian Sonnenshein spoke to Robinhood CEO Vlad Tenev about that ETF optimism. Here's what he had to say.
There's more optimism around an ETF being approved. There is bad actors like Binance. You're kind of continuing to see them being weeded out. And then I think there's also more talk about inflation, right? As inflation becomes a little bit more broadly understood, people are starting to look to long-term inflation hedges. And that's been a thesis behind crypto and Bitcoin in particular for quite some time. And there has been some pessimism because in certain times it tends to follow the broader NASDAQ and hasn't been super effective as an inflation hedge in those times. But at other times it decouples. So I think there's probably multiple factors driving it.
After a busy few years where some high-profile crypto lenders have come and gone, Nexo could be considered one of the last biggest players standing. Formed in 2017, it specializes in crypto lending, a segment of the market that's seen at least three major firms, Voyager Digital, Celsius Network, and BlockFi, all filed for bankruptcy protection, leaving thousands of customers as creditors in ongoing Chapter 11 proceedings. For more on the crypto sector, let's get to Anthony Trencha of Nexo, co-founder. Anthony, good to talk to you today. You certainly haven't been immune from the shakedown that has played out within the crypto sector. You had to take down a $45 million fine from the SEC. As you think about where crypto is today compared to pre-FTX collapse, pre what happened with Binance, how's that change your strategy? How's that change your thinking about how Nexo moves forward?
Well, we have been very focused on building out the infrastructure. This is the great thing about bear markets, that you can refine your product, your infrastructure, whether this means technology or the legal aspects, licensing and underpinning what underpins the enterprise. That's what have been very focused on these past few years, and increasingly so after the FTX collapse. Right now, I think we are in a sort of a situation where we have mixed signals. On the one side, we have all the positive things that have happened in the space, the settlement that Binance has, the Bitcoin spot ETF that appears to be around the corner, and I'm certainly in the camp of believers. And then, we have some messages from the Treasury, from the SEC that they continue to be quite aggressive on crypto, and we have to see how it plays out. But ultimately, I'm very optimistic here.
And actually, we have to talk about this rally that we've seen. How much of that is just about this hype around the spot Bitcoin ETF being approved versus looking further ahead to the Bitcoin halving event in 2024?
Well, I think it's both. I think Bitcoin is sound fundamentally in the sense that we saw a deleveraging after the FTX collapse. We saw a shakeout of the weak hands, and Bitcoin has been transferred to stronger diamond hands, which now will hold on forever. That on the one side. And then just like structurally from a market perspective, we have everybody write Bitcoin off. It was like shows like yours, but stop talking about Bitcoin for a few months. And, this also tells you a little bit about sentiment and Bitcoin halving, this pre-programmed disinflationary mechanism that Bitcoin has inbuilt in its code. I think it strikes a right note in this inflationary times. And, I think this garnered with the Bitcoin spot ETF frenzy is what is ultimately going to propel us from here. If we can hold the 42 level, which is very important, up to 50 in the short term, then there might be some correction and some profit taking and sell the news type of event. But then until the end of the year, I definitely could see it go up to 100K at the end of 2024.
100,000 by the end of the year. What's the catalyst?
Well, the catalyst would be the Bitcoin halving. This is certainly what we saw in 2022 when it occurred around the mid of May. Some caution here for you viewers who are about to, go in all long in crypto with the funds from the college the college tuitions for their children. Before that, we saw an intraday tank of 50% just prior to the halving, just a few months before that in 2022. So crypto is not a one-way street, but I do see the Bitcoin ETF as an institutional draw, as a draw of institutional money, and then the halving will be a huge event. And then if and when the Fed pivots from its very aggressive hiking cycle and it plateaus out or even starts cutting rates, this will be the ultimate impetus for all risk-on assets, of which Bitcoin is the par excellence.
So Anthony, when people are looking at Bitcoin, if it does potentially get to 100,000, will it lift all boats? When you look at some of the nuances in other tokens and cryptos, especially when you look at Ethereum, Solana, some of these others, will it lift all boats, or is Bitcoin really its own separate story here?
Well, listen, I'm personally long both Bitcoin and Ethereum. I have been surprised by Ethereum's underperformance this past few months. I think with the move from proof of work to proof of staking and the options for genuine yield generation in a economically sustainable way should have drawn more people into the space. I think the frenzy has really, like the last month or so, has been around the Bitcoin spot ETF, so that's why Bitcoin took the lead here. But I do think that in an environment where Bitcoin rallies all the way up to 100K, it will be the tide that lifts all boats, and we will see an altcoin season rally ultimately at some point in 2024.
Okay, 100,000 by year end. Anthony, we're going to hold you to your call. I'll have you back on the show. Anthony Trechev, Nexo co-founder. Appreciate the time today.
We've also got to talk a little BlackRock on the morning, receiving $100,000 as seed capital for its proposed Bitcoin ETF. That was disclosed in an application to the SEC this week. The investor bought $4,000 at $25 a share in October of this year. This comes about a month before analysts anticipate either one or more spot ETFs will get approval from regulators. For more on this, let's bring in Yahoo Finance reporter Jared Blickry. He's here at the desk.
Brad, don't let me get too comfortable. This is nice.
Yes.
And I do have the Wi-Fi Interactive here right in front of me, of course, but I'm looking at the list of companies. You mentioned BlackRock. You look at the list of companies on the Wi-Fi Interactive that currently have spot Bitcoin ETFs just waiting for approval. Here's BlackRock. Here's Grayscale, a word on them in a second, Fidelity, Van Eck, Franklin Templeton, Bitwise, all of these guys jockeying to be the first, but it's probably going to be all of them at once, except maybe Grayscale. Now, Grayscale is the entity that manages GBTC. That's a Grayscale Bitcoin Investment Trust, one of the few in the world, only available to private subscribers. It's a closed-end fund. They've wanted to convert it to an ETF so they can get retail investors, and they were the ones who followed the lawsuit, and they won with respect to the SEC. They beat the SEC, but it's not clear yet if they're going to be among these first movers. But as far as the date, we're looking at January 5th to January 10th. There are two different offices within the SEC that have to clear this. Two different congressional laws at work. You have the 1934 Securities and Exchange Act, and you also have the 1933 Securities Act. And paperwork was just filed by BlackRock, and that information you were talking about, the seed investor, who's investing in this ETF that hasn't been launched yet? Well, a seed investor. This is how you start the process. And so we kind of knew that already. It already leaked out, but this is confirmation and just another incremental step, more incremental knowledge that this is going to happen and happen soon, early January.
Jared, how much of this do you think is already baked in just in terms of the excitement? And I say that with the price of Bitcoin because it has been astonishing to see the rise in the price of Bitcoin going back to the start of the year. Even within the last month, it's up another 20%. If we do see this approval, how big of a catalyst do you think?
Well, you know, the old adage on Wall Street is buy the rumor, sell the news. I hope not, because I'm looking at the Wi-Fi Interactive. Bitcoin is the crypto in general. It's the #1 asset class of the year. I mean, forget the Magnificent Seven. Bitcoin up 152%. Let's take a look at this chart. In anticipation of all of this, arguably, this got started down here. I mean, we've been hearing about this for months, but the anticipation really led to this latest launch up. We had Bitcoin stuck at about 30,000. So I think a lot of this news is already baked in, but I think the momentum is there to keep Bitcoin alive. I think the winter is done. I don't think we're ever going to see 20,000 again. You can quote me on that. And I think it's off to the races.
You know, it's interesting because we also got some commentary from Robin CEO Vlad Tenev on the state of Bitcoin as well.
Yeah, let's take a listen because Brian Sonnenshein was able to interview him yesterday, and let's take a listen.
I think crypto activity, you're seeing kind of a groundswell. What tends to happen is we've seen in the past as the price of Bitcoin approaches all-time highs, the media coverage and intensity increases. And I think that plays a role as well. If people are just hearing more about crypto around them, they tend to become more interested, and you start to see that reflected in trading activity, at least in the past.
Yeah, I think we're not anywhere near all-time highs, so we don't have to worry about the sell the news event top-ticking Bitcoin. We've already been through that, and arguably the Coinbase IPO years ago top-ticked the current all-time high in Bitcoin. Nevertheless, it looks like there's still a lot of excitement. Is it going to be a sell the news? Are we going to see a little bit of a pullback, or maybe just a pullback in time? We'll have to see.
And then the Bitcoin halving expected in 2024 as well.
Yes,
that's the next major catalyst.
Yeah, the April-May time period that has always historically, and it only happens, every couple of years. Yeah. The last one, we saw a huge run-up in price. That was also funded by the stimulus payments. I mean, this doesn't happen in a vacuum. You have to consider what's happening in the economy, what's happening in people's trading accounts. But I think a lot of the damage from the bear market that we had last year is kind of in the rearview mirror. Investors are still shell-shocked a little bit. It was very painful in the bond market, but crypto people, I would close by saying this. The laser eyes, that's what I'm thinking. The laser eyes, you know, the thoughts of Bitcoin 1 million and all these Cathie Wood dreams. I think we're going to see 500,000 someday, but it's going to take a while to get there. And this is just the beginning of this asset class really becoming. I think this next crypto bull run is the one that establishes it within Wall Street. That's when we see the major brokerages like Fidelity start getting into their accounts. So this is when crypto becomes big time right now.
And there always seems to be, they're diehard fans, and there always seems to be this optimism for higher highs. So we will see. All right, Jared, thanks. Let's get to another trender today, and that is Bitcoin climbing even higher, jumping well above 41,000, briefly climbing as high as 42,000. You can see it trading in between that range now. So investors speculating the likelihood of a spot ETF and betting big on the end of rate hikes, potentially. We're always trying to figure out what exactly is moving Bitcoin here. Let's get over to Yahoo Finance's Jared Blicker, staying by at the touchscreen for a closer look at some of the moves that we're seeing, Jared.
Bitcoin rallying over the weekend. I'm getting 2021 vibes, but let's take a look at the price here because Bitcoin was up for no particular reason over the weekend, up 10% over the last 5 days. This goes back to the close last Thursday, and I'm tired of hearing about that Bitcoin ETF, the spot one anyway. It's going to happen. That might be a sell the news event, at least temporarily. But in the meantime, investors can really celebrate the higher prices. This is a 5-year chart. This shows the record highs here. One of the things that Brian Sonnenshein was noticing earlier today in our staff memo is that the volumes just have not matched what we've seen before. In fact, if you were to look at the volumes not shown here, we are basically at where we were in early 2020 before the pandemic. Why is this perhaps not as important as you might think? There was a lot of fraudulent volume in here, and so I think those levels were very elevated. There was a lot of washing of tokens between stable coins and whatnot. FTX went south. Lots happened in here. So I think it's going to take a new normal. We're going to have to find a new baseline to figure out what that volume is. Want to show you the technicals in Ethereum, and then we'll get to gold real quick. Let me show you a year-to-date chart. You can see we had this big consolidation area, and then we just broke to the upside. So just based on the length of this consolidation, I would say we have a ways to go in Ethereum. And now we got to talk about the futures industry because we got gold. These are prices over the last month. Gold is only up 3.7%, but it's getting headlines today because it is at a record, at least in terms of US dollars. It's been at other records before. This is what's happened this year, and we really got started in the middle of October. That's when this move got started. Guess what? That's when Bitcoin started to break into the upside too. And is there any underlying reason? Well, I'm going to point us to the 10-year Treasury note yield. Guess what started peaking and then going south in mid-October? That was the 10-year T-note. So all of this has been facilitated by yields. I'm going to have a more in-depth discussion about how this affected stocks and the sector action with Maddie Mills in a few minutes, so stay tuned for the morning bell. But in the meantime, the bond market has definitely been wagging the tail, which is, or the tail has been wagging the dog, which is the rest of the market. Don't concentrate on that metaphor too closely. Your head might spin, but I think you get my point.
Also here, we're watching Bitcoin today, passing $38,000 in that mark, psychological level as it may be. We will see. Investors are keeping, though, a continued rally, eyeing a continued rally to push the asset over 40,000. That's definitely a psychological level. We've got our own Jared Blickery tracking its moves this morning. Jared, good to see you. What's the potential here for more growth for crypto, especially with those potential ETFs in focus?
Well, I think the potential here is that we're all going to be potentially wearing our Bitcoin 40,000 hats. Dust those off. We had those on a few years ago, got all the way up to about 68, 69,000. But I want to focus on what's happened over the last month, then we can get to what's happening in December. Bitcoin up 8%, Ethereum up 12.5%. Let me show you, because we had this monster rally in risk over the last 30 days. ARK was actually up 31%, meme stocks, that ETF 20%, Bitcoin all the way down here, 8%. So not even breaking a sweat, I would say. And let's get back to some of the charts. Bitcoin is interesting right here, and then I'm going to show you what's really interesting in Ethereum. So here's Bitcoin. We got that big, potentially God candle-like status that some people are saying, are attributing to it. And then we have this flag that is actually pointing upwards. Usually when you have a little bit of a consolidation, it points downward, but this is there's a lot of buying pressure here. And let's take a look at Ethereum. This is at an important high here. We had this high over in April, and now we are flagging and looking like we want to push above that. Given the consolidation, this could easily hit 2,500. That's Ethereum pretty quickly. And let's take a look at what has happened in crypto stocks over the last month. Coinbase, you can see that's up about 61%. Block up 57% with admittedly a little bit less crypto exposure, backed up 50%, and the list goes on. Marathon Digital, that's another one investors track, that's up about 35%. But just thinking about the leaders this year, I said that Bitcoin is in the lower end of the pack, but when you look at the year-to-date totals, guess what? Bitcoin up 130%, New York FANG, which is a good proxy for the Magnificent Seven, that's up 85%, and then you go down the list. So really interesting to think that at the beginning of this year, with FTX in the rearview mirror and all the chaos, who would have thought that Bitcoin would have been the leading asset class?
Not I, but you can never really count out Bitcoin, and you never really know how the heck it's going to trade or why it's trading the way it is. So we will see whether or not this momentum continues. All right, Jared, thanks so much. Bitcoin looking for direction this morning as investors' anticipation over an eventual U.S. spot Bitcoin ETF has pushed the cryptocurrency higher in the last 3 months. The question now, though, is whether this rally has staying power into the new year. Jared Blickery joining us with maybe a closer look at some of those technicals and the momentum that we've seen. Jared, what do you think?
Well, I'm looking at inflows into Bitcoin, and this chart goes back to the beginning of the year, and we are on the 9th straight week of inflows into Bitcoin, approaching about $300 million. This is the highest week of the year. And just looking, we can see a lot of activity over the last 5 weeks. Why? Whatever happened 5 weeks ago? We got a huge breakout in price. And let's go to the Bitcoin chart, and let's do a year to date, and we can plot this. You can see we really got going in about mid-October here, and you can even see that better with the candlesticks. We got that huge break above 30,000 and then 35,000, huge sticking points. And the reason those were sticking points is because there's a lot of price memory. Let me change this back to a line chart, and you can see we are now firmly in the bottom area of all this price history that we had in 2021. Lots of things sorted out in there. Suffice to say, it's going to take a lot to get through there. Is it going to happen slowly, quickly? Depends on the catalyst, but the regulatory environment finally seems to be getting a little bit more habitable for crypto players. Looks like Binance is probably going to skate with a $4 billion fine. But the industry itself is going to survive, and they've taken their lumps over the last couple years. For the industry to bounce back now, I'd say yes, the worst is definitely in the past, and there's a lot of smooth sailing ahead, but exactly how that plays out, it's hard to see. I think the spot Bitcoin ETF, that's probably priced in, but you never know. There could be another burst of enthusiasm around that.
Bitcoin prices are falling this morning. The cryptocurrency briefly touched an 18-month high last week, bouncing back from a sell-off after the CEO of crypto exchange Binance pled guilty to money laundering charges. Our next guest says even with the negative Binance news, it's, quote, inevitable the cryptocurrency will rally above $40,000 by year end. Joining us now is Marcus Thielen, DeFiResearch.com head of research and author of Crypto Titans. Thank you for joining us this morning. So give us some context here, because we do tend to see Bitcoin rallying at year end. How much of that then is tied to perhaps Bitcoin shrugging off some of these Binance concerns versus sort of this seasonality?
Yeah, thanks for having me. I think the market took the Binance news, quite well. I think the market has been waiting for this news for, at least a year, we can argue. And I think the rumor was that Binance would have to pay, $10 billion. We heard some other news that, they tried to negotiate for $8 billion and $6 billion, and finally they settled with the DOJ, for $4 billion. And of course, $4 billion sounds a lot better than $10 billion. So I think the market took it for that reason as pretty good news.
So is this finally removing that overhang? I mean, you heard Brian Armstrong from Coinbase say that the industry can finally turn the page as a result of what's played out with Binance, among many other issues. Is it as simple as that?
Well, it's not as simple as that, because we still have the SEC outstanding with kind of 13 potential penalties. So the SEC was not part of this deal. That's certainly like an overhang, but nevertheless, I think the industry looks through it, and the industry has gone through various crypto exchanges, really from from Mt. Gox to Bitfinex to BitMEX to FTX and so on. So it's not going to be a big headwind. I think really the tailwind that we're going through, as we mentioned this briefly earlier, is December tends to be a positive month. So average returns for December tend to be plus 12%. Q1 seems to be a little bit more struggling. But of course, we're having these macro tailwinds of when the Fed stops or pauses interest rate hikes, that Bitcoin tends to rally. We have seen this in January to July 2019, after we had successive rate hikes in 2018, and then Bitcoin rallied over 6-7 months by like 300%. Of course, we're not projecting a 300% rally, but nevertheless, when the Fed pauses after an extensive rate hiking cycle, Bitcoin tends to rally. And of course, the other comparison here is also when the CME future were announced that they're going to be launched in, they're launched in December 2017. but we got the green light on October 31st. So during this kind of 2 months window, Bitcoin prices rallied 182%. So from the moment the SEC might approve a US Bitcoin ETF based on the spot Bitcoin, we might actually see an extensive rally then, and that's what makes us quite bullish into next year.
Now, Marcus, this isn't the first time that we've been waiting for this, a big catalyst for Bitcoin. And as you talk about the spot Bitcoin ETF, other countries that have launched it didn't see a massive rally. Why will this time be different?
Well, the US is, of course, the largest pool of capital. And of course, ETFs are only really established in the US. We have seen this a long time, in Asia, how Asia tried to establish ETFs, but people don't really use them. And I think this is because the investor base is very different for the US market than anywhere else. And the US is really dominated by a lot of institutions, and those institutions are using ETFs really in their asset allocation. Of course, we have the registered investment advisor community, and estimates vary from, they manage 5 trillion to even more. But if they move like 1% of those 5 trillion, that's like 50 billion into Bitcoin, right? And I think that could have like a big impact, because we sort of can calculate if the market cap changes, what might be the implications for the price of Bitcoin. And what has really changed is really that we have, certain judges telling the SEC around the Grayscale lawsuit to go back and reevaluate their estimates. We're having BlackRock as the largest asset manager in the world, also filing for a Bitcoin ETF. So I think the pressure is really building. And then there is an overall sentiment that the market had that the US regulatory regime is trying to clean up the market. So and the last missing piece in this puzzle was, for example, to sort of like eliminate an exchange from the US market that has been known and admitted to had illicit trading going on.
Marcus, you said even if one of these spot Bitcoin ETFs move, that could have a big impact. We're looking at Bitcoin roughly at $37,000 right now. What does that move look like? How much higher can it go?
Yeah, I think we have heard a false rumor that proved not true, where Bitcoin rallied 10%, literally in a heartbeat. So we would estimate if a spot Bitcoin ETF would be approved, Bitcoin could go up easily 20%. And I think, to put it in numbers, there's around $120 billion in precious metals ETFs in the US. So that means in gold and in silver. And if you just move, 10-20% of those, shift them over into Bitcoin, you have certainly sort of something around in the range of like $25 billion of inflow. And we calculated this might have actually an impact of every $1 billion, a 4% impact on the price. So we might actually see kind of a price towards kind of 57,000. We calculated. We can see if there's an approval for the Bitcoin ETF.
57,000. In the medium term?
In the medium term, yes. I mean, it sounds reasonable, right? When you look at, we were just at 25,000, like 2 months ago, and now we're at 37,000. So this is just literally like, sort of like 12,000 rally that we had. So another 12,000 point rally, it gets us already like to the 50,000 point area. So I think this can easily happen. And again, as I said, if you put in kind of the macro tailwinds of the Fed pausing, if you compare to the 2017 episode when the CME announced the Bitcoin futures, I think there is just a lot of tailwind, and I think there's a lot of pent-up demand. And don't forget, we have all these ETF providers. They're of course doing a lot of marketing. There are a lot of educational, and Larry Fink, as the CEO from BlackRock, is almost every other day on TV and saying how important a Bitcoin ETF is. So I think there is a coordinated marketing effort now to really bring prices higher.
And Marcus, just quickly, I want to talk about the domino effect of the repricing of bond yields, because you're saying that in particular, second-tier tech stocks that correlate with second-tier altcoins and crypto should see a benefit there. What are some of the top picks in that space?
Well, of course, people comparing right now, the second-tier altcoins, let's say the Solanas of the world, might be kind of the Ethereum of this cycle. So I think we're seeing it a lot that the revenues are actually increasing, and there was a big shift since literally a month ago. And a month ago, what really happened? It's becoming inevitable that we're going to get this ETF now. And I think once we had this false rumor, we had like some other issues as well. We had about Ripple lawsuits for the executives were like thrown out. out of the lawsuit that they had. So in the end, I think there is just like a lot of second order effects, because tech stocks and crypto are long duration assets, and if we see lower interest rates, lower bond yields, this is what benefits both. And I think we can look back kind of the last 3-4 years where we had the rally up and of course a crash down when we had the move in the bond yields. And I think based on our calculations, we're going to see a lot lower inflation next year. Our model from last year indicated we're going to be around 3% by now, and we sort of are at 3%. And actually for next year, we're predicting 1.6%. And this is based on the model we have been using, for a long time. So we are really bullish here right now. And I think, this is really just a summary of all these calls that we had for this year.
Marcus, you're giving a lot of hope to people who hung on to their crypto assets through the crash. Marcus Thielen, DeFiResearch.com, head of research. Good to talk to you today.
Bitcoin jumping today, as Destiny's Child would say, hovering just under $38,000 on this quiet holiday weekend. We have Jared Blickery here with the latest crypto news and perhaps his favorite Destiny's Child song as well. Hey, Jared.
Hey, Brad. I'll skip the musical puns for now. If we have any time on the back end, I'm happy to cycle through them. Talking about Bitcoin, had a chance to just take a quick look at the price in the previous hour. As you said, right around 38,000. Now, these are the prior highs from 2021, still well off of those, but I like this longer term chart because it shows where all of this overhead price action has been. This just adds as a natural resistance layer. Nevertheless, Bitcoin has started to power through it. And so far, we haven't seen too many signs of net selling activity really rip into the trend. And the trend here, as I've been saying this year, is definitely to the upside. Also, there's been some circulation, some news about Cathie Wood selling some Bitcoin in one of her ETFs. And this would be the ARK Internet, the next generation Internet ETF. And I just wanted to show, this is a chart that goes all the way back to the late 2014. This is how much ARKW, that is that next generation Internet ETF. That is a position in GBTC. That's a Bitcoin proxy in the stock world. This blue line right here is a position value. And you can see currently well off of this high right here, north of 2.5 million, or actually north of $100 million. But it has been trending up, and that is since the beginning of 2023. Meanwhile, she has been selling into that. That has to do with the price rising. And as the price has been rising, I believe that the fund has been taking in a little bit too much ARKW, or at least it's been taking up too much of a position size. So as Cathie Wood has done in the past, she has sold some of that, trying to keep that position size under 10%. And I thought it'd be interesting just to take a look at some of Cathie Wood's funds and how they've done, because recently they have really picked up. And this is what's happening today, ARKG in the forefront, but I want to show you what's happened over the last month. ARK Innovation, that's RK, that's up 21%. That is the number one performer here. Then we got the FinTech ETF up almost 19%. ARKW, that was the one we were just taking a look at, the Internet ETF that has GBTC in it. These have really come to life. And I just wanted to show, if you take a look at how far off of these are, how far off these funds are from their highs, you can see ARKW is the least worst off. While if you take a look at how much they've rallied off of their lows, ARKW has been the most profitable here, even dwarfing the incredible run that RK and ARKF had. So bottom line here, it looks like Cathie Wood's finally benefiting from this price rise that we've seen in Bitcoin, and just kind of making sure that her long-term estimates for Bitcoin are just kind of in the public consciousness. They've always been up there. I think that's what I'm dancing around right here, but are they far-fetched? Hard to say. We'll have to check back in a couple of years.
Yes, Destiny's Child would say, I'm a survivor.
Thank
Jared
you.
Blickery, thanks so much. Appreciate it.
One of the assets that perhaps surprisingly was not rising today was Bitcoin, even though it has rallied as of late, today falling by some 3.4%. It is on this day that Cathie Wood announced, ARK Invest announced in cooperation with 21 Shares, it's going to be launching a new suite of digital asset ETFs. They will be actively managed. And I had the chance to talk to her about digital assets broadly, about these products specifically, and of course about her still bullish stance on cryptocurrency.
This is the first global, digital, private, rules-based monetary system in history. It's a very big idea. When we wrote the paper in collaboration with Art Laffer, you know Art Laffer, Supply Side Economics, Laffer Curve, he said, I've been waiting for this since they closed the gold window in 1971. So he's been waiting 50 years for this, right? And he's so excited about everything crypto, but especially Bitcoin, because he believes, and it is true, monetary policy around the world is unhinged. It's not hinged to anything except human decision making. And this is going to put discipline, rigor, back into
these particular products you're talking
about.
Well,
Bitcoin is, the monetary system is Bitcoin. And so, yes, why now for these? We've been working with 21 shares since I met Ophelia at an ETF confab in 2018. They had really just started their business. And I said, you know, we want to move towards crypto. You are completely crypto. They were focused on the infrastructure, the regulations, really blazing a trail. They had to invent things in order to make this happen. And we knew that was not our core competency. And so but we did start talking. Our core competency is research on disruptive innovation. They do research, they do deep technical research on the market. Our research is on the disruptive innovation that it represents. And we've just been coming together for 5 years. It was a natural for us to come together. They are, or 21 Shares is the largest crypto ETP provider in the world, $1.5 billion. They have 35 different funds, most of them in Europe, in and around Europe. They were looking for a US entree, and we were looking for infrastructure, and you know, we're just delighted to be partnering with them, given how much groundwork they had to lay for this to happen.
Speaking of groundwork, on another product that you're working on, of course, the spot Bitcoin ETF, which you are also partnering with them on, and you've got your filing in. There's a lot of filings in. Every day, seemingly, there is a new rumor about approval of one of these things. What are you hearing from the SEC at this point? You know, there's a January deadline I know that people have been looking to. How confident are you that you're going to get approval?
Well, something has changed. So we had put in a number of times a filing, and we were just denied. Never got any questions, really never got any response. This time, this summer, we got questions back from the SEC. Now, normally when you get questions from the SEC, you're just saying, oh my goodness. We were thrilled to get questions back because it means they're engaged now. Now, we have met a number of the research people at the SEC on the research side, and they are extremely sophisticated. They know what they're talking about, and the level of sophistication of their questions suggested, okay, now they're moving deeply into this. And we answered those questions. We have not heard back. That's a good sign too. They never tell you that you've satisfied them, but if you don't hear from them, that usually means that you have satisfied the answers to the requests. So that was new, and we also know that BlackRock got questions. We put our answers in first. I think they have followed, and I'm not sure about anyone else. That was different, and it says, okay, there's movement, and we are the first in line, just because we kept refiling. Others gave up, and so, but we just kept refiling. We just kept, and we became first in line. So David against Goliath, right? And that's January 10th is the final deadline. They've been able to push it. It's very orchestrated. Push it, but the final, they either approve or deny on January 10th. And
what do you think?
Well, again, I mentioned something has changed.
Right.
That's good. The odds have gone up. There is only one wrinkle, just occurred to us in the last couple of days. They will approve a number at once. It won't be just one. That would be choosing a winner, given the way ETFs work. But we know Grayscale wants to convert to an ETF. I don't know how practical that is, or if the SEC will let them, or if they need a special dispensation. I just don't know the rules. Grayscale has said it will sue the SEC again if it denies the conversion. If they were to do that before January 10th, I don't know if that would throw everything up in the air again. I just
for
don't
the
know.
others as well.
For everyone.
Right.
Yeah, I just don't know. I don't know.
So there's still a lot of unknowns out there. You mentioned you guys bought into Bitcoin at 250 way back when. So the return from 250 to 35, 36 looks pretty good. Yeah. But it's not 100,000 that I think you and I have talked about at various points, or even loftier numbers. Where are we in that cycle?
I think, so if we look at the reasons that Bitcoin will scale, so our base case is today $600,000 to $650,000, and our bull case, based on the scarcity that is now developing, we're at roughly 19.5 million Bitcoin out there. There will only be 21 million ever, and we do believe that. We think that institutions, if the SEC blesses a Bitcoin ETF, institutions will feel like the coast is clear for them to pursue. And we know a lot of institutions have been researching crypto assets for a while and do agree that it is a new asset class. Bitcoin was the first in a new asset class. We wrote a paper in 2000, I think it was 16, ringing the bell for a new asset class. And our director of digital assets said to me, "Do you realize that happened today? We rang the bell for a new asset class." I said, "Oh, I didn't make that connection." Anyway, so institutions understand when there is a new asset class, it's there's an opportunity to diversify and increase returns per unit of risk. That's very important. They've also learned that that Bitcoin in particular can be a hedge against both inflation and deflation.
Well, Bitcoin is climbing higher today, hitting its highest level that we've seen in about 18 months, sitting just shy of 37,000 on renewed hopes of a spot Bitcoin ETF approval. Yahoo Finance's Jared Blickery standing by on the floor of the New York Stock Exchange with the latest. Jared.
Yes, 37,000, really impressive. Let's go to the Wi-Fi Interactive and talk about this Grayscale Bitcoin, which is about to become an ETF. The SEC lost that court case, and there are a bunch of other spot ETFs, spot Bitcoin ETFs that are just waiting to come into the market from BlackRock and a bunch of different ETF providers. So lots of hype surrounding that. And if we take a look at the chart, you can see 37,500 and change here. We have really accelerated off of this base here. So not much was happening for a few months, and then suddenly we got what some people are calling a God candle. That would be right here. And now we're clearing resistance. 35,000 was a big number. Now we're up to 37,000. Let me just show you a 3-year chart so we can see where some of the price memory is. We're really in the thick of it right now at the lower end down here, but you can see tons of price memory all the way up to about 65, 70,000. So the short story is there's a long way to go, but if Bitcoin is emerging finally from this crypto winter, then there's lots of enthusiasm behind it, and perhaps it can clear a lot of these major hurdles. It was only yesterday I was talking about the FTX perhaps rising from the ashes. There are a number of potential suitors there, 3 of which are leading the negotiations, 1 of which is headed by Tom Farley, used to be the president of the New York Stock Exchange right here. But back to the Wi-Fi Interactive, let me just show you what's happened over the last 3 days so you can really appreciate some of the outsized move that we've seen from some of the smaller tokens. FTT token, that's up 75%. Let me show you a 1-year chart, and it kind of looks like a sinusoidal pattern here, periodic bouts of enthusiasm I guess not worried that it's going to go to zero, at least. We've seen this play out over the last year, but if I put a 3-year chart, you can really see the damage that was done to this token. It's basically down over 90% over the last 2 years. There you go, 96, 97%. All told here, it's looking good for the risk market. It's not just Bitcoin and crypto, which has been seeing a lot of love. Let me go to some of our leading markets. If we go over the last 3 days, actually, let me pull it up for the last 7. That's going to take us back to, I believe, last Wednesday's Fed announcement, which really started the risk engine juice. ARK Invest is up 17.6%, cannabis up 12%, gambling up 10%. So this is really all about risk on, and crypto is just kind of participating, although it admittedly does have its own fundamentals here, guys.
Well, Bitcoin hovering just over $34,000 this morning, just off of its recent highs. The volatility in the cryptocurrency is putting a dent in the exchanges that hold it. Coinbase saw trading volume sink in its third quarter amid volatile trading sessions for the cryptocurrency. Meanwhile, MicroStrategy had to write down more than $33 million in its most recent quarter thanks to the falling coin price since its November 2021 peak. Our next guest has remained a Bitcoin bull despite the fluctuating price and scandals in the crypto sector, like Sam Bankman-Fried's recent fraud conviction. Let's bring in Bill Miller IV, Miller Value Partners Portfolio Manager. Bill, good to talk to you today. Let me get your reaction, first of all, to the verdict that was handed down, what this ultimately means for crypto as a whole.
Well, I think it's really important that we differentiate between Bitcoin and crypto. So crypto was convicted yesterday on 7 counts of fraud. Lying to people about what you're doing with their money is wrong. The beauty of Bitcoin is that's not an issue. There is a very clear digital ledger maintained by computers and a very clear protocol out there that's visible for everyone to see. Bitcoin is very different from crypto. So crypto was convicted yesterday. Bitcoin is still going very, very strong. The network's as strong as it's ever been. You know, there's more users than there's ever been. So we continue to see very positive trends in Bitcoin, not so much in crypto.
What is the most positive trend? And do you believe that it's largely, especially with some of the price action that we've seen recently, that seems to have been driven not so much by what's taking place in trials, but more so by some of the ETFs that could be set for approval?
Yeah, I think the big picture trend is that Bitcoin is the best performing asset in 9 of the past 12 years. It goes up, it's been up 3 out of 4 years. People tend to focus on the very short-term fluctuations and the volatility. But the reality is there's a real demand globally for an uncensorable asset where the regulators can't change the rules and the measuring stick over time. So I think another thing that's driven Bitcoin's appreciation recently is the massive debts we're racking up in the U.S. Deficits are going up, debts are going up, and someone's going to have to pay for that ultimately, and it's going to come from money printing.
So what's the next lever for Bitcoin, you think? I mean, are we really going to get back to the highs that we saw in 2021?
I think next year, the halving, if you look at historical patterns, to the extent they hold again next year, the halving means a reduction in the marginal supply of Bitcoin. If the demand does not change and the marginal supply effectively gets cut in half next April, there's only one clearing mechanism for that. It's higher price. So, you know, there's all kinds of positive trends. The fact that fiat currencies have an almost perfect track record of failing over long periods of time. Bitcoin's much harder for people in the US to understand, given that we have a clear rule of law and very clear processes to expand the money supply. But the reality is, the money will be printed. Bitcoin's supply is very clearly laid out, and that's a huge benefit for Bitcoin holders.
Bitcoin's found some of its biggest success in crypto as a whole, some of its biggest success when FOMO is high. When there is lack of FOMO or lack of risk that people are willing to take on in their portfolios, you know, what should we make of how crypto is set to perform at that point in time? And then even further forward, if they say, okay, this is just too risky of an asset, regardless of what types of other assets are layered on top of one particular vehicle?
I think it's important to define risk. A lot of people equate risk and volatility. The reality is you can't have an asset that's gone up by as much as Bitcoin has over the past decade without volatility. And that goes both ways. And so that's hard for a lot of people to tolerate. But the reality is people that have tolerated it have done very, very well. And so I think that's an important thing to think about. And the way you frame it is interesting, because is it really Bitcoin that's volatile, or is it people's perception of this new technology relative to fiat currencies that are volatile? Fiat currencies are the real thing that's volatile. There's only 21 million Bitcoin that will ever be created. And so yes, there's a lot of FOMO and trading in and out, and people should be looking at the bigger trend, which is that things move much, much higher. Best performing asset over the past decade by a gajillion %. But people focus on the short-term fluctuations in the here and now because they have short time horizons. But people that have longer time horizons, again, I think will continue to do very well in Bitcoin.
Well, I guess I mentioned risk in that the biggest risk coming to this point had been whether or not there would be actual wide-scale critical mass adoption utilization, whether there would be governments that would take a more crackdown type of measure versus an acceptance measure. And in some parts of the world we have seen that, but here in the US it seems like we're taking steps towards there being a way forward for holding cryptocurrency assets, but then it still comes back to the, okay, does there need to be utilization? And you know, I kind of put that to you. Does that kind of quell some of the concerns around risk?
Ultimately, I think utilization for Bitcoin will occur. Maybe on another layer on the Lightning Network. But the reality is, if you think about the fundamental aspects of currency, right? Well, you actually want you want the rules to be clearly set. The problem with all of these other currencies is the rules change every single year. And that's why inflation occurs and people's purchasing power goes down unless they do something productive with those assets. The great news about Bitcoin is that its value is derived solely from the amount of people that understand the technology and believe in it and buy into it. And so, you know, we've seen a trend of that going up over time, over many years. The Fed has actually studied how much they think you could regulate Bitcoin. And what the conclusion they arrived at was it's very hard to regulate because it's simply a protocol on your phone. Now, of course, you have these centralized on-ramps like Coinbase and others. But the reality is, if people wanted to push the button, it'd be very hard to do. And if you look at the history of regulation around Bitcoin in other countries, every time countries try and regulate it, search history goes up, usage goes up. So it's very hard to censor.
All right, we're going to continue to watch BTC very closely here in the near term. We know you will be as well. Bill Miller IV, Miller Value Partners Portfolio Manager. Thanks for joining us this morning.
Thanks for having me. I appreciate it.
What do you think of the technicals in Bitcoin?
Well, it's spectacular. I mean, again, very commodity-like in that it just behaves beautifully technically. I mean, it took out 28, took out 30, stopping right into some resistance now as we get closer to 35. It looks to me that as long as we hold up over this 30,000 level, 45 to 60,000 is on the table. More importantly, it's now showing, regardless of all of the hype about it, it is showing a separation between what's going on in equities and what's going on in the cryptos. So store of value, mass adoption, you can name reasons, but the charts are good.
Yeah, I focus on the technical. I don't really need a reason here. All right, Coinbase, this is a stock that really got obliterated last year after topping out, I believe, with Bitcoin itself. What do you think of Coinbase? Time to maybe punt a little bit in the stock space?
Well, the range was 70 to 80 for a while. And then last week when the news got out about an ETF for a spot, Bitcoin, this thing went to 90, like really fast, and now came all the way back down closer to the 70 level. So it's the new widow maker in my mind.
More so natural gas.
Yeah, yeah, natural gas actually behaving. It's just consolidating, getting ready to explode. So I think that Coinbase will benefit, is waiting for more news. Obviously, it's a little bit of a departure from what's happening with the actual Bitcoin itself. But again, this can get through. I like these lines you drew here. We can get through all of this resistance. I think 114 is my first target, really.
All right. Well, we have to leave it there. Really appreciate you stopping by. As always, Mish Snyder. Guys.
Thanks so much for breaking that down. Great analysis there on the charts. All right.
Bitcoin extending gains, having its largest single-day jump in 13 months and exceeding 35,000 really for the first time since May of 2022, although it's come back down below that level. The move higher overall comes amid optimism for regulatory approval for a long-awaited Bitcoin spot ETF. Any of the many applications that are out there. Here with more on the enthusiasm in the crypto space right now and where it's headed is Swan Bitcoin CEO Cory Klippstein. Cory, thanks so much for being here. And, you know, we have been talking about sort of the dynamics at play here behind this latest move, and that, yes, there is some enthusiasm fundamentally, but maybe there's also some short covering. Can you talk to us about the dynamics at work here?
Yeah, there's definitely a bit of both. There were quite a few players that got caught offsides with, having sold calls or being short gamma and things like that. So I've been seeing a lot of the rumors and analysis around some of those dynamics at play. But this happens over and over and over again. And obviously the root cause is occasionally Bitcoin moves up, and sometimes it moves up rather violently on news or expectations of news. And when a lot of traders are caught off sides, that tends to fuel these very fast price movements.
And Cory, there's a lot of enthusiasm from crypto fans about the SEC possibly approving a spot Bitcoin ETF. Bottom line, Cory, do you think the SEC is going to greenlight a spot Bitcoin ETF? And if so, Cory, when do you think they make that decision? Is that this year? Is it early next year? What do you think the timeline could be?
I do think it's pretty much an inevitability that it's going to happen, and that there'll be a batch of them at about the same time, and then they'll compete it out to see who becomes kind of, who's the Bitcoin version of the queues for S&P, for instance. So that's what they'll be spending into, these big companies with their listings. As far as timing, I have been handicapping it as, basically Q1, but it does seem like there is a smaller chance, obviously, of it happening sooner. I would place my bets on Q1, though.
And Cory, what effect, if and when these ETFs are approved? It's not as just that it creates the product and people invest in it, but one would have to think that these big firms are going to be trying to push clients into these products. I mean, what kind of effect do you expect?
That's right. Yeah, the biggest effect of the ETFs is going to be that the top of funnel for the investor class is going to change from something that is contra Bitcoin, which is all of the, the crypto scams and pump and dumps of the last 6 years, FTX and the like, and all these wannabe altcoins. That's generally what has gotten people into Bitcoin, because they've been able to print their own money and sell it with marketing and all this VC funding. And then it takes people a year or two often to wade through all of that false marketing noise and find out what really is the signal in the space, which is Bitcoin and Bitcoin only. And now you're going to see a new era where some of the most credible, some of the most well-funded, some of the most trusted brands in the world are going to be shouting from the rooftops with tens and maybe hundreds of millions of dollars of marketing expense, just talking about Bitcoin, and putting all of the Bitcoin authors and podcasters and executives out there at conferences and encouraging them to go speak on to their companies and to the investing public. And that top of funnel is going to be talking about Bitcoin, and that's going to get people through the early stages of their customer journey much faster toward understanding what Bitcoin is and how different Bitcoin is from the world of quote unquote crypto.
Well, Cory, by the same token, I mean, the SBF trial is still going on. Do you think that there will be sort of a public overhang from not just that, but some of the other frauds that there have been over the past couple of years, and that it's going to take some time to overcome some of that institutional and individual reluctance, perhaps linked to those incidents?
Yeah, absolutely. I mean, they had a dramatically negative effect on Bitcoin in the last bull market because they siphoned demand away with false promises, and frankly, just by stealing demand with fake yields and fake pump and dumps that were all sort of just Sam's fraud, essentially, allegedly, but probably certainly. So, I think that we'll see a very different dynamic play out, and it'll be fascinating because there have been so many people, myself included, that would assume that the percentage rises, sort of bull cycle to bull cycle would continue to diminish. But if we truly were chopped at the knees with the last Bitcoin bull market, which it certainly seems like we were, a lot of demand truly was siphoned away by these scams, and most of them are gone, or at least the investing public understands much better after having it drummed into their head the difference between Bitcoin and crypto scams over the last couple of years. There's a very good chance that we see, a pretty different looking bull market the next time it really gets in swing for Bitcoin.
And Corey, I want to get you out here on this. We had Coinbase CEO Brian Armstrong on Yahoo Finance recently talking to us about the market. And one point Armstrong made was he really feels like the U.S. is falling behind the rest of the world when it comes to just the regulatory front. I was just wondering if you agree with that, Corey, and if you think that's changing anytime soon.
Yeah, I don't agree with that at all. I think basically Brian wants to have his cake and eat it too. And I've said this many times before, he wants to have only his little corner of the financial universe to be regulated differently while continuing to allow multi-level marketing scams and Ponzi schemes, not be allowed, and penny stock operations with false promises and direct mail to your grandma's nursing home and all these kinds of things that are not allowed. And he wants that light not to be shined on his little corner. These are companies that create software and then market essentially a company performance-linked token. It's nothing like Bitcoin. Everything from Ethereum on down, none of them are anything close to the way that Bitcoin operates as a truly decentralized network with a fair launch. These are just companies with kind of a new version of equity-linked trading instrument that sometimes has value of some sort that's linked to company revenue in some way, but usually doesn't. And so they're just kind of like these meme tokens that won't hold value in the long run. And so, yeah, I think they're being regulated according to the laws on the books, and they're fighting it out. And the grand plan of Andreessen Horowitz, Coinbase, and the Ethereum Foundation and Consensus and all these guys has been to try to achieve a degree of regulatory capture, whether it's pushing this over to the CFTC with promises of extra fees and budget for that agency instead of the SEC, or there are numerous plans to try to start a new agency, or, as has been the case for the last 6 to 12 months, writing legislation and handing it over to the legislative aides of some of the reps and the congressmen and the senators, and trying to get them to write legislation and be crypto mouthpieces, essentially. So I think they've kind of bought their way to having a voice in Congress now, and we'll see if they achieve their goal of, essentially not being regulated the same way as the rest of the financial industry. And then if they achieve that, we'll see what kind of knock-on effects that has for other areas with similarly shady practices in the rest of the financial industry, and whether they're able to follow suit and also get special favors.
All right, Corey. So I think the next time you come on, we got to pitch you against Brian Armstrong. I think that's a fight I want to see, Corey. Corey Clipston, thank you so much for that.
Yeah, we've been
insight.
battling it out for years on Twitter, and happy to do it live anytime.
Let's do it. Let's set it up. Thank you, Corey.
Optimism over an ETF launch sent investors piling into the coin. Now, the buzz began when senior Bloomberg intelligence analyst Eric Balchunas noted in a post on X that BlackRock's Bitcoin ETF has been listed by the Depository Trust and Clearing Corporation, or DTCC, with the ticker IBTC. Now, this follows a filing to the SEC last week that showed a seed capital investor planning to buy shares of BlackRock's Bitcoin ETF this month. But can investors sustain this optimism and this rally? Joining us now is Octavio Marenzi, Optimus CEO. Good to have you on the show here. So, not to take too much of the wind out of the sails of the optimism that we're seeing here, but give us a reality check as to how well-founded this optimism, at least for the token Bitcoin, is, just based on this news of the stronger potential of a spot Bitcoin ETF.
Well, it does feel like they're clasping at straws a bit in terms of pushing the price up. I mean, there are other Bitcoin ETFs out there. They're basically in the futures market as opposed to being in the spot market. But really, in terms of price exposure to Bitcoin, you can get that. And there have been ETFs out there for a few years now that have allowed retail investors to do that, and institutional investors as well, for that matter. They really haven't attracted that much attention. Some of them have around $1 billion in assets. Most of them have sort of in the tens of millions that haven't fared terribly well. So I think this idea that this new ETF, spot ETF, is going to draw a whole bunch of new investors into the Bitcoin market and drive up the prices, generate enough investment volume that's going to push up the price, I think are likely to be disappointed. It just is not that big a market for that kind of investor. Most of the people who want to get an exposure to Bitcoin are quite happy to do it directly and buy Bitcoin directly through an exchange or through a separate account to do that. So I think there might be a bit of disappointment. We might be getting a bit ahead of ourselves in terms of the boost that this is going to give to the market.
That's true. We heard similar sentiments from Nicholas Panicirtolu of JP Morgan saying any approval won't be transformational for the sector, citing the same examples as we've seen with Canada, with Brazil, other countries in Europe that have launched this, haven't seen these tremendous inflows. So then what's the driver here? Because it's the difference between getting exposure to Bitcoin's movements versus to the token itself. What is the institutional interest here then?
Well, I suppose it is the difference is really that it's BlackRock behind it. So it's the world's largest asset manager. They're pushing forward a new Bitcoin ETF, basically. And I think there's some sentiment that this is going to attract it and basically make Bitcoin investments sort of legitimate for institutional investors as well. And that's something we've really been waiting for years. I mean, there have been some hedge funds and some investors, institutional investors playing the space, but by and large, most sort of long-only funds, most of very large institutional investors have sat by the sidelines. And we're always sort of expecting them to jump in now. And maybe that's really what they're thinking, that not only is it people going to invest directly in this ETF, but rather what they're going to do is say, okay, now it's finally a legitimate investable asset class. I can do it. BlackRock's in there. Or pension funds and people like that can now come in larger numbers. And I think that's the expectation there. But we've seen this many, many times, this kind of false start many, many times over the course of the past few years, where we sort of think the institutional investor stampede is just around the corner, it's just over the horizon, and it's about to arrive. And I fear that's once again what we're seeing here, that there's a sense that now the institutional investors are going to come. Now that BlackRock has got this ETF up and running, we're going to see all these pension funds and institutional investors come in and storm the market and drive the price up. But I think that's led to disappointment a few times in a row now.
Indeed, and we know that crypto enthusiasts are always looking for that next catalyst that's going to drive it. So any bit of positive news, including the SEC's losing its lawsuit against Grayscale, adding to that momentum, but tempering expectations here. I also want to talk to you about what we've been seeing with the bond action as well, because back in the day, Bitcoin, people considered it some kind of safe haven, especially when there was a fluctuation with what was happening with interest rates. But in terms of the 10-year, do you think it's peaked, the yield on the 10-year?
I do not think it's peaked. I've heard a lot of people say this. We've hit 5%, and that's somehow a magical level, and it can't rise beyond 5%. It's too awful to even contemplate beyond a 5% return on the 10-year. And therefore, you should start to pile in. You should start to pile into 10 years, 20-year, 30-year treasuries and get some real exposure to interest rates because they're going to come down. And bear in mind, of course, as interest rates go down, the value of bonds go up. So if that's correct, that assumption, well, that should be a very, very good investment indeed. And the further out you are in terms of duration, if you can take it at the 30-year end of the yield curve, well, then fantastic. You have a big exposure to interest rates. If they do come down, and that hypothesis is correct, you stand to make quite a pretty penny there. But I fear they might be disappointed. It's not a trade that I'm rushing into making right now myself. I'm basically saying it looks to me like there still might be some upward momentum on the yield curve, on the interest rates, and the Fed might have its hand forced. Inflation is being much more stickier than we'd anticipated, I think, and it's going to look like it's going to carry on this. So the Fed might have to carry increasing interest rates before it starts to decline. And I did go back and look at some of these people who've been predicting that the Fed would now start to cut interest rates. Some of them have been saying this for well over a year, have been very, very disappointed with the returns that they've generated there. So I fear we're going to see more of the same. The interest rates are going to carry on basically percolating upwards, and that's going to put downward pressure on these bond prices. I can't say from my perspective right now it's a good trade, but it might fit into someone's portfolio depending on your position, but I would keep away from it for the time being.
So with that in mind then, you're saying that now is not the time to get into long-dated bonds. At what point would you think that would change? At what point, what signals would you be looking for?
Well, the signal, I think, more than anything, is going to be that inflation is under control and that the economy sort of seems to need some sort of stimulus and boost. And that is going to lead the Fed to start to cut interest rates again. And that's really what I'd be looking for. A situation where it looks like the Fed is about to embark on a sustained cutting of the interest rates. And that will then generate very, very good returns. But for the time being, I think the very short end of the Treasury of the yield curve is looking very good indeed. So you can get 5.5%. On the very short end, so the 1 to 6 month end of the yield curve, for basically taking no risk at all. And at that end of the yield curve, you have basically no exposure to interest rates. That if whether interest rates go up or down, it's not really going to affect your principal investment there. Unlike at the very long end, where it's very sensitive to changes in interest rates. So I think the short end of the yield curve is the place to be right now. Park your money there. You can get 5.5% there. In fact, the yield is higher than it is on the 30-year Treasury. So I think that looks like a really good investment. I can't remember a time when you could get basically 5.5% return for doing nothing and taking no risk. So I think that's a really nice place to be right now.
Confidence in Bitcoin's ETF approval is starting to grow, and that's one of the catalysts here, sending prices briefly above 30,000 this week. This comes after a judge ruled that the SEC had no basis to deny Grayscale's bid to turn its GBTC's Bitcoin fund into a spot ETF. Now, the regulator opting to not appeal that decision. The timeline on when the first Bitcoin ETF will get approved is still unclear, but investors are optimistic. For more on this, I want to bring in Sean Farrell, Fundstrat Global Advisors, head of digital asset strategy. It's great to see you here, Sean. Let's talk about the massive run-up that we've seen in Bitcoin. Lots of excitement about the SEC's decision here, the pending, or I should say the hope that we will get a spot Bitcoin ETF. What do you think of the rally that we've seen and what that upside potentially looks like for crypto?
Yeah, thanks for having me on. We've been pretty constructive recently, just given all of the both macro tailwinds and, this crypto-specific catalyst. I think what's been, we've seen gold rally, as, your analyst just pointed out. And a lot of people were a bit disheartened because, Bitcoin had not gotten that bid. We've seen a local top in the dollar, perhaps a local top in rates, and a bottoming in global liquidity conditions, which is what Bitcoin is normally most sensitive to. And I think the market was really just waiting for a conclusion to this SEC versus Grayscale saga. And once the SEC announced that they would not be pursuing an appeal, we saw a very compelling bid of the Grayscale trusts, crypto adjacent equities, and then we had Larry Fink come on. I forget what program he was on. Should have been on Yahoo Finance. He came on and he noted that the recent rally was due to an appetite for quality assets, and I think that's what we're seeing now. And I think the same reasons to be constructive on gold are the reasons to be constructive on Bitcoin.
Well, the validation makes it quality, right? If this appeal went forward, then there's still the question mark of whether or not there would have been that validation and then the annex of quality. But now, given the fact that you have a way forward for a Bitcoin ETF here to make an entry point into the markets here, we had actually discussed with Michael Sonnenshein, the Grayscale CEO, about what that crypto environment could look like after it looked like there was a clear pathway forward. And he said that they're expecting or anticipating an environment that we have not seen before after that legal win took place. What could that look like from your purview? And what type of inflows do you think it could trigger for Bitcoin and other crypto-related assets?
Yeah, look, I think that's a great question and a great point by Michael. Assets trade based on who is trading them, right? And so historically, we've seen Bitcoin pretty closely correlated to tech stocks at times also very correlated, like this year with gold. And a lot of that has to do with who is trading that asset. When there was, we had the post-COVID monetary stimulus, all of the, employees working from home and trading meme stocks. There was a lot of credit in the crypto ecosystem. And so what we saw is, this incredible fervor rally that was largely correlated with unprofitable tech. But now I think people are seeing the volatility in the sell-off in the bond market. They're seeing global calamity, a reducing of trust in in and between different central banks, and that's reflected in sovereign debt prices. And you have very well-reputed financial professionals who don't normally wade into crypto waters, saying that this digital bearer asset is a good alternative for those who don't want to assume a 30-year bond in even a developed country. So I think you're going to see a new cohort of investors really seek Bitcoin in times of both increase in global liquidity, to hedge against both asset and price inflation, and we'll also see it as this, as Larry puts it, a flight to quality.
Sean, what do you think is the realistic timeline that we're going to potentially see an approval?
Yeah, I think we'll definitely get it before. So ARC is the first final deadline in the series of Bitcoin spot ETF applications, and that final deadline is January 11th. And so in my book, that is the upper bound for where we'll see these ETFs come to market. But if I think in our discussions with clients, I think it'll happen before that time. And it's likely we'll see all of them get approved at once, because what happened with the futures ETF, back in 2021, they approved one application in ProShares, and they obviously won as first to market all of the flow, and so they kind of dubbed a winner. And so I think they want to avoid that now. They want to get all of the applications tidied up and just be able to approve them all at once. And so I think we'll see that definitely within the next few months.
Sean, we got some interesting comments this week from Michelle Bowman of the Fed, and ultimately talking about central bank digital currencies, talking more largely about crypto-related assets and what she would like to see. What do you believe that the Fed is going to do, at least in its kind of guidance or any type of advising that it gives around digital currencies, and how that could perhaps be the next hurdle for crypto to get past, especially as they're talking about what regulators and what Congress needs to do on the matter?
Yeah, well, not sure about the Fed. I do think they'll have some. I do not think that we are careening towards a CBDC like a lot of people think we are. I actually think that the Fed has put out some statements that are kind of open-minded towards stablecoins on public rails, which is the killer use case for crypto right now, and so that's encouraging. I think the real action has to happen in Congress, and we have a couple of very promising bills, one market structure bill, and a stablecoin bill that have some legs and could probably get through the House, but likely with the current administration would probably not pass the Senate. But if we were to see a situation in which either there was a vibe shift or some changes in the makeup of Congress, I think that would be the best thing from a regulatory perspective, and what has to happen, because right now the current regulation by enforcement clearly isn't working. It's exemplified in the SEC's court record right now, and we just need sound regulation so that we can have look after consumers and but make sure that we are promoting capital formation and innovation in the U.S.
All right, Sean, all eyes after this going to be on the halving next year. Sean Farrell, Fundstrat Global Advisors, Head of Digital Asset Strategy. We've already got our countdown clocks working for that halving. Appreciate it.
Thank you.
Bitcoin is now hovering around that $28,000 mark after briefly spiking above $30,000. That came on false reports that BlackRock's ETF had been approved by the SEC. But our next guest says this could provide a glimpse of an initial reaction should this one day become true. Devin Ryan, Citizens JMP Securities Director of Financial Technology Research, joins us now. Devin, that points to a really bullish case for crypto. How are you looking at the moves on what was a false report, but the excitement that could come with an official approval?
Hey, good morning, Akiko. I think that what we saw yesterday was kind of a little glimmer into a reaction that you might see, and probably over time the reaction would be much more significant, which I can talk about. Essentially what's happening here is the SEC lost its court case against Grayscale. They had until the end of Friday to appeal it. They didn't. And so I think the probability of a spot ETF approval has gone up pretty tremendously. And so, I think yesterday what was clearly, false news, but the reality is that the probability is quite high. And if there is an approval, which again, we think will likely happen over time, you're going to see potentially tens or hundreds of billions of dollars of capital come in over the long term. If you look at just the sponsors of these ETFs right now, it adds up to nearly $20 trillion of client assets that they are managing. And so therefore, just a small allocation could really move the needle.
So Devin, a lot of us have been watching this space, and from what we understand, if they were to approve a spot ETF, it should be perhaps a group of them that all get through at once versus sort of one, or it being piecemeal. Is that still the expectation here?
Well, I think, yes, the expectation is that one gets through, then it's kind of essentially check the boxes to be able to be approved. And so therefore, others will be approved, or others could make changes to essentially be approved. And so the expectation is that what is now kind of in the queue would get approved once the first one does. And so that's kind of this dynamic of unlocking significant capital that really has just not been participating in the space yet. If you think about the wealth management industry, where ETFs are really a tool that are utilized, I think people are much more comfortable with an ETF structure than potentially going out and buying digital assets individually. And so there's bigger implications than that, but that's essentially it at a high level.
What are the other key levers that you're looking at that could push Bitcoin, maybe not back to the record that we saw in 2021, but closer in that direction?
Yeah, it's hard to kind of speak exactly to price. Other people will do that. But what I can say is that adoption does tend to correlate with price. And so the last 2 years have been pretty challenging for adoption, both because of kind of the macro dynamics, but then also the regulatory dynamics in the US. And so to the extent there is an approval on a Bitcoin ETF, I think that is a big deal to essentially accelerate adoption into the industry. And then it's not just about Bitcoin. To the extent that occurs, we think it would broadly bring capital into other digital assets. And so more capital in the space drives more activity, drives more real world use cases, which is ultimately what I think this is all about for the industry. And so the price would likely follow the adoption curve, and an ETF, it's hard to deny that won't significantly impact adoption, particularly of Bitcoin first, but then other digital assets.
And in terms of companies that benefit here, we have to talk about Coinbase here. What is your base case for how this would impact them, given their involvement so broadly in some of these other spot ETFs?
Yeah, so they're financially involved with all but one of the current sponsors. And so there's obviously opportunity for revenues tied to the surveillance arrangements, but also transfer, custody, and other aspects of just being huge kind of on-ramp into the industry. That's kind of your obvious kind of first direct impact. The second derivative here is just industry volumes have been incredibly low, not because people have been selling the assets or moving away from the space. Again, firms like BlackRock and Fidelity and Invesco and Franklin are moving to the space. So it's moving more mainstream, but there's these uncertainties that are impacting volumes of movement of Bitcoin or volumes of movement of other digital assets. And so if there is an approval, we think volumes in the industry would go up tremendously, which Coinbase would be probably the biggest beneficiary of any of the firms that we follow. And so there's kind of those obvious effects, and then there's kind of the second derivatives of just more capital and acceptance coming into digital assets, which spot ETF could play a big role in.
Devin, let's talk about another company that you follow or cover, Goldman Sachs. We see shares there down just slightly on the back of these continued struggles we've seen in their core trade and advisory business. But you've got a price target of $440 a share. What do you think is going to get that stock there?
Yeah, so it's very simple. I think you just need a little bit of stability in the capital markets. So if you peel back the onion on results today, they were actually okay. The core banking and trading results were better than several peers. We wrote a report on this a few weeks ago, but over the last 5 years since David Solomon has been CEO, they've gained more market share in their sales and trading and investment banking businesses than any of their peers. And 2x JP Morgan, which is kind of the second kind of most significant market share gainer. And so they're doing fine in the businesses that they're in. The capital markets have just been aberrationally challenged over the last 18 months. We do think inevitably that will change. There's significant upside to M&A volume, significant upside to equity and debt issuance. And trading, they're gaining share and driving strategic priorities like growing financing. So they're doing the right things. The market needs to settle down. And then this quarter and last quarter did include some idiosyncratic noise that are transitory, and we really don't think are going to be big headwinds going forward. So they're doing fine. Their ROE, in our opinion, return on equity, can get back into the low to mid-teens. And if it does, then that's kind of how we justify this pretty significant increase from here to get to our price target.
And we'll certainly be keeping an eye on that price movement. Appreciate you joining us this morning, Devin Ryan, Citizens JMP Securities Director of Financial Technology Research. Thank you so much.
Thanks so much. Great seeing you guys.
Well, Bitcoin is among the big movers on Wall Street today. Crypto's been seeing wild swings as investors wait on a decision from the Securities and Exchange Commission to approve spot Bitcoin ETFs. There was a report early on in the day that the SEC had approved the iShares ETF. Bitcoin spiked on that news, but pared those gains after BlackRock said the fund was still under review. Joining us now, Matt Hogan, Bitwise Chief Investment Officer. He's got his hat in the ring as well with these offerings, and everybody's been waiting to see if approval was going to come, Matt. What are you guys hearing? Any kind of glimmer of news from the SEC, and what do you think is the holdout here?
Yeah, well, thanks for having me on. Of course, I can't speak to Bitwise's filing or any specific filing, but I do think the tea leaves are pointing toward a potential approval. We have major issuers like BlackRock coming into the market saying we're ready for a spot Bitcoin ETF. Firms like Bitwise, who have been doing this for years, have submitted additional research into the space. I think the time is right for a spot Bitcoin ETF. The SEC has previously been worried about market manipulation, about a lack of maturity in the market. But the Bitcoin market of today is not the Bitcoin market of a few years ago. It's an institutional market with institutional players and institutional custody. And we're ready for an ETF that will make it cheaper and safer for Americans to invest in this exciting asset class.
So Matt, when do you think, and I realize, listen, you're reading tea leaves here, but when do you think the SEC could approve that spot Bitcoin ETF, Matt? Are you thinking, by year end? And when they do, Matt, do you think the SEC should approve all the Bitcoin ETFs here at once?
Yeah, so the way this works is there's a calendar-based system for every ETF that is applied for. And the date I would circle on your calendar is January 10th. That's when the next ETF hits its final review date. The SEC has to say yes or no by that point. Towards the second part of your question, if we look at what happened in the Ethereum futures ETF space, where those ETFs just launched 2 weeks ago, what we saw was the SEC lined up multiple providers to launch at once. I suspect the most likely scenario is the SEC will want to do the same thing here, give everyone an equal starting place, increase competition. And so I would circle that January 10th date. I don't mean on that date. I mean sometime between now and that date, we will find out if we are finally going to get this ETF.
Matt, it's so fascinating to me the timing that all of this is sort of coming to a head, because it's the same time that Sam Bankman-Fried is on trial and that there's a lot of scrutiny about the sort of underbelly of crypto, if you will. It doesn't seem to have dampened the chatter and the enthusiasm around the new product offerings that are coming. Why do you think that is? There's sort of an interesting juxtaposition here.
It's a great point. And if you've been in this market for a number of years, Bitwise has been helping investors access crypto for almost 6 years. The reason it's having that unusual effect is we've seen this story before. When the SEC cracked down on illegal ICOs in 2018, that set the stage for the massive bull market we saw in 2019, 2020, and 2021. When we saw Silk Road shut down and the sort of Mt. Gox collapse, we cleared out that infrastructure mess. That set the stage for the huge rally we saw in 2015, 2016, and 2017. So long-term crypto investors have seen this story before. You deal with the excesses of the past, you wash those out of the system, and you build from a stronger foundation. That's what we're doing here, out with the FTX, in with the ETF, and in with the mainstream era of crypto. That's why we've been rallying all year. Bitcoin's the best performing asset class in the world this year, up almost 70%. And I think we're set up well for the next couple of years to come.
Matt, all due respect, gosh, I've heard that story before, right? I mean, even when it hasn't been accompanied by a big event, not you, but like people who love Bitcoin always love Bitcoin and say it's going to go up over the long term, no matter what is happening in the external world. And also, when you talk about the washout, I mean, the one surrounding FTX, who knows what's going on with Binance, we're talking about larger numbers here than we were in those past situations.
I think that's a reasonable thing, and I like that you flagged Binance. There are still some things to worry about in the crypto space, to be sure. There's Binance to worry about. There's, people have concerns about Tether. There's risk in the US regulatory ecosystem. So this is not a riskless investment. Bitcoin is extremely volatile. Crypto is extremely volatile as well. But it is worth noting that we have rallied almost from the day that FTX's news came out, as if people were waiting for the worst of the news to get out before we built a new base forward. So I'm not saying there's any guarantee that we continue to rally from here, but I'm saying that if you look at the balance of the pros and the cons, the likelihood of a spot Bitcoin ETF versus the likelihood of another one of these negative black swans, I feel a lot more confidence that we're moving into ETF land, moving into a mainstream era. So is it risk-free? Of course not. But is there significant opportunity and upside? Of course. And that means that investors should size their portfolio appropriately, not hold more Bitcoin than they can afford to lose. But it doesn't mean you should ignore this space, because a lot of institutions, a lot of financial advisors are coming into the market. And that leaves me pretty excited for the next 12 and 24 months.
And Matt, that actually leads me to my next question. If and when the SEC, Matt, approves these spot Bitcoin ETFs, where would you think the investor interest is really going to come from here? Do you think is it retail investors, Matt? Is it institutional investors? Is it RIAs? Where do you think?
Yeah, it's absolutely RIAs. Look, retail investors can already access crypto. You can buy Bitcoin on your phone. You can buy it through PayPal. You can buy it through Coinbase. But financial advisors can't. And the important thing to remember is that financial advisors control about the same amount of money as mainstream institutions, and 2 or 3x as much money as self-directed retail investors. The really only way we can get that chunk of the market, which is many trillions of dollars, is through an ETF. And I think, therefore, the ETF will transform the market. The analogy I would make is back to the approval of spot gold ETFs in 2004. Before that, retail investors could buy gold, but advisors couldn't. And what you saw eventually is $100 billion move into gold ETFs over a period of 10 years. That was, of course, positive for prices. We got 11 straight up years in gold. I'm not saying that will happen in Bitcoin, but I do think you'll see financial advisors move into this market en masse, and I think that will be positive for the asset class.
Finally, Matt, I do want to ask you a question about competition within the ETF market, because there are a lot of proposals out there, a lot of companies trying to get their offerings out there. Of course, there's Grayscale, which already has its trust on the market. And so we'll see if people convert that. We've got BlackRock, which is a giant in the industry. And if you look at other commodity ETFs, while there might be a bunch out there, usually there's one that's sort of far and away the leader. So how do you compete in a market like that?
The beautiful thing about Bitwise competing in the crypto market is it's all we do 24/7, 365. And as you know, the news in this market moves extremely fast. I think when advisors want to choose someone to partner with to access the crypto market, they're going to want to make sure that they're following the news in Washington, that they're on the phone with technologists, that they're talking to venture capitalists. So if they have questions, the provider will have answers. So Bitwise feels comfortable moving into this space. We're excited for the race to begin. And the more the merrier. May the best team win.
All right, Matt Hogan, thank you so much for joining us today, man. That was great insight.
Thanks for having me.
All right, taking a look at Bitcoin. It's hovering around that $28,000 mark as bulls bet that the SEC won't appeal Grayscale's legal win, possibly paving a path for the first spot Bitcoin exchange-traded fund. Yahoo Finance's Jennifer Schonberger joins us with the latest. A busy day for Bitcoin prices today.
Hey there, Rochelle. Yeah, that's right. Bitcoin and other cryptocurrencies gaining a bid on hopes the Securities and Exchange Commission could soon approve the first ever spot Bitcoin ETF. The SEC will not appeal a federal court ruling that found the agency overstepped its bounds by rejecting Grayscale Investments' plans to launch a Bitcoin ETF. After the D.C. Circuit Court of Appeals ruling, a 45-day review process ensued that offered the SEC the opportunity to appeal the ruling. That period ended Friday, and the SEC did not appeal. The court will now issue its final mandate within 7 calendar days. It's now up to the SEC on what to do next. This doesn't mean the SEC must approve Grayscale's spot Bitcoin ETF application, though it would probably need to come up with a stronger reason for a denial since the appeals court concluded that the SEC's prior decision to reject that conversion was, quote, arbitrary and capricious. Grayscale has not yet engaged in dialogue with the SEC on its Bitcoin application since this 45-day period has ended, but plans to engage with them and move expeditiously to try to greenlight its application. If approved, Grayscale's GBTC fund would be ready in days to begin trading as an ETF, a Grayscale spokeswoman telling me in a statement, quote, "The Grayscale team remains operationally ready to convert GBTC to an ETF upon the SEC's approval, and we look forward to sharing more information as soon as practicable." Yahoo Finance has reached out for comment to the SEC, but has not yet heard back immediately. Rochelle?
All right. Well, I know you'll be following all of that for us. Appreciate that update, our very own Jennifer Schonberger. August weighed heavily on crypto, with Bitcoin down almost 12% at the month's end. But will the slump stretch into September, or could the end of summer bring a boost? Joining me now with more is Yahoo Finance's David Hollerith. Hey, David.
Hey, Rochelle. So Bitcoin is usually a more heavily traded, September is usually a more heavily traded month for Bitcoin as opposed to August. That being said, at least historically, it doesn't look quite as good. Based on historical data for 8 of the past 10 years, Bitcoin's monthly performance for September is usually down or a sell-off, and the mean is about down 6%. Now, that being said, where we've come since August, we've seen 2 really big moves in August, and one was up, one was down, and then down again. So we're kind of at neutral. Quarter to date, since the beginning of July for the third quarter, Bitcoin sold off about 16%. And the focus going into September is obviously about the Bitcoin ETF's approval. We have the Grayscale case verdict that's come out, and now the SEC has about 40 days to respond to that decision, and that might shed some light on whether or not the agency is looking to change their previous decision making about whether or not to approve a spot Bitcoin ETF. But that comes in October, and also in October, a number of other asset managers are also filing for a spot Bitcoin ETF, and their applications can either be delayed or approved around that same time. The SEC also has a Ether futures ETF, which is a slightly less controversial product that approval is looking to be rolled out possibly as soon as October. So we have a lot going on in terms of the U.S. market, looking at the SEC's approval and decision-making based on crypto-related products. But I mentioned those 2 drops in August, and that sort of goes back to sort of what the problem has been is that the crypto market, Bitcoin in particular too, has had very low or thin trading, and that's caused a lot of these big movements that normally in past years wouldn't move Bitcoin quite as much in terms of these one-day movements we see where it's up 11%, down 11%. And it's kind of interesting because the ETF is sort of one thing that could sort of stunt some of the volatility there, because obviously it brings more access to the market, and would, in particular, allow the market to grow a little bit. There'd be wider trading. So we're kind of faced with a chicken or egg situation looking towards the fall for Bitcoin and the crypto markets. And a lot of it is focused on U.S. agency approval or federal agency approval.
We know Bitcoin enthusiasts looking for some light at the end of the tunnel. Perhaps they'll get it. I mean, former SEC Chair Jay Clayton telling Forbes that an eventual approval of a spot Bitcoin BTF is, quote, inevitable. We'll have to see. We'll have to see what happens at the end of that waiting period. Big thank you there to our very own David Hollerith.
Last week, a federal appeals court said the SEC must review Grayscale's bid to convert its Bitcoin trust into an ETF. The trust issuer manages the world's largest cryptocurrency fund and first applied for the conversion in October of 2021. The move was seen as a landmark decision and saw Bitcoin and all crypto-related assets rocket. More on this and the future of ETF investment. Rick Edelman, founder of the Digital Assets Council of Financial Professionals, joins us now. Rick, good to have you here with us this morning. First, what was your reaction when you saw this taking place, considering that we've been in a crypto winter? We've seen some of the lust or some of the gravitational pull towards other assets or more risky assets like crypto largely abate over the course of this year.
You're absolutely right. We have been in the crypto winter for far too long, and this is the biggest bull news. This is the most bullish signal that we've had in crypto in years. So it's very exciting. That's why you saw the crypto prices jump 20-25% immediately on the news. But we must not get too excited, too carried away. The court did not order the SEC to approve these ETFs. The court merely said that its rejection of Grayscale's application was inappropriate. They called it unreasonable. They said it was arbitrary and capricious. And that is going to force the SEC to do something about it. But approval is not necessarily what the SEC has to do.
And so does that mean people shouldn't rush out and buy Bitcoin or, for that matter, buy the trust itself in the wake of this decision?
Well, I am bullish about this. I do believe that this will lead to the SEC approving these applications. I am in that camp, but it's not guaranteed. We have to recognize that the SEC has a variety of options at its disposal. It could appeal the ruling. That would take months or years to work its way through the court. It could acquiesce and force Grayscale to refile a brand new application. That would take another year for it to process. It could, frankly, do something that I think nobody is expecting. The SEC could say, well, if the court tells us we can't say yes to futures, but no to the spot, then let's just say no to the futures and pull the futures ETFs off the market. That would be shocking. Nobody's expecting it, and it would be extraordinarily negative for crypto prices if that were to occur.
You know, we had CEO of Grayscale Investments, Michael Sonnenshein, on last week as all of this news was really playing out. And he said that the stage is set for an environment around crypto that we haven't seen before. We've seen a lot of things in crypto. What is still left? I mean, we're talking about utilization. We're talking about actually having an instrument that people, investors, could trade similar to what's already been out in the markets, what's already been available. And so what does the SEC need to see differently in an application or in a review process in order for that to come to full fruition?
Well, there's nothing legitimate that the SEC needs to see. This is simply a vendetta by Gary Gensler. There is no legitimacy or justification for the denial of these ETF applications. I mean, if the SEC can approve 2x inverse funds, if they can approve single stock ETFs, there's no justification for denying a Bitcoin ETF, especially since they've already said yes to Bitcoin futures ETFs. Gensler is just basically expressing his own personal viewpoint. He's acting as though he's our mother and telling us to, don't eat too much candy. This isn't his call to make. He needs to put this ETF into the marketplace and let the investment community decide whether or not it's something we want to buy. And we ultimately do believe that's what's going to happen, which is why there's so much enthusiasm and excitement about this. I personally believe that over the next 2 years, we're going to see Bitcoin's price rise to as much as $150,000. That would be a 5x increase from where we are today. So I think that we're seeing a massive sea change. We're seeing legislation moving forward in Congress. We're seeing the SEC losing major lawsuits one after the other. They lost Ripple, they lost Uniswap, they lost Grayscale, they're about to lose Coinbase. And we're seeing massive institutional adoption by pension funds and endowments and virtually every major brokerage firm on Wall Street, from BlackRock to Goldman Sachs, is getting involved. Gensler is wrong. He's out of date. He needs to acknowledge it by allowing the approval of these ETFs.
Even if he's wrong, even if it gets approved, there's a lot of space between 25 and 150, Rick. I mean,
there is.
What else would justify that upside? It can't just be the approval of this ETF.
No, it's not, but it's one in a long series of developments and enhancements. We're seeing maturation in the technology itself. We're seeing increased use cases on a global basis. We're seeing governments around the world developing and exploring CBDCs, central bank digital currencies. We're looking at crypto stablecoin legislation moving fast through Congress. That'll be followed by a broader crypto bill. We're also seeing that, let's not forget that early next year is the next Bitcoin halving. There occurs this only every 4 years, and every time historically it has occurred where Bitcoin miners get only half the coins that they used to get as a reward. That has led to a doubling, tripling, quadrupling in the price of Bitcoin in the following year. So all of these are moving toward what is now going to become the crypto spring, leading to the crypto summer as we leave the crypto winter behind. So there are a lot of really good stars aligning that I think will collectively contribute to massive new all-time highs in the price of Bitcoin.
Rick, you mentioned a lot of the big banks that have set their sights on crypto as well. So would this, if the SEC is eventually an approver of what Grayscale has put forward, and thus we see a windfall of other similar applications that now have the blueprint and how they can market and ultimately put a new asset into the market that allows more annexation to Bitcoin, is this better for the retail investor, the individual that's kind of banked on Bitcoin since 2011 or even 2015, 2016? Or is this more so a beneficiary for the institutions out there that are going to see all of the inflows into certain funds and ETFs and assets?
I think it's all the above. I think you're right on all points. This is clearly good news for Bitcoin because we're talking specifically about a Bitcoin ETF, but people will quickly realize that it's not just about Bitcoin. This is going to be a rising tide scenario. Coinbase will benefit as a leading crypto exchange. Independent IRA custodians like Choice will benefit. You will see major players. NVIDIA will benefit because it's another outreach for the sale of these GPU chips for the miners. You're going to see the entire industry rise as people begin especially to realize it's not just Bitcoin. We want to own a diversified crypto portfolio. That means owning Ethereum and Polygon and Solana and on and on and on. So it's going to be very good for the industry overall, which is going to bring more and more people into the crypto community. Keep in mind that 77% of financial advisors say that they have not been recommending crypto to clients because there's no ETF. So as soon as this ETF becomes available, independent investment advisors who manage collectively $8 trillion in investor assets, if they collectively put in 1 or 2% allocations to Bitcoin, we're talking about inflows of hundreds of millions of dollars, potentially tens of billions, into an asset class that's only worth $1 trillion right now. This massive inflow in a fixed supply market is going to have an incredible impact on the price of Bitcoin. And by extension, the other digital assets that will be getting a lot of attention as well. This is why we're seeing a rapid thaw in the crypto winter. The spring is coming very quickly, and that'll lead to the blooming summer. And that's why I'm really excited about the pricing of crypto over the next several years and why it's worthy of a consideration for a small 1 or 2% allocation in a diversified long-term portfolio.
All right, I'll try to keep my swim trunks at the top of my drawer then. Rick, thanks so much for joining us here today. Really appreciate it.
Sure thing.
China's central bank is taking additional steps to bolster a weakening economy and currency today. The PBOC announcing it will cut the foreign exchange reserve requirement ratio for financial institutions from 6 to 4%. The central bank also moved to cut down payments for homebuyers and called on lenders to lower rates for existing mortgages to stimulate a slowing real estate sector. The policy moves come as foreign investors increasingly move money away from the world's second largest economy. For more on China's economy, let's bring in Brendan Ahern, Crane Shares CIO. Brendan, as I talk about this, I'm seeing a healthy pop, at least in your ETF, KWEB, but there's a headline that caught our attention yesterday in the FT that pointed to $12 billion in outflows from foreign investors in Chinese stocks, a record. How much of that is warranted when you consider the state of the economy in China today?
Yeah, certainly this is one of the largest outflow months ever in the case of foreign ownership of Chinese A shares, stocks listed on the Shanghai and Shenzhen exchange. The number is large as it was. If you step back and look at the inflows over the last 5 years, it's over $200 billion. So the general trend of foreign ownership is still quite high. If anything, also shows that maybe foreign investors are very poor market timers, because this outflow is occurring just as Chinese equities are enjoying one of their strongest weeks in quite some time.
But Brendan, what about so much concern, though, about the economy right now, the slowdown that we're seeing, the fact that it doesn't seem like investors are confident in what they're seeing play out in China? So what needs to change? How do you improve investor sentiment when it comes to investment opportunities there?
Well, investor sentiment is very, very low at this point. I think in general, across institutional investors that we've been speaking to globally, you have a significant overweight to U.S. equities versus non-U.S. equities. That's driven just by significant outperformance of U.S. equities over the last 14 years. But I think more specific to China, you're seeing, I think the key is that some of the issues that have really been headwinds for investors in the space, things like the Holding Foreign Companies Accountable Act, Zero COVID, U.S.-China diplomatic relationships, real estate, China's internet regulation. You take all of these issues, it's really led the asset class almost to be eviscerated. And I think what's happening is you're seeing a pivot from the Chinese government. And you're seeing a number of these issues, things get less bad, or just simply they are improving. And I just think investors' ownership is very misaligned for some of these issues to actually recede, to improve, or at a minimum get less bad. So we're actually constructive from a contrarian perspective for that reason.
So what does that investment case look like?
Well, certainly the Chinese government is literally telling investors to buy their stock market, that they've cut a lot of the fees associated with holding Chinese equities. They've limited the number of IPOs, because the IPOs represent more supply. At the same time, they've tried to promote the underlying companies to issue dividends and to buy back their stocks. So I think the government is very aware that the economy has had a very tepid recovery, and you're seeing these significant changes. You're cutting the mortgage rate for existing mortgages. That puts, it's estimated about 12,000 RMB back in the pockets of Chinese households. At the same time, they've cut the bank deposit rate, which means they don't want to see that money go back into bank accounts. They want to see it get spent. So you're seeing this pivot from the Chinese government to try to stimulate domestic demand. And that's where we're very constructive, specifically within China, on the domestic consumption sector.
So, Brendan, when you're identifying opportunities like that, I guess more specifically, where are you seeing opportunity? And when it comes to that negativity, how much of that do you think is already priced into some of these names?
Oh, I mean, I think these companies, you take all 31 companies in KWEB, and they generate more revenue than Amazon or Alphabet. And yet for Amazon's market cap, you could buy all 31 companies in KWEB and you'd have 200 billion left over. In the case of Alphabet, you could buy every company in KWEB and you'd have $500 billion of cash left over. So again, it just shows that a number of these issues have really pushed investors out of the asset class. And specific to where we like, it's self-serving and highly biased. As a shareholder in KWEB personally, we love the e-commerce space. very simply because we believe that this push to domestic consumption, something that we've actually seen in the EV space and in the home appliance space earlier this year. We think they'll apply a much broader policies to try to raise that domestic consumption. And with 25% of all retail sales happening through the e-commerce companies, we think that's a particular area of focus for investors going forward.
Brendan, you mentioned a number of moves that have been done by the PBOC as well as the Chinese government to try and stimulate the economy. It just hasn't been on the scale of what we saw, of course, back in 2008, and then more recently in pouring investments into the real estate sector that is at the heart of the problem right now. What are some additional measures you think the government is likely to take, and to what extent is that going to be effective when you consider the reality of the debt that exists? I mean, are we talking about 4% growth being the norm now?
Yeah, I mean, certainly the real estate, it's a two-faceted issue. One is you have distressed real estate developers like Evergrande, Country Gardens, Sunac, and there's several of them. And that problem isn't going to simply resolve. There is no silver bullet. But they're going to allow those companies to muddle through. They're not going to allow them to create a financial crisis. There's such an emphasis from the Chinese regulators on the real estate sector that they're trying to prevent a proverbial first domino from setting off a chain reaction. The other issue on real estate is 2/3 of urban Chinese household wealth is in real estate. So as real estate prices fell for the first time ever, it's weighed on consumption trends because Chinese households saw part of their balance sheet decline in asset value. So I think they're very much, there's a huge emphasis on real estate, and it's not going to resolve itself. We should expect continued issues, but it's getting a lot of attention from the government.
Okay, we will continue to watch it. Brendan, good to talk to you on this Friday. Brendan Ahern, Crane Shares CIO, joining us there.
So what do you think that then means for the price of crypto, the price of Bitcoin then, at least in the near term? Certainly sounds like we could see a lot of volatility if that is in fact the case.
There will be some volatility as the market digests, and I believe comes around to my view that short term, there's too much hopium. There's too many crypto bulls and Bitcoin bulls who think that the ETF will be approved, ASAP or in the next several weeks. I'm not sure we're going to see a launch of any Bitcoin. I don't think we'll see a launch of any spot Bitcoin ETF before year end. And I'm happy to bet people on this. I've been kind of goading some of the hopium bros on Twitter to bet against me.
Even with the cleanup that's happening within the space, you said that there's still a lot of price manipulation that's happening specifically on Bitcoin. We're seeing it trading above that $27,000 handle. What is the real value, you think, if the manipulation's still happening?
So I think Bitcoin, the real value is it's way undervalued. This is the best asymmetric upside asset with asymmetric upside I've ever seen in my life. And I've been in finance many years. But short term, who knows? Because until the wash trading, price manipulation, and fraud is completely cleaned up, I do feel like if you look at the trading volumes, they've gone down in Bitcoin, maybe because of US and Chinese authorities going after some of these Chinese exchanges like Binance, like Huobi. And the threat of that has made them kind of not want to be as aggressive, I think, in their wash trading. So maybe the current volume is about right when you strip out the bump up in trading volume due to this recent Grayscale decision. But for some time, we've been seeing a pretty significant decline in trading volume.
Terrence, the interest that we've seen from BlackRock, from Fidelity, just to name a few, on a spot Bitcoin ETF here potentially for the future, how big of a catalyst is that going to be just in terms of wider adoption and getting more people to eventually potentially trust Bitcoin?
Sure. Once they launch, especially those two, plus Invesco, which is the manager for QQQ, the very popular tech ETF. Once those three launch, or any of those three launch, it will be a massive bullish sign where a flood of money should come into Bitcoin and Bitcoin ETFs. Why? Because those three are three of the most respected traditional finance or TradFi companies in the world. They really know ETFs. They really know finance. They're respected by institutions and high net worth and other folks as well. So once they are actually launching and offering Bitcoin ETFs, I think a flood of cash will come in. Very different from gold ETFs. Why? Because gold was around for thousands of years, accepted across all cultures as valuable. By the time the gold ETF came about, it was like, okay, this is great. There was a flood of cash that rushed into gold because of gold ETFs. But I think with Bitcoin, it's going to be like 10x bigger, if not much more, because Bitcoin is a teenager. It's considered a scam by some of the people I respect the most in my life, family members, extremely accomplished law school classmates. They don't get Bitcoin, and I think that's going to change within about a year.
Well, crypto tokens continue gaining after a federal appeals court sided with Grayscale in a lawsuit against the SEC, ruling that the commission failed to, quote, adequately explain why it denied Grayscale's request to convert its Bitcoin trust to an ETF. The trust issuer manages the world's largest cryptocurrency fund and first applied for the conversion back in October of 2021. Now, the SEC has denied more than 30 proposals for spot Bitcoin ETFs, but this latest decision has boosted investor confidence. Here to talk more about Grayscale investments and Bitcoin, Axios reporter Brady Dale. Good to see you, Brady. So, obviously, a very interesting development here, and we were speaking with Grayscale CEO earlier today, really about the potential for what happens next and the floodgates that could open. But what should the investment community take away from this?
Well, I mean, Bitcoiners have been wanting an ETF forever. So they were extremely excited when some positive news came for this yesterday. And if an ETF got approved, Grayscale's or any ETF, it means it would be vastly easier for lots of people to buy in. But we're still in a waiting game. The SEC could appeal, or they could decide not to appeal, but they could still drag their feet until next year in terms of approving any of the ETFs. There's a lot of variables still at play, but you know, this is the SEC's second major losses in the courts this year, and they can't be feeling quite as ambitious as they were coming into 2023.
Is this a ray of sunlight, perhaps, at the end of a long crypto winter that we've seen that has been detrimental in many factors for cryptocurrency?
It's a gigantic ray of sunlight. I mean, this is the gigantic thing Bitcoin people have been waiting for as long as I've been covering this industry. They have wanted an ETF forever. And I see, you know, we had a giant bump in the Bitcoin market yesterday when the news came out. And I see several more bumps ahead if we move towards an ETF passing. You know, like if Grayscale's ETF goes live, that's a bump. If Fidelity's ETF goes live, that's a bump. If the SEC decides not to appeal, that's a bump. Like there's a bunch of possible bumps ahead. Now, the SEC might fight tooth and nail, and so none of those things happen. But, you know, there's a lot of possibilities for things to move forward.
And how should people be looking at Bitcoin prices? I mean, because Bitcoin and some of these other cryptos are still below key levels here. So in terms of the tokens themselves, we do see analysts sort of on the fence about what's actually going to happen from here. There's always these very lofty valuations as to where Bitcoin is going to go. But what's the reality showing us right now?
I love this question, Rochelle. So there's a really exciting answer to this question, I think. We are in a new world, at least in terms of Bitcoin now, that we're in a world that Bitcoin has never seen before. And what's different about this world is we're no longer under zero interest rate policy. Bitcoin was created under zero interest rate policy. Every single boom we've had so far has been in a zero interest rate environment. And now there's actually yields that investors can get, you know, like off of treasuries. I mean, that's the thing everyone's got to compete with. And so Bitcoin has never been up against this environment before. It's a completely different world. I mean, it is the normal world. It's the way it's the way that investing has been in the United States for most of time, but it just hasn't been for a very long time since the Great Recession. So the next big boom, I think it'll probably come, but it could be more muted this time because, you know, investors aren't piling into risk assets in quite the same way now that they have like actual yields they can get off of treasuries again.
But does it take other cryptocurrencies with it? Or is it just all Bitcoin? And that is, even though it, of course, is the largest kind of market cap of the total crypto market cap right now, is it just zero-sum Bitcoin after a ruling like this?
Oh, I can't imagine a world in which a boom in Bitcoin doesn't yield a boom in everything else, just like it always does. Yeah.
Sure.
And we know that when it came to even classifying Bitcoin versus other cryptos as securities versus assets, Bitcoin has seemed to be in its own lane at the moment. Do we see that changing as we look at sort of some of the potential regulation or sort of regulation by violation as we've been seeing when it comes to some of these exchanges and tokens? Do we expect more of that? Any standouts coming ahead for you?
Well, I mean, the SEC's other big loss this year was its the decision on XRP, where the courts found that XRP wasn't a security, which a lot of people have questions about that ruling, and the SEC is going to try to appeal it. But we also have Congress looking to create a new definition for different kinds of cryptocurrencies. And so this world in which Bitcoin is the only cryptocurrency that is not a security, it's hard to imagine that lasting forever. The question is just how long until a few other cryptocurrencies get the green light to sort of trade normally like Bitcoin has.
And so is this for an industry that's saying, regulate us, regulate us,
Right.
regulate us, so we know how we can move forward
Yes.
with the necessary boundaries.
Yeah.
Is this the first piece where we see this opening up a floodgate of other regulation that then paves the way for people to know how they can engage with, and for companies who are trying to introduce assets to know how they can engage with consumers as well?
Well, I still think this SEC is going to fight crypto in every possible way it can, but Congress really wants to change the rules. And if Congress changes the rules, SEC has to follow. So I guess in terms of really giving the industry a path forward, my bet is either on Congress acting or a new president. I don't know that Gary Gensler's SEC is ever going to create that path for cryptocurrency. So they have to wait a while if it's just a regulation question.
Does that mean crypto's on the ballot in 24?
I mean, it's definitely a voting issue for some people. I don't think it's going to decide the election.
Not everybody, yeah.
Yeah.
Not decided. All right, thanks so much. We
Thank you.
appreciate it. Brady Dale, Axios crypto reporter.
Brady.
Yo, yeah, Rochelle, go ahead. Sorry.
I was going to say, Brady, before we let you go, because we know you had that recent piece on Sam Bankman-Fried. Of course, he was the golden boy of the day. That was the last time we saw this many headlines surrounding crypto here. Talk about what this does for the industry in terms of who do they look to now for regulation and sort of corralling this all together, especially when you have more institutional investors pouring into crypto?
Well, I think the leader in the U.S. crypto industry right now still has to be Coinbase, and Coinbase is showing itself to be super proactive. So I guess the new I mean, they would hate for me to say this, but the new Sam Bankman-Fried is Brian Armstrong, right? And Coinbase has shown itself willing to fight for its right to exist. I mean, really, the SEC case against Coinbase is existential for the company, so they have to. They've got deep pockets. They're going to fight. They're going to fight both in the courts, and they're going to fight by going to Congress and looking for new rules and trying to get the SEC to promulgate new rules. So I guess Brian Armstrong is the new Sam Bankman-Fried.
All right. Brady, we're going to be watching closely to see what comes of any court case that moves forward, especially within this industry. All eyes on that. Brady Dale, Axios crypto reporter, thanks so much for taking the time.
Thank you both.
Absolutely. Some big moves in the world of Bitcoin. A federal appeals court says the SEC must review Grayscale's bid to convert its Bitcoin trust into an ETF. The decision effectively paves the way for the first spot Bitcoin ETF and more widely for crypto assets to cement their status as part of mainstream finance. Now, shares in the trust rocketed on the ruling. Take a look at that price action. It manages the world's largest cryptocurrency fund and first applied for the conversion back in October of 2021. There was a big reaction across all of Bitcoin and crypto-related assets, including the likes of Coinbase, Riot Blockchain, and Hive. BlackRock, Fidelity, and WisdomTree, they are just some of the firms that have applied for their own ETFs over the last few months as well. Well, joining us now, we've got Michael Sonnenshein, who is the Grayscale CEO. Great to have you here in studio with us.
Great to be here.
So we were taking a look at the reaction yesterday. What type of inflows did you see just off of the ruling itself?
Well, yesterday we actually did see a pretty big spike in trading volume in GBTC. This is the world's largest Bitcoin investment vehicle. It's been publicly traded since 2015. It's been an SEC reporting company since 2020. It's held by nearly 1 million investors here in the US directly within ETFs, within mutual funds. So there are a lot of eyes and certainly a lot of hands looking very closely at the GBTC victory yesterday.
And Michael, Rochelle here. I mean, a lot of people were wondering, questioning the logic. You already have Bitcoin future ETFs allowed. So a lot of people were wondering why we weren't seeing these spot Bitcoin ETFs. What does this now open up, and what's been some of the reaction that you've been getting from investors?
Well, yesterday was really an overwhelming victory, not just for Grayscale and our investors, but for the investment in crypto communities as a whole. The panel of judges unanimously agreed with us 3-0 that the arguments we put forward in front of the court were such that the SEC acted arbitrarily and capriciously by approving the Bitcoin futures products, but not approving Bitcoin spot products like GBTC's conversion. And we really demonstrated, or rather the SEC didn't have a good explanation as to how to make a distinction between these two product types, given that they both derive their pricing from the same underlying Bitcoin market. And so this is a really, really important milestone on GBTC's path to eventually converting to an ETF.
And so walk us through the timeline from this point. How soon could we see the actual spot ETF come forward?
Well, so today is day one of a 45-day period during which the SEC can actually request a rehearing of the case. Okay. So we have to be a little bit patient. We have to follow the federal rules of appellate procedure here. And ultimately, the court will be issuing a final mandate that'll detail the operational next steps. In the interim, however, though, of course, our legal teams will be proactively working with the SEC to try and make for an expeditious as possible conversion of GBTC to an ETF.
Now, Michael, I do have to ask, if the floodgates do open and this is finally approved, how will you differentiate your product from some of the other ones that have also been applying for spot Bitcoin ETFs?
It's a great question, Rochelle, and there's actually already quite a bit of differentiation. GBTC is just a couple weeks away from celebrating its 10th anniversary. And that's 10 years of, operating within the digital asset ecosystem, custody, audits, accounting, disclosure, creations, investor disclosures, tax treatment. All of these things are really core to running GBTC every single day. And in contrast, a lot of the other products seeking to come to market are merely just ideas. They're just ideas on paper. They're just filings. So in a lot of ways, GBTC has paved the way for a lot of the other issuers to even think about bringing their products to market, making use of GBTC's operations, disclosures, financial reporting, et cetera. And I think when investors do have a choice about which product to invest in, certainly thinking about a crypto native asset manager, a product that has billions of dollars of assets, hundreds of millions of dollars of daily trading volume. These are the types of distinctions that I think investors will be paying attention to, but ultimately we do believe investors should have choice.
So is this ruling enough to really kind of overshadow some of the crypto winter detractors to cryptocurrency, whether that's SPF and FTX and what's taking place there, or whether that's the algorithmic stablecoin debacles of last year and the depegging basically to the dollar? Is this enough for investors and for the sentiment that's moved forward and had to navigate so many of these issues?
Certainly. I think investors are paying attention to the fact that crypto has been one of the best performing assets year to date. They're looking at not only the Grayscale victory, they're looking at the recent Ripple victory in court. They're looking at the pending legislation that's being worked on in Washington, both around stablecoins, as you mentioned, as well as looking more at market structure. And it's encouraging from my seat, having been in crypto now for almost a decade, to actually see crypto becoming a nonpartisan issue, to see both sides of the aisle working on legislation. Their constituents are getting involved in crypto. They're getting involved in the name of investor protection. They realize investors are going to be involved in this asset class no matter what. And so I am very encouraged that we will have some progress around a lot of these in the weeks and months to come.
Who does this benefit the most? Who stands to benefit? Is it the retail investor that has been, bullish on Bitcoin for the past 10 years, say, as long as you've been involved, or is it the institutions now in making this more accessible and them being able to make sure that they've seen some type of revenue come through as a result of any products or assets that they might bring to market?
Ultimately, I think an ETF is a wrapper that is tried and true, and it's been used for everything from gold and other commodities to equities to, sub-themes. And I think there's no exception when it comes to Bitcoin, right? Investors appreciate the ETF wrapper as a way to give them greater protections. And this is a wrapper that's used both by retail investors as well as institutions. So I think this is an overall win for the investment community as a whole if we move forward with seeing these spot Bitcoin products like GBTC converting and coming into the market.
And Michael, I do have to ask, because when you think of where Bitcoin and crypto started, and now you have this influx of institutional investors, and when they're waiting for the next catalyst, whether it be Bitcoin halving, what do you think is going to be the next catalyst in the crypto investment space?
Well, I actually think, Rochelle, you nailed it. One of the things that we and our investors are very focused on is the next Bitcoin halving that's slated to come around early next summer. And as we think about both that as well as the regulatory and legislative landscape I just mentioned, I do think that it, portends for an environment around crypto like we actually haven't seen before, and some catalysts that could be really, really unique to continuing to underscore the staying power of the asset class.
A spot Bitcoin ETF is now a step closer to reality. An appeals court paving the way for Grayscale to launch its ETF, which was initially denied by the Securities and Exchange Commission. David Hollerith is here with the details. David, we've seen crypto rallying on the back of this. What does it all mean?
Yeah, Kiko, it is a bit of a hype rally. That being said, it can be read two ways. One is that this is a little bit of a better chance than had previously been had in terms of seeing approval of a U.S. spot Bitcoin ETF. But also, too, it might be seen as just one minor win, which has been sort of this, field of court cases we've seen to sort of decide whether or not the industry, the crypto industry, can be regulated in the U.S. and in a viable way that is sort of matching what we're seeing in other jurisdictions such as Europe. But, to get into the court case a little bit, Grayscale is unique in that they have a closed-ended fund, the Grayscale Bitcoin Trust. So it's kind of like an ETF, except it can't automatically create or redeem shares. So as a result, it trades at a discount, and Grayscale has, like other asset managers that have wanted to issue a ETF, Grayscale's asked to have their Bitcoin trust converted into an ETF. Now, notably, this is also the world's largest Bitcoin trust. And in the trust is about 3.4% of all Bitcoins that are currently circulating. Now, that being said, the SEC has not approved anything from Grayscale as of yet. And the reasoning has sort of been that the Bitcoin spot market is easily manipulated. And that kind of goes against, at least as industry advocates had said, that goes against the Bitcoin futures ETFs that the SEC approved a little less than 2 years ago. Now, the point of this court case was sort of to decide whether or not the futures Bitcoin contracts or the futures Bitcoin market was like the spot Bitcoin market. And today it was ruled by 3 U.S. Circuit judges that, in fact, they are pretty much the same thing. And so the SEC's decision making, according to the court judges, was arbitrary and capricious, which means that at this point, the SEC kind of has to go back to the drawing board. Both Grayscale and the SEC today have sort of said that they're reviewing the verdict, and it's not really clear what next steps will be in either case. The SEC may be able to appeal the decision. In this case, it could be 17 other judges reviewing it, or they could take the case up to the Supreme Court.
David, it sounds like this is far from over, but at least for today, we're seeing some excitement in Bitcoin with that up just around 7.5%.
Federal Appeals Court says the SEC must review Grayscale's bid to convert its Bitcoin trust into an ETF. The trust issuer manages the world's largest cryptocurrency fund and first applied for the conversion back in October of 2021. Let's break it down with Yahoo Finance's Alexis Keenan and David Hollerith. And Alexis, I want to go to you first on this. What do we know about how this has played out so far in the courts, and what does this signal next?
Yeah, so this decision, it's coming from an appellate court, so a very high court just under the Supreme Court in DC. And what this court is saying is that the SEC has to go back and review its rejection of this spot ETF. Now, the SEC has already approved several futures ETFs for Bitcoin, but hasn't done so in this capacity. So it's saying that this decision that the SEC made, that it was arbitrary and capricious, this. And when the court says that, what they mean is that the agency has abused its discretion, right? That it could have come out another way. So it wants the SEC to go back and take a look at this. So today, a win for Grayscale, getting a reconsideration of this effort that it's been making for this conversion.
Wow.
And David, I want to bring you in here in terms of the reaction from the Bitcoin community and even the movement that we've seen in the Bitcoin price so far this morning. What are your big takeaways?
I mean, yeah, I think if you look at the Bitcoin chart right now, it's risen. It's about 4%, up 4% on the day. But in the last hour, sort of after the court decision, it rose 5%. So, really what we're seeing is generally investors in the industry are taking this in stride. For a little bit larger context, this is a different issue than some of the other things that the industry is dealing with the SEC. But there's been sort of a clash between crypto businesses and the federal securities regulator. And so anything like this is sort of, at least in terms of sentiment, is sort of investors seeing it as a win against the regulator and sort of offering them more room to sort of have crypto products, Bitcoin ETFs, or even just the listing of other crypto assets as approved in the US for investors. So it's a big win.
And David, before, obviously, we know that any sort of good news will usually send Bitcoin up. But if you had to sort of temper expectations as to sort of what happens next and what people should really make of this, obviously, this is just one step in this. What would the takeaway be there?
Yeah, absolutely. So I think first, I think it's fair to point out that it's hard to understand what the SEC can do at this point, given that sort of their argument has been rejected. They will have to come up with some new argument for why they cannot approve a Bitcoin spot ETF, or in this case, convert the Grayscale Bitcoin Trust into an ETF. But that being said, even the SEC has been more amenable to listing Ether future products, which are sort of another topic going on. So it seems to me like this, to temper expectations, this all takes more time. And this is not like a clear approval, but it does up chances for a Bitcoin spot ETF. And I think, some of the excitement about that, it's hard to judge what a product like that would mean for investors. But we do know with the futures, the Bitcoin futures listings in 2021, it sort of corresponded with a large rally for the asset class.
And Alexis, there were a lot of other companies that were looking to kind of push this forward, at least this court ruling. What do we know about the companies that stand to benefit? Even as we were showing our viewers, some of the companies that are already seeing a price reaction in their stock, there were some big names that were also pushing for this ETF to move forward too.
Yeah, I think Bitwise was one of them that was involved in this, and there are others. But look, as David said, this will take some time. This will have to go through a complete review, and whether or not eventually it will be right for even the Supreme Court, we'll have to see.
Absolutely. All right, we're taking a look at shares of some of those companies that would be big beneficiaries supposedly here, and we'll see exactly how this plays out continuously. Thanks so much. Welcome back, everyone. Let's get on over to the New York Stock Exchange and take a look at the world's biggest cryptocurrency. Trading volume slumping to a 4-year low. Who better to explain why this is happening than Yahoo Finance's Professor-in-Chief, Jared Blickery. Hey, Jared.
New one. I appreciate that, Brad. I was just looking at the news flow around Bitcoin, and I think this describes and kind of illustrates why we have this lull in the action. I see a lot of stories about creditors in recoveries, Sam Bankman-Fried's proposed expert witness. I see the SEC issuing its first enforcement action targeting NFTs, and a crypto president. Top U.S. 2024 contenders are not fans, and rivals are way behind. That's just not going to get me interested in crypto right now. Let's take a look at the charts and kind of take a look at what's happening. You can see that most of the days we'll see like 4 or 5 really low volatility days. That's these really small candles. Then we'll see a green one and a red one kind of pick up, usually going in the wrong direction. And then you have these big outsized moves to the downside. And to be fair, we've seen those moves to the upside too. We saw those earlier in June when it looked like we are on our way to clear 30 30,000 in a meaningful way for the first time, but it's just kind of more of the same. And you got to ask yourself, what's going to get investors interested in the crypto space? You take a look at what's happening in stocks overall. August, we've seen stocks slump. We've seen meme stocks. We've seen the fringier stocks give back a lot of their gains that they made in the prior months. And so the overall environment for something like crypto right now, with the decimation, obliteration that it's seen over the last year and a half, I just don't think we can expect that. It's going to take a little bit more time for the crypto spring, perhaps, to get its footing. And in that regard, we have a halving next year. That's a critical time when the amount of Bitcoin payments, rewards for people who mine Bitcoin, those actually are halved, and that causes more demand, creates less supply, and so that's a natural bullish statement, but that's next year. In the meantime, we still had incredible institutional involvement and investments in Bitcoin. I don't think that was for nothing. I think Wall Street is just gearing up for the next wave of interest. We just haven't seen that yet. So I think more of the same here, probably more of these low volatility days than not, until we get a major change in either interest rate policy, which really creates an upswing for all risky and fringy assets, or we get that happening next year. So it's going to be a little bit of time, I think.
It's true. Everyone always waiting for that breakout event. Hasn't quite happened yet, especially for some of the estimations that analysts have put out there on the more bullish side. Always great to get your take. Our very own Jared Blickery there for us.
And Bitcoin, you can see it there on your screen, a 3-month chart of Bitcoin trading to the down, well, actually up about 12 basis points over the last 24 hours, but largely trading down after that steep sell-off last week. Just want to show you another chart here. Here's the 10-year T-note yield, climbed to above 4% and beyond only last week. Is there connection? We want to turn to more of this. We turn to Scott Melker, host of the Wolf of All Streets podcast. Thank you for joining us here today. I've been looking at the move in Bitcoin and just kind of falling out for no reason. Some people are blaming high rates. Maybe that has something to do with it. But what are you saying here?
Well, I think that anytime we see Bitcoin or any market move for that matter, we tend to try to assign a narrative to it afterwards. And that's not really worth doing in this case. If you actually take a look at the data, it's very clear what happened here. It's something that happens in every market. It's a long squeeze, right? You had someone with a massive spot position who sold all at once. And effectively, that entire move happened in less than 15 minutes. So what happens there generally is that they sell down on a spot position. They're probably short with margin or with leverage. They profit from the cascade of liquidations on the way down, and then they're probably the one buying at the bottom as well. This is sort of similar to the short squeeze you saw on GameStop a couple of years ago to the upside, and that's probably what's happening here. We had historically low volatility on Bitcoin, literally the lowest it's ever been for this highly volatile asset coming into last week. And so in that environment with low volume, low liquidity, it's the perfect moment for somebody to push the market in one direction.
So Scott, it's Diane here. We've talked before, and you say the crypto winter is over. There are definitely clearly signs that the crypto winter has been over, but certainly caught a cold recently. So are you saying this is a one-off event and not a kind of trend that we should be watching?
I don't think there's a reason to suspect that we're going to new lows like we did after the FTX collapse, unless, of course, we have some other massive black swan event. I just don't see that in the cards right now. Actually, the price where it's sitting, if you're looking at it from a technical perspective, anything above 25,000 is still effectively in this new bullish trend. That was the line that was broken, was the first time that we broke that bear trend down from 69,000. It was the first higher high if you're someone who looks at charts. So there's no reason to think that now. I think what we had here was we had extreme bullishness and optimism on the news that BlackRock was applying for an ETF. Right. And of course, that means that the market is pricing in that ETF approval. And the longer we get from that application to that approval, the market just sort of drifts down. But if you take a look at the way Bitcoin has traveled and moved over the past 4 years, we are just in the midst of another 4-year cycle in the exact same place that we were last time. And listen, as I said to you probably before, crypto winter may be over, but spring isn't always that fun, right? There's a lot of bad weather in spring, and I think that we might just be in the midst of that spring heading into summer next year after that Bitcoin halving in the 4-year cycle.
Hey, I do spring cleaning every screen. Got to clean out that portfolio. So I get that. I want to. You mentioned the ETF a second ago. I want to stick with that because on the regulation front, the SEC seems to not be as onerous as it has been. As at least Gensler, not as hostile to crypto. Coinbase really asserting itself. They just got approved as a futures commission merchant. They can directly offer their clients futures now. Do you see the regulatory environment easing a bit, maybe finally allowing for these spot Bitcoin ETFs to be approved?
Listen, I only listen to the experts on this. My friends Eric Balchunas and James Seyfert at Bloomberg are their ETF experts. They're pricing at a 65% chance of an approval of a Bitcoin spot ETF this year. Much higher chance of seeing Ethereum futures ETFs because they're similar to the Bitcoin futures ETFs that have already been approved. So I do think that we will likely see that. As for Gensler and the SEC, let's be honest, they're taking a beating left and right. They're losing everywhere in court. They lost on Ripple. They're likely to lose on Grayscale. I think that we saw the pendulum of the anti-crypto army and the Elizabeth Warren, Joe Biden, sort of Gary Gensler side push way too far in one direction. And now they're getting a ton of pushback, not only from the community and their constituents, but also from the legislators, right? We've seen the markets bill pass bipartisan in committee through Congress. There's really some movement for sensible legislation on Bitcoin and crypto. And I think that at this point, it's likely that Gensler and the SEC throw a bone and approve a Bitcoin spot ETF, because then they can say, look, we did something right. Bitcoin is safe. And that doesn't really speak to their opinion on altcoins, which is a whole different conversation anyways. So I do think, listening to the experts, we have a very likely chance that we will see this spot ETF approved, and that would be massive for Bitcoin.
And Scott, I want to kind of go back to something you talked about with like the patterns, I guess, now that we're seeing. So Bitcoin and other parts of crypto old enough to, I guess, experience cycles. How do you survive these kind of cycles, especially like we just threw up a chart of some different coins. So we had Bitcoin trading one direction, Ethereum, Bitcoin under a little bit of pressure, Ethereum actually under some pressure now, but had been popping a little bit. How do you kind of manage the cross currents and these, I guess, cyclical patterns that could be coming into play and dealing with any potential bearishness or risk off trades that happen there?
You buy because you have a low time preference and you look at 5 or 10 years in the future and you don't obsess over 5 or 10 months into the future, right? Assuming that this cycle, which has always played out, does again, we're looking at a year from now being a few months after the halving and really starting to see that reduction in supply that's mathematically programmed into Bitcoin starting to play. So I really think that if Bitcoin goes back to 69,000 eventually, or to 100 or 150, or the much more hyperbolic, obviously optimistic takes that a lot of people have, you're not going to care if you bought at 29, 25, or 20. So I can tell you, I personally filled bids at 25,000 on this drop. I have more bids at the 20 and 19,000 level just in case we get down there. But the truth is, it's too late to sell, right? You should have been selling at 69,000. It's not financial advice naturally. But if you look at these cycles, the big players sold on the way down, and you can look at their wallets. This is very transparent. They're buying now and have been buying now for months in anticipation of this cycle. So I think you either do nothing, but if you do have some dry powder, you start to put some bids and hope they fill before we head back up.
All right, we're going to have to leave it there. Really appreciate your insights. Learned a few things here. Scott Melker, thank you.
Well, a lot of speculation has surrounded the chances of a Bitcoin spot ETF being approved, given how much scrutiny the sector is feeling from regulators. Let's bring in Yahoo Finance's David Hollerith to discuss this more. David, we know that we've been hearing a lot about the potential for this, but not seeing any companies quite make it to the finish line just yet.
Hey, Rochelle. Yeah, since BlackRock's filing, which happened earlier this summer, there's been 8 other companies who've refiled applications to list a spot Bitcoin ETF. And that's included ARK Invest, Bitwise, VanEck, Wisdom Tree, and Invesco. And now the SEC has several opportunities from here to either approve, deny, or simply push off approval for these applications. They can't push off approval after 6 months from now. That's when we'll have a definite decision about whether or not the agency would be okay with listing these products. But that being said, earlier this month, ARK Invest's application was pushed off approval. And the deadline for these other applications from the other asset managers are coming at the beginning of September. And John Reed Stark, who is a former attorney for the SEC's enforcement division, sort of weighed in on this at the the end of last week. And he had said, he puts the chances at slim to none. Stark, obviously, having worked for the agency, does know a lot about the enforcement division, and his thoughts are that the Bitcoin spot market it's a little bit too not regulated enough and a little bit too manipulatable, which has been the argument in past years for why there's been no approval. But a lot of people have really come out around the BlackRock filing and Bloomberg's ETF team, Bloomberg Intelligence's ETF team, which has been more bullish on the prospects of approval in the coming 6 months, has said, the question is really, what could BlackRock know that these other filers didn't know at the time? They added a surveillance sharing agreement, which has sort of been taken as like a new addition to this. And potentially, people have said that might be what will make the change for the SEC to approve it. But at this point, it is still pretty unclear about how things could go. We're looking at the Grayscale lawsuit with the SEC, which we're expecting a verdict on, any week now. And that's expected usually on a Tuesday or a Friday is when these verdicts come out. Obviously, Grayscale is trying to convert their GBTC product into an ETF, and that's been a long battle. So we could see some more clarity into the SEC's thinking with that verdict, or at least with what they have to do next, depending on the judge's interpretations. But we're not expecting it to be a clear path for ETFs either, given that the verdict could mean a few different things. But that being said, Bloomberg's team, which again I said has been a little bit more bullish, has said the odds of a Bitcoin spot ETF, they've placed it at around 65% at this point. So that's much better than it was before BlackRock filed for the product.
I mean, you figure if BlackRock can't make it, what chance do some of these smaller companies have? Indeed. But thank you for getting us up to speed. We will be taking a look at those enforcement actions as well. Our very own David Hollerith, thanks so much.
Bitcoin has recovered slightly after briefly dipping below the $20,000 mark following reports that Elon Musk's SpaceX had offloaded the cryptocurrency. Another event you need to keep your eye on today. A major options expiry. Yahoo Finance's Jared Blickery joins us from the floor of the New York Stock Exchange to really connect the two and break it all down for us. Jared.
Yeah, I think the big question in crypto is there a whale selling right now? It would appear so. Bitcoin has been relatively quiet recently. And let's go to the Wi-Fi Interactive and chart the recent price action. Here we can see Bitcoin down 7.44% over the last 24 hours. And here is a 3-month chart. And I was standing here yesterday afternoon, close to the close, just remarking how it had come down to the bottom of this channel, and we were looking for a potential rebound. That did not happen. There was just a washout all the way down to about 25,000, which happens to be about the 3-month low. Let's take a look at the year-to-date chart. We had what could be considered a bullish flag here, but that is out the window. We just have more choppiness inside this range, and there are a lot of expectations when Bitcoin first headed north of 30,000 and then again thinking, well, we're going to get some continuation to the upside, but there's just huge overhead supply there. And apparently it was too much for the market. I will show you the high coincided with this overhead supply, this giant top right here. So still got some things to work through. And now the onus is on the bears to prove the case because the bulls apparently have given up a little bit. But one of the things I've been tracking this week, and in fact over the last 2 weeks, has been the fringier parts of the market, including Bitcoin. I'm going to go to my leaders page here on the Wi-Fi Interactive. You can see for the day, Baito, that's a Bitcoin ETF, that is down the most, followed by Chinese internet ETF, KWeb. But over the last 5 days, we've seen meme stocks and Bitcoin really be two of the big losers this week. Why is that? I think because August was expected to be, and it has turned out to be, a relatively bearish month. We're expecting this to go sideways for the next few months. We also have increasing volatility into September and October. So given the gains that we'd seen year to date, we were ripe for this situation. The big question is what happens next? And that kind of leads me into the next topic you mentioned, which was options expiration, what's going on in the options market. Here I have the S&P 500. You can see we're in the midst of this 5% correction right now. By the way, that's not even, that is more than half of the correction we saw due to the regional bank crisis. That was about 9% or so, and we're just looking at 5 right here. But you take a look at the VIX is picking up, and an analysis by Jefferies out today or yesterday said the pain trade now is decisively to the downside. We saw the Bank of America Fund Manager Survey come out this week where we saw the highest or the least number of bearishness, the least amount of bearishness since February of last year. That was before the Fed kicked off its huge interest rate raising campaign. And so you put all this together, it looks like the bulls have something to prove in this market, and they really haven't for some time. It's been more or less a glide path on the way up. So first substantial correction in a while. We have OPEX this morning. Index options have expired on the open, and now we're waiting until after the close, those last prints of the day, for individual options to expire. There was a lot of put buying, a lot of protection buying coming into this. Put to call ratios, they soared this week. So much for those days to expiration, that phenomenon, and so much for those calls that everybody was buying before. It's all about protection now, guys.
I'm sure that's what everyone is enthusiastically talking about behind you on the floor here this morning.
I have no idea what's going on here. But.
I don't know. People are glad it's Friday. I know I am. Maybe that's what's going on. Jared, thank you so much. Appreciate it.
I haven't talked about crypto in a while. Let's take a look at the Wi-Fi Interactive, where we are seeing some definite downside action in not only Bitcoin, but Ethereum, each down about 4%. And here is a 3-month chart of Bitcoin. And you can see after reaching this local peak here in early July, it has just been a steady slog down for Bitcoin, now reaching the lowest levels in about 2 months and also having the worst day in a month. Just haven't seen much volatility lately. In fact, most days you see crypto doing practically nothing. So kind of in and of itself, something worth mentioning. Couple things on the horizon here. We just got Coinbase, one of the biggest brokers in the world, also an exchange, got permission from the Commodity Futures Trading Commission only yesterday to become a futures commission merchant. So this is going to mean that they can sell to their customers futures contracts in both Bitcoin and Ethereum. Anything else that comes down the pike that's authorized by the CFTC. Doesn't really change the regulatory game that much. They still have problems with the SEC, but it does kind of make the SEC look out of step. So let's get back to the charts here. Here's Bitcoin. I was showing you the last 3 months, but interesting thing that's happening over the last year. Guess what? We are now poking just below this lower trend line. So really the bulls want to get above 28,000, 28,500 pretty soon here. Otherwise, it's going to start looking like a breakdown. Now, crypto is known for a lot of false breakdowns. I'm always on alert for one of those, and that usually happens over the course of a few days. So we'll look to see what's happening here in the crypto universe. I can also take a look at some of the crypto stocks. This is just what's happened today. Some of these names like Riot Blockchain down 10%, but a lot of these names have simply been decimated. Here is a year-to-date look, though. You can see huge gains. Let's take Mara, for instance, Marathon Digital Holdings. The local minimum was in January, had a big peak in July, but most of these assets have sold off in the general risk-off fever that we've had. And a lot of that simply has to do with interest rates. We've had the long end of the curve. This is a 10-year T-note yield over the last 3 months. This has been absolutely screaming higher. That puts pressure on Bitcoin. Bitcoin does not offer a rate of return, so the thinking goes, well, higher rates, missing out on something there. There is another alternative. So just in general, when we have these rates screaming higher, it's an easy excuse to sell Bitcoin, and perhaps that's what's happening here. But really want to see 28,500 in the near future for Bitcoin bulls, guys.
All right, Jared, with the levels for us to watch. Jared Blickery at the New York Stock Exchange. Thanks so much.
Well, early this morning, we got more color on the clash between the Securities and Exchange Commission and Coinbase before the SEC filed legal action against the major U.S. crypto exchange in June. Here to tell us more, we're joined by our senior reporter, David Hollerith. So, David, give us some context here.
Yeah, Rochelle, so as you mentioned, the SEC sued Coinbase at the beginning of June for allegedly operating an unregistered securities exchange. Now, in the SEC's lawsuit, they named 13 different cryptocurrencies, including ADA and SOL, which they identified as crypto security assets. Now, according to this story from the Financial Times from earlier this morning, the Coinbase's CEO Brian Armstrong said that ahead of launching the legal action against the crypto exchange, the SEC had asked Coinbase to delist more than 200 of its crypto tokens. And this essentially is everything but Bitcoin is what Armstrong was highlighting. And that is obviously far different from the 13 or so coins that are named in the lawsuit. And the implication here is pretty clear. It's Armstrong is sort of argued in the statements is that, if Coinbase had agreed with the SEC and hadn't sort of opposed it, and this case hadn't gone to courts, it would have essentially set a legal precedent for the crypto industry, which would have stilted it as far as how much it could grow in the U.S. So again, this goes back to the legal murkiness between whether or not a cryptocurrency is a commodity or a security in the U.S. and there's not a clear law decided there. The SEC believes that most everything except Bitcoin in the crypto asset class is a security. And this is obviously now playing out a series of lawsuits in the courts. The latest stage lawsuit of these we would bring up would be the Ripple case against the SEC. So it's also interesting that owning Coinbase stock at this point has kind of become like a regulatory bet for investors on the crypto industry, having sort of a more positive regulatory outlook in the near future. It's particularly interesting if you look at Coinbase's stock compared to Bitcoin. So there's also this ETF situation that's been going on. BlackRock and a number of other asset managers have filed for a Bitcoin ETF, naming Coinbase as a major partner in those offerings. And that, of course, needs to be approved by the SEC. But around the time of the lawsuit and the BlackRock filing, Coinbase's stock has significantly outperformed Bitcoin. And that's interesting because for most of its, since its inception, for most of its trading history, Coinbase's stock has well underperformed Bitcoin. So we're seeing a huge outperformance over the month of July. And we're going to continue to watch that, obviously, on Thursday when the company reports second quarter earnings. And, we'll want to hear more about the regulatory side of things. It is interesting, though, that Coinbase, their financials are important as ever, but it does seem like the legal clash right now is really defining how the stock performs.
Well, amid the surge in tech stocks, small caps and government bonds, one asset class isn't participating in the latest run-up. Bitcoin has held a tight trading range over the last 3 weeks as the industry braces for a critical decision in federal court, where Grayscale Investments, the manager of the world's largest publicly traded crypto fund, is suing the SEC to allow a spot Bitcoin ETF to operate in the US market. Yahoo Finance's Jared Blickery is here with those details. Hey, Jared.
Hey there. And I thought before I got into the court case, I'd just begin with a year-to-date look at what's happened in cryptocurrency land. Bitcoin up 85%. But as you said, Rochelle, we haven't seen a lot of that price action made recently. This is let's get a year-to-date chart on there. And you can see over the last 3 weeks, basically treading water going sideways. However, given the fact that we are in the upper right-hand side of this chart, this consolidation is actually bullish. And when you see what's overhead, let me put a 3-year chart. The most price action in Bitcoin is lying directly ahead, and that's basically 30,000 to 40,000, goes up to maybe 50,000, but a ton of price memory in there. So not surprising to see Bitcoin at least taking a pause, and it could still reverse. But back to the main point, this court case that we were talking about, Grayscale versus the SEC, they want to sue the SEC in order to allow them to convert into an ETF. They are currently an ETN. It gets into the weeds there, but they want to be able to be based their reference price on spot Bitcoin. And we saw, in anticipation of a decision of that in this case, we saw BlackRock file for a Bitcoin ETF, a spot Bitcoin ETF, only a few weeks ago. Then a bunch of other issuers piled on. Fidelity did as well, and they just filed an amendment only today or yesterday with regard to their previous amendment. So things are moving along there, but is it going to be approved? Is the spot Bitcoin ETF going to be approved on its own merits, or is it going to be forced in, shoehorned in because of this court case? We don't know. But nevertheless, Bitcoin poised, I should say, to break higher. But as we know in crypto, anything can happen.
It's true. Always waiting for that breakout moment here. Still waiting for it. But thank you for getting us up to speed. Our very own Jared Blickery there.
All right, Bitcoin has soared over the last month on hopes that regulators are going to finally approve a spot Bitcoin ETF. We're looking at gains of just about almost 17% in the price of Bitcoin, getting a boost after BlackRock filed paperwork with the SEC last month, sparking a new wave of optimism, and several institutions followed. Well, Grayscale has been trying to get approval for a spot market ETF since 2016. Its last request was denied. Now the company is calling out the SEC. For more on this, we want to bring in Michael Sonnenshein, Grayscale Investments CEO. Michael, it's great to see you. And I want to bring up the letter that you recently sent. And we have a full screen here to show exactly what you are laying out. You sent a letter to the D.C. Court of Appeals questioning the SEC's decision to approve a leveraged Bitcoin future ETF after previously denying a spot Bitcoin ETF. So lay out your case here and why these two decisions don't add up.
Absolutely. Well, it's great to be back on the show. I would say that this really comes down to the core argument. When the SEC denied our application to convert GBTC into an ETF, we immediately filed a lawsuit challenging that decision. And the argument that really underpins that is that the SEC has approved not one, but several Bitcoin futures-based ETFs, right? Futures are a derivative of that underlying spot market, but continued to deny, including GBTC, spot Bitcoin applications from coming to market. And those arguments were presented to the court. We believe that they're common sense and compelling arguments, but the SEC now has gone on and continued to even go further into this arbitrary behavior by now approving a leveraged Bitcoin futures ETF, which in the actual prospectus itself outlines that that's an even riskier product, right? And so we do feel here that investors should have choice, right? They should be able to use Bitcoin futures ETFs, they should be able to use spot Bitcoin ETFs, really whatever's going to fit their mandate as an investor.
Michael, why do you think the SEC has been so reluctant? I mean, what's your read on what is driving or what's motivating the SEC to put the brake?
Well, I can really only point to what they've said in their denials, right? The SEC has been looking for a market that is surveillable, a market that maybe has the qualities and characteristics of other markets that they're used to seeing. That being said, there are new conversations being had around surveillance sharing agreements and other types of constructs that maybe the SEC will be persuaded by, but time, I think, will tell.
Michael, many, though, are looking at the approval of the leveraged Bitcoin futures ETF as a positive step forward, given the fact that then maybe this makes it a little bit more likely that the SEC is going to approve a Bitcoin spot ETF. Do you share in that view?
Well, I think there's been a recent wave of ETF applications that have come in, and part of that optimism really does revolve around the GBTC lawsuit. We've been transparent with the market that we expect a decision from the court sometime, could be as soon as over the next few weeks, but probably by the fall, the latest. And so there's a lot of issuers that have been looking at not only has GBTC kind of laid the groundwork and become a place where many investors have gotten their Bitcoin exposure, but it's now the framework upon which they're basing their operations, their disclosure, et cetera. So they believe that that, in fact, could be a catalyst if a favorable outcome is reached there. And it continues to show that investor interest and appetite for this asset class isn't going away. And the continuation of Bitcoin futures, Bitcoin levered futures ETFs, these are all additional access points that investors now have.
Michael, it's been, more than 8 months now since we saw really just the collapse of FTX. And there were a lot of concerns, conversations around that time about what the future of crypto will look like. I mean, you've got institutional names now trying to get in with a spot Bitcoin ETF. I realize the opportunity is there as well. But what do you think has evolved in the thinking within the crypto space? And does that ultimately strengthen the case for investment into something like Bitcoin?
You know, it's great to think about that timeline in perspective, because you're right. It was only, 6-8 months ago that the narrative around crypto was that it was being left for dead, or it was a passing fad, or investors were fleeing it. And what we've said is it's actually quite the opposite. This is my and Grayscale's third crypto winter, and we've continued to reiterate it's a great time to build, and it's a time when, crypto gets challenged and really demonstrates its resiliency. And so you've seen continued optimism, additional, institutional investors coming to the space, and assets like Bitcoin are some of the highest returning assets of the year. And so it really does show the staying power of the asset class, and that additional narrative from some of these incumbent legacy financial institutions is a really important construct for investors to keep in mind as well.
Michael, if we do see the approval of a Bitcoin spot ETF, how much of is that a game changer here for the industry, just in terms of wider adoption? And given the fact that many investors, you would think, want maybe some exposure to crypto, but they're more comfortable going that ETF route.
Exactly. I think the ETF wrapper is a tried and true product model that investors are used to for commodities, segments of the market, et cetera. And I think all of the issuers filing know there's a lot of pent-up demand. And so whether you're looking at GBTC or any of the other products looking to come to market, there are trillions of dollars on the sideline, even just in the financial advisor market, that are looking for a convenient solution to give their clients exposure to Bitcoin. So we do think it could be a material moment for Bitcoin, to say the least.
Okay, to be continued there. Grayscale Investment CEO Michael Sonnenshein, good to have you on today.
Thank you.
The Securities and Exchange Commission reportedly rejecting recent filings for a spot Bitcoin ETF. Bitcoin sliding on the news. Here with more on this, Yahoo Finance's Jennifer Schaumburger. Jen.
Hey there, Shauna. Yeah, that's right. The Securities and Exchange Commission reportedly found that a handful of spot Bitcoin ETF applications just aren't adequate. The Wall Street Journal and Reuters are reporting that the SEC told the NASDAQ and CBOE, which have filed applications on behalf of asset managers, including BlackRock and Fidelity Investments, that their applications aren't sufficiently clear nor comprehensive. The SEC, Fidelity, and BlackRock declined comment. Following BlackRock's lead, Fidelity Investments, Invesco, and WisdomTree were among some of the names who reactivated or amended their applications for a spot Bitcoin ETF. Several managers have filed applications with the SEC for a spot Bitcoin ETF over the past couple of years, only to find them rejected. The SEC has argued that spot ETFs are vulnerable to fraud and market manipulation. Spot ETFs hold the actual underlying cryptocurrency like Bitcoin. The Commodities Futures Trading Commission has approved Bitcoin future ETFs, which consist of future contracts that track the cryptocurrency's price and may or may not move in lockstep with the underlying asset. Bitcoin and other crypto stocks have rallied since mid-June when BlackRock filed paperwork with the SEC. Of course, not looking like the SEC may be changing its mind anytime soon about these Bitcoin spot applications. Back to you.
Jennifer Schaumburger, thanks so much for that.
Bitcoin has been on a tear year to date, up over 80%. The cryptocurrency has held steady around $30,000 for a little over a week, though dipped below $30,000 this morning. Now, crypto took a beating last year following the collapse of FTX and the arrest of the platform's leader, Sam Bankman-Fried, but the price has held steady despite some volatility in the sector this year. The largest crypto platform in the world, Binance, and its founder, Changpeng Zhao, often called CZ, has been in hot water of late, all across the headlines. Now, here in the US, the Binance and CZ have faced probes from the IRS and DOJ, as well as lawsuits from the CFTC and the SEC. Recent suits accuse both of operating illegally in the US, misusing customers' funds, and market manipulation. Our next guest just published a report on the whereabouts of CZ, saying the billionaire is currently hunkered down in Dubai as French prosecutors investigate his crypto exchange for alleged money laundering. Joining us now is Bradley Sachs, Semaphore finance reporter. Good to have you on, Bradley, and we're going to get to CZ in just a second here, but we're looking at this recent report from the Wall Street Journal about the spot Bitcoin applications recently from BlackRock and Fidelity Investments. The sources there saying that the filings aren't sufficiently clear and comprehensive. We saw Bitcoin tumble on that news, dipped below 30, creeping its way back up. But what does this really mean then in terms of where crypto is right now?
It's a very odd space to be in for the industry because we've seen regulators, especially in the U.S., push against this industry. And, I think the SEC has been very clear that there's maybe not even a future for the industry in the country. Yet we have institutional players, BlackRock, Fidelity, Deutsche Bank has filed to be a crypto custodian, distressed debt investors who are making plays on FTX and other bankrupt crypto company assets, who seem to still think there's a future for this industry, that there's still money to be made, that their clients at least want access to these markets. And so there's this really fascinating tug and pull between regulators who either don't want to deal with this or setting very arbitrary laws. Coinbase obviously has been fighting with the SEC for I don't even know how long now, but it's been that kind of no holds bar type fight, and that would typically scare away a big, massive, risk-averse company like BlackRock, and they've kind of gone full bore into it. And the SEC still, with players like BlackRock, players like Fidelity, interested in the space, is still taking its sweet time and getting to anything resembling a crypto positive regulation, which and we've reported this as well as some before. It's pushed these crypto companies to look abroad. We've obviously seen VCs go to London. Finance is obviously been pushed to different parts around the world as we've reported, whether that's Paris, where it's now not as welcome anymore, or the Middle East, or different parts in Asia. And so if you're a venture capitalist in the U.S. looking to invest in crypto companies, you're probably looking outside the States right now.
Will the absence of an asset approved by the SEC for institutional investors to really just pour funds into, will that lead to a further decline in the crypto reaction that we see in some of the more traditional large coins, Bitcoin and Ether or Ethereum, or whatever the household debate is at some of those levels?
Yeah, I think the actual coins themselves have become so entrenched in a lot of U.S.-based investors' portfolios, but also global portfolios, that I don't know how much a spot ETF from Fidelity is really going to matter to a global investor who wants that exposure into their portfolio. There's obviously going to be ways for them to access the big major coins. I think what a lack of regulatory agreement between the industry and even some of these large institutional players will mean is that new startups, new innovation in Web3 and new innovation in crypto is not going to happen necessarily in the States if this is the path that regulators take. It's going to push them to Southeast Asia. It's going to push them to the Middle East. And I think for a lot of venture capital investors, at the very least, that is the trend they're monitoring more so than will Fidelity ETF change the price of Bitcoin day to day.
Hey, Brad, it's Julie here. It's so interesting to me, this moment in time with these institutional investors making these filings at the same time that CZ is sort of bunkered, as you put it, right, in the Mideast. And as you have the SEC pushing back against all of this, I mean, when you talk to institutional investors, where is their interest in this coming from at this point? Because it does seem like, because of the scandals and just popular discourse, has been less crypto friendly. So it's interesting that they're sort of trying to make inroads now.
Yeah, I have been, I guess, surprised at some points too, because you see kind of like the leading figures in the industry continue to get in trouble, whether that was SBF last fall or CZ now, where there is scandal kind of swirling around the people that you put as the Jamie Dimon of crypto or the Warren Buffett of crypto. At the same time, I think these institutional investors are being driven by their clients who, whether they believe in the blockchain technology or just want to have access to this market and don't want to miss out on pretty significant gains, they're responding to their clients' demands. And right now their clients are saying, we don't know what this is, but we don't want to miss the train. And we trust that these big institutions can do this in a risk-averse way, or at least a way that minimizes some of the risk on us, so we don't have to invest directly into even maybe they are investing directly into a Bitcoin or Ethereum, but we don't have to invest directly into whatever is the big crypto startup of the day. We can invest through a fund. We can invest through a kind of managed portfolio where you trust that the people at these institutions know what they're doing. And then in turn, that requires institutions to find people who are knowledgeable about the industry, who are interfacing with regulators and understanding what the risks are, and who are looking most likely outside the States.
All right, Bradley Sachs, Semaphore finance reporter from One Bradley to Another. Great to have you here with us today. Appreciate it.
All right, taking a look at Bitcoin's ascent, that continues. It's still hovering above that key $30,000 mark and bringing the crypto market back to levels it last saw in March before a regulatory crackdown gathered pace. Now, investors are speculating, however, what new regulation could do to the industry, especially given that the SEC suits against several crypto exchanges are still active. Let's bring in now Unicoin president and founder Silvina Moschini. Silvina, good to see you here. So give us an idea of where things currently stand in the crypto space, especially now that Bitcoin is at that key level and seems to be maintaining it, at least for now.
Rachel, it's wonderful to see you. As you know, Bitcoin has died 500 times and it always comes back. And with all these developments on the regulatory side, we do believe that this will continue to be that way because it will bring a lot of investors, many investors that are not yet into the crypto space that will feel more comfortable, that will bring trust into the value proposition that the cryptocurrencies are bringing to the market. So we can only expect this to grow.
Now, there are a lot of different aspects, a lot of asset classes that come under the umbrella of crypto. Which ones are you tending to see investors pouring into more? Is it just about the tokens, the ones used for payments, or the ones focused on blockchain? How are you seeing some of that breaking down?
I think the technology, the blockchain technology, already left the stage. So no doubt that the blockchain will bring a lot of opportunities. But when you come to see the crypto assets, the cryptocurrencies, what we're seeing more and more is that people are preferring the cryptocurrencies that has assets backing and that are transparent and that are protecting the investors. So more regulation, asset behind no intrinsic values. You see, tokens like Frogcoin has peak on the market and go up and down because it doesn't have anything that are backing them. And we see much more growth towards better investment and transactional instrument value propositions that bring the best of the financial world and the best of blockchain technology.
And of course, along with the financial world comes the eyes of regulators. We saw from Federal Reserve Chairman Jerome Powell, he called for more regulation when he spoke with the U.S. House Financial Services Committee last week. And here's what he had to say, especially about stablecoins.
We do see payment stablecoins as a form of money. And in all advanced economies, the ultimate source of credibility in money is the central bank. And we believe that it would be appropriate to have quite a robust federal role in what happens in stablecoins going forward, and that leaving us with a weak role and allowing a lot of private money creation at the state level would be a mistake.
So I want to get your take on the Fed sort of stepping in, if it did come into that role with stablecoins, versus how we're seeing the SEC and other regulators trying to approach this.
I love it. And what I'm seeing is that what is happening is something similar to what it happened in the first .com revolution. I have the opportunity to be part of a .com company back in 2000. And is the evolution towards the generation 2, the second generation, where a much more contained framework, much better rules are here to stay, and the Wild West, in which we just, fortunately we gone through, in which there was no regulations and a lot of bad players have to change. So I'm very positive about this. I think it will bring trust into the market, and legislators need to learn more. They need to be prepared to participate more actively into this new development, but I'm very optimistic about this.
Now, one thing that did fuel some optimism, BlackRock making its efforts there for the spot Bitcoin ETF proposal here. If that does get approved, first, how likely is that, do you think, to get approved? And what will that open up for the crypto space?
I think it's very likely to get approved. Bitcoin was the best performing asset class of the last decade, and it will bring a new area, a new level of trust, and it will basically redefine when institutional investors get into something that was started by an anonymous person to bring anonymity, and now it's reaching to new heights by basically becoming the new norm, the next generation of crypto asset. It's only to be positive. And money evolves. Like, it was first sold gold, the barter of merchandises, then plastic and emails, and now is blockchain technology. So I believe that this will just start a new area, a new revolution into the crypto space.
And Silvina, I know you were ahead of the game when you founded Unicoin. For people who are wondering then, where does Unicoin fit in with some of these other tokens and systems? And what does the next wave of crypto innovation look like? Where does it go from here?
Rachel, we took a leap of faith by going straight to a regulated public reporting cryptocurrency. We thought that this was going to become regulated because this is what happened in new industries. Like, they get started on the illegal side, like Uber, and then it becomes more regulated. So for us, it was about bringing something that people can trust, but also creating intrinsic value. So we move into development a very large portfolio. By now we have $500 million of pre-sales, and we are creating a real estate portfolio by swapping unicoins for real estate, and we plan to take it to exchanges this fall. So it's a proof that better financial industries can be created if you follow the rules, but you are innovative enough to find the spot where they need to be improved, and also have in mind how to democratize access to investment opportunities for people, bringing products that people can understand, that make sense, and that can be accessible for the majority of people who has even a small amount of money to participate in the wealth creation economy.
It's true, because when crypto was first starting, a lot of people thought, look, this is something to level the playing field, get the unbanked involved, get people who aren't perhaps represented. And I know you're one of the few women who I see on a regular basis who are really involved in crypto, not just as an investor, but also with your own coin. Talk about how much you've seen that grow. Are you seeing more women coming into crypto, both as investors and as also creators of value here?
I would love to tell you that I see a lot of women coming into the crypto world as entrepreneurs developing this type of solutions, but unfortunately we are behind. But what I see is that women are investing in crypto as the second asset class after fiat currency. So I'm very positive that it will break the barriers of that very sad relationship that women have with money and with the idea of owning it, and allow especially younger generations to embrace the concept of creating wealth. So I'm very optimistic. I think that, since Shakira, we are, as women, taking control of our financial future. We're making money instead of crying, and we hope that crypto will bring many opportunities for women to embrace that concept as well.
Certainly hope so. Really good to talk to you today. A big thank you there to Unicoin President and Founder Silvina Moschini. Thank you so much.
Thank you.
Crypto prices lower today, but momentum has been strong this year. And now some of the biggest names in finance are making new bets on cryptocurrencies, adding competition and momentum to the space. Yahoo Finance's David Hollerith has more on that story. And David, nothing like a boost of confidence, right, from Wall Street to get investors bullish on crypto again.
Right, Akiko, yeah, the big finance player moves that we've seen in the last 2 weeks obviously started with BlackRock filing an ETF. We also saw EDX markets begin trading, and they're backed by Fidelity, Charles Schwab, and Citadel Securities. And that's a new crypto exchange that doesn't interact with individuals, but kind of serves more like a traditional exchange. And then we have Deutsche Bank also applying to be to custody crypto assets And outside of BlackRock, a lot of these moves were previously telegraphed as far back as a year. But obviously, this came at a really good time, I guess you would say, for the space, just given that a lot of this year so far the story has been regulatory enforcements in the U.S. Leading to lawsuits, and that's still a lot of what we're looking at to determine where things are going. Regulation, of course, in the U.S. is a really big deal, but we've seen obviously the Bitcoin price has surged a lot, and then the total crypto market cap has followed along with that. And we've seen even just higher inflows into Bitcoin associated exchange traded products. So there's a lot of enthusiasm about this. Some of it, most of it actually was previously reported. But I think that it's kind of a reminder that cryptocurrency hasn't gone away as much as it might seem sometimes. When we see earlier this month, in fact, the SEC filing charges against the two largest crypto exchanges in the world.
And David, to that point, at least up until this point, when you take into account the massive run-up that we've seen in the price of Bitcoin, up about 80% year to date, it hasn't yet had a massive impact, but I guess you can make the argument that it's coming off a very depressed level after the implosion of FTX. But what do you think are the key things that investors need to watch for when they're trying to figure out where Bitcoin, where crypto is headed in the second half?
Yeah, always a good question. I think it's fair to think about it this way, which is that regulation has really dominated cryptocurrency asset prices, maybe Bitcoin the least, but still Bitcoin has sagged on bad regulatory news. So regulation is still going to be a major focus. But as things get cleared up, at least I think with the BlackRock and EDX sort of announcements, there's sort of a signal that U.S. businesses or financial institutions, I should say, are still interested in getting involved in the space, and I think that kind of brushes aside some of it. That being said, from what I've heard from crypto hopefuls in Washington, it sounds like there are two bills that are getting ready to be voted on in the House in July. And I've heard sort of optimistically that one of those two bills could be passed in the House by the end of the year. There's a lot less optimism for what could happen in the Senate. And then that being said, the most important lawsuit as far as the ETF goes is the Grayscale lawsuit. Grayscale is suing the SEC for not approving its spot Bitcoin ETF or approving a conversion of its existing product. So the verdict for that case comes out at the beginning of September, and that's going to be really important. And we don't have the exact information. We don't know, but it'd be hard to imagine that the SEC would even consider approving an ETF before that verdict is reached.
Okay, I know you'll be following those developments closely. David Hollerith, thank you.
Meanwhile, Bitcoin hovering around that $30,000 mark after getting a boost from the potential launch of BlackRock's Bitcoin ETF. But our next guest warns that this won't shield the asset from its first U.S. recession. Mike McClellan, Bloomberg Intelligence Senior Macro Strategist, joins us now. Mike, good morning, first off. So tell us about so crypto had been going through what we call a crypto winter, which includes Bitcoin, obviously. But it's seen a bid recently. Why do you say that it is? I mean, this seems like it's temporary, I guess.
Well, Bitcoin bulls hope it's not temporary. The key reason it had this bid recently because the BlackRock application for an ETF. Most people think that means they will be approved in the U.S., but that's still an if statement. It might not happen this year. And the key thing to remember about Bitcoin is when this whole situation started with COVID, it went down with the NASDAQ, went up with all the liquidity. It's gone back down. Now it's gone back up with the stock market. So for it to show divergent strength away from the stock market, I think it has to probably get through this recession, which we all know is coming. If you certainly look at the yield curve, it's a matter of time. And to see if it can show divergent strength with the stock market going down. As the Fed has pointed out, they are not going to be there to cut rates, which probably is bearish for equity markets. Or does Bitcoin outperform on the way up? I look at it as it's got to prove itself. And at 30,000, about 3,100 this weekend, at 31,000 this weekend, I think it's just a little bit too risky here, particularly if we tilt over to that recession that brings most assets, risk assets, lower.
Hey, Mike, it's Julie. It is fantastic to see you. So it sounds like you don't think it's going to hold above 30, certainly in the near or even medium term.
Well, I'm much more worried that of the whole tide going out because of this recession and the risk that everybody's priced in for the bullish scenario. The Fed's going to ease, the Fed's going to save us, yet Jerome Powell said he's not going to. You look at the interest rate expectations, there's not going to, there's still price for higher rates. And we're getting liquidity pools, meaning higher rates in England and Canada and most of the rest of the world. That's just not a good environment for an expanding global economy that's maybe tilting over to recession. People are hoping for, even if we go for recession, the Fed will ease and save these risk assets. The key point is Bitcoin is still very much trading like a risk asset, like the stock market. Now you look at things like gold and treasury bonds, they might be better off. So it's got to prove it. And the best way to prove it is to get through this recession and prove it. Otherwise, it's just a faster version of the stock market, which I think most people are looking for, this faster horse in the race to transition to trade more like maybe gold and long bonds. And basically, you have to be bullish the stock market here and expect Bitcoin to outperform. Otherwise, to me, the key risk is the tide goes out and Bitcoin's the fastest horse in the race, and it kind of leads the way.
Mike, so we also know there's been a crypto crackdown, if you will, when you think about Coinbase, Binance. What do you make of the regulatory climate for crypto? It seems to be simmering recently, but that it could just be a back burner thing right now.
It's going to last for a while, but this is a revolutionary technology. And oftentimes that's what humans do when something comes in that they don't understand, which is okay. The key thing about the crackdown, I think, is prudent, is we have to purge some of the massive speculation in this space. All revolutionary technologies have massive speculation. I was reading this weekend about RCA, the radio company, went from 3 to 300 and then back down. These things happen. But there's 25,000 cryptos that needs purging. And then there's Bitcoin and Ethereum and crypto dollars. That's very significant revolution technology. The key thing is Bitcoin's going so far, so fast, and it still just has it's got to prove it's not just going to go up more than the stock market. And that's the key thing that most of our viewers and listeners have not lived through, a true stock bear market where it drops 20%, the Fed doesn't save you, and then it drops another 20%. To me, that's the risk in the broad market.
Mike, I want to turn to more traditional commodities now, especially in the back of the news out of Russia over the weekend, where the coup seems to have been averted. We are seeing a little bit of a lift to oil prices, but not that much. But maybe this is a reminder for us, right, that the situation's still happening. The markets have sort of adjusted to this as the status quo, but that can change, right?
Well, it is great to see you, Julie. I glanced down to see you on the screen a little bit. I haven't seen you in a while since working with you at Bloomberg. But crude oil commodities are a bear market. They're down. They were down almost 30% for a little while from the peak, down 20% now on a year-over-year basis. And the key question you have to ask yourself is what's going to stop this and save it? Typically, it takes a long and variable lag, the Federal Reserve easing. What are they doing? They're still tightening. Now, you see what's happening in China. China's leader made a major mistake of his unlimited friendship with Mr. Putin. And what's that doing? Overall, to me, it's tilting the whole world towards recession. China's having a problem with all the data is disappointing. That's the body in motion. You have to ask yourself what stops it. So I see crude oil is more likely to head towards 50, maybe even 40, priced on what's already happened. Natural gas has already done that. Natural gas went from 10 to 2, and now it's bouncing. And I see the whole commodity market in a bear market, and the question is, I don't see anything stopping it. So I think the best commodity might be continue to perform well in the next year or so is probably gold as we tilt towards recession. And maybe we eventually get a Federal Reserve pivot or ease. But for a commodity bottom in the commodity market, typically we are way too early. Typically, you need to see a lag to easing, and we haven't even started that yet.
But Mike, okay, so you're seeing crude head down to 50 right now. We just put up a chart where crude is sitting near $70 a barrel.
Yep.
You know, I mean, that seems like such a sharp drop from where we are now. And you know, the talk of a recession is starting to kind of be pushed back from a lot of analysts and economists that we speak to. What's the base case for crude heading to $50 a barrel?
So I like to ask, what part of an inverted curve, plunging commodities, and the Federal Reserve and most central banks still tightening leads to the recession being over? Right now, we're seeing a bounce. But I did make the call for $50 a barrel a long time ago when it was much higher and it was on the way up. That is the trajectory. The key thing is that's what it always does, is commodities always go towards near their cost of production in the long term, in particular when economics get a little dicey. And that's happening right now. $50 is the average cost of production in the U.S. In natural gas, the average cost of production is around $2. That's where the market's bottom. So right now, the key question I like to ask you and our viewers and everybody else is, what stops this bear market in crude oil? OPEC's trying to help by cutting supply, but typically what happens when OPEC cuts supply, that happens in bear markets. They're responding to what they see in the macro in a prudent way for a cartel that's trying to boost prices.
Mike, presumably, if indeed there was some sort of resolution to the conflict in Ukraine, some sort of change in leadership in Russia, you could envision a scenario where you would actually have a pretty big increase in oil supply, right? It probably wouldn't happen right away, but would that be the outcome?
Well, that I think that's a good point. First, so I would expect grain prices to go lower. They already have, because the supply elasticity picked up. Remember, Brazil had a bumper crop last year because of prices. Crude oil would probably collapse. I think it would be very good for the global economic situation that pressure from this war would be alleviated. To have a change in power depends on who comes in and how they do it. But overall, that would be a relief, and it would accelerate the commodity bear market, I think. And that's the key thing to remember, is we're in a bear market. What stops it? Typically, you need some major catalyst, and usually it's from a demand side. And usually from a demand side, you need global economic demand pull, and typically you need some help from some Fed and central banks.
Mike, great to see you. Mike McGlone, Bloomberg Intelligence Senior Macro Strategist. Be well. Thanks.
Thank you.
Well, Bitcoin is enjoying its time in the sun again this week as shares pushed higher amid a flurry of U.S. applications to start ETFs investing in the token's spot market. With more on the latest crypto action, we have Brady Dale, Axios crypto reporter and author of SBF, How the FTX Bankruptcy Unwound Crypto's Very Bad Good Guy. Brady, good to talk to you today. We're going to get to the book in just a bit, but let's talk about the action that we have seen in Bitcoin. It feels like the bulls have come out yet again after what has been sort of, kind of a quiet period, we should say, after the collapse that happened last year with FTX. Is the confidence coming back, you think, within the space?
Well, 30,000 has kind of been like the base in the bear market, so it's kind of like back to the base again. But there's a certain irony in crypto where like the whole thing started to, blow up the traditional finance system, and yet historically nothing gets crypto people excited like people from the traditional finance system showing interest in it. So that is the primary explanation for this week, but also Bitcoin, if you bought in at the start of the year, has had a good year. It's been going up all year since that first fall, as people move out of altcoins, out of the more speculative parts of the market, and move into Bitcoin as something of a safe haven, for crypto believers, obviously, not a safe haven for regular investors.
Brady, though, how big of it, though, do you think it is just in terms of the boost of confidence, maybe for those who have been on the sideline now that more institutions are showing their interest in this or confidence in it? What do you think it's going to do maybe to the conversation 1, 2, 3 years down the line?
Yeah, who knows? It's really tricky because we have the Washington, particularly the Biden administration, fully attacking crypto, in every possible way that it can, and yet we have a few really big institutions, coming in a variety of different ways. So it just remains to be seen. I don't think we really know anything yet. This is a very volatile market. This is just a week of excitement. That doesn't mean it's going to stay up next week. These things move really fast in this world.
Yeah, to your point, though, does this hammer home the point that at the end of the day, it is about institutionals increasingly getting in or increasing their exposure to the space that will allow another leg up, at least if we're talking about the big assets like Bitcoin as well as Ether?
Well, once big institutions get in and stay in for good, that will certainly be a step change for the crypto market. Institutions were playing around a significant amount in the prior bull run, and that's when Bitcoin was around $69,000 a year, and we're still a really long way off of that. So, but in that time, they came in and they were only there to sort of take gains, and as soon as things started to fall, they didn't feel safe and they got out in a big way. we'll know that things are different the next time there's a big run and then there's a fall and some of these big players stick around and don't get scared. They came in last time and that was different. They didn't come in the prior bull run, but then they got scared. This time they're coming in the bear market, so maybe that means they do stick around when things go down again and they don't get scared, but it just remains to be seen.
Brady, what about, though, the odds of the Bitcoin spot ETFs getting approval, right? Because they've tried
I say
this
no
before.
way in the Biden administration. I say no way in the Biden administration. That's my call. I don't think it'll happen.
Interesting. What do you think needs to change in order for it to happen down the line?
A new
Other than
administration.
the administration.
Yeah, I mean, honestly, it's just this administration has just, at this point, with all the things they've done, they've just made it clear that they're not interested in crypto being a part of the U.S. economy, right? There is nothing that's come out of anything related to the White House that has shown any positive sign in any way. It's a full attack. I can't explain why, but that's the case. So I don't think there's anything anyone can do. I think BlackRock knows this. I think they're just, getting their feet wet. They're sort of figuring it out, getting a rejection in, sort of letting the world know they're interested. And then when there's a different administration that's a little more open to it, then they'll really do it. But I mean, I could be wrong, but I don't think we're going to see a Bitcoin ETF with Biden in the White House.
Are we likely to see more of a regulatory clash moving forward, given the SEC's recent actions against Coinbase as well as Binance? Yesterday we had Senator Cynthia Lummis, who's been very supportive of crypto, on saying she's going to reintroduce an improved version of the bill she introduced last year, but really that the SEC's recent actions increases the urgency and the need for additional regulatory action.
Yeah, I mean, I think what's happening in the legislature is interesting. Again, I'm not really holding my breath for anything to get passed. These are very long processes where, coalitions have to be built. And so I do think there is a cadre of the legislature who really wants to do something, but it's going to take time. And the other thing that's making this really hard, in terms of anything really happening, is crypto has frankly become a partisan issue. I mean, this isn't 100% true, but by and large, it's something that a decent number of Republicans like now, and most Democrats don't like, and that is not helpful in terms of getting things to move along. When I started covering this industry, it was just something that some set of younger legislators thought was kind of interesting, and most everyone else thought was weird. It wasn't partisan. But now it's gotten to be pretty partisan, and so that is going to bog things down.
Brady, what do you think is the single biggest driver to Bitcoin in the near term, given the fact that it doesn't sound like we'll be getting any sort of regulation, any sort of approval for a Bitcoin spot ETF anytime soon? So what is that number one thing that potential investors should be watching for?
Well, I do think big players coming in is really powerful. I think the thing that's also being a little bit missed right now in the larger conversation about Bitcoin is, there's been more activity on the Bitcoin network itself this year than ever before because there's been some weird new technologies built on it. There's now NFTs on Bitcoin. There's other coins on Bitcoin because of this upgrade called Taproot. People have been pretty excited about that. So it shows people are really using the network, and that might be one of the reasons why institutions are just like, okay, this thing's not going away. Let's start even build something for it. But a crucial thing to keep in mind about the stuff that's come out this week is almost all of it is stuff that's built for institutions to institutions. None of these big guns are giving normal people a way to come into it yet. But yet, these folks have tons of money. So if lots of that comes in, that will be good for price long term.
Finally, Brady, I want to get back to your book. It sort of reiterates the title here, because I think it says a lot about how people viewed Sam Bankman-Fried, the FTX bankruptcy unwound crypto's very bad good guy. Yeah. I'm curious what more you learned in the process of writing this book, but more importantly, to what extent is what happened with FTX, specifically SBF at the helm, how much of that was specific to the company? How much of it was a symptom of the space as a whole?
Oh, I think it's all specific to the company. If anything, and I write this in the book, the FTX story is illustration of the fact of Satoshi's point overall. Don't trust, verify. I've created you a technology through which you don't need trusted third parties. And yet everyone wants convenience, and so they use a trusted third party. And it turns out this was a third party you couldn't trust. So it is entirely the fault of SBF and FTX. It's not inherent to crypto.
All right, Brady Dale, Axios crypto reporter, also author of that book, SBF, How the FTX Bankruptcy Unwound Crypto's Very Bad Good Guy. Thanks for joining.
Thanks so much.
Well, Powell's crypto commentary in front of the House on Wednesday sent Bitcoin surging, now hovering around $30,000. But is the cryptocurrency being overbought? We have Yahoo Finance reporter Jared Blickery with the breakdown for us. Hey, Jared.
Hey there, Rochelle. Just look at the green here. This is only over the last 24 hours, but Bitcoin, Ethereum, each up for more than 1%. This comes after an interesting day, not only with Powell in front of Congress, but also some of those Bitcoin ETF service providers. They have filed for a new Bitcoin Cash ETF. That is a spot ETF, or excuse me, Bitcoin spot that trades what it does in the cash market as opposed to the futures. And this has important implications because we know Gary Gensler has been coming down pretty hard this year over on a lot of entrants into the crypto space. All of these lines here on this chart represent a filing or an expected filing against a member of the Bitcoin community. Here we have the SEC suing Binance and its CEO. We also have Coinbase as well here, and that was at the recent lows. But what I really want to point out is that we are in a technical pattern right here. We have an uptrend overall. You can call this a bull flag, and I think the market was just looking for a catalyst to break out, and it did to the upside here. That is what it tends to do, continuation of the overall trend. But one thing I have been noticing is the correlation with tech, and especially the mega cap stocks, has not been holding true over the last few days. Sometimes markets decouple, sometimes they come back together. But you take a look over the last 4 days, this blue line, the cyan line down here, that is the NASDAQ 100, which is slightly down, actually down about 1.5%. And then we have the ProShares Bitcoin ETF, BITO, that is up about 18%. So quite a big divergence there. And the divergence didn't start today. In fact, we've been seeing this for some time, a decoupling between what was, I would say, last year, a close correlation between the stock market and crypto, and now a little bit different. Here's a year to date, and the steady cyan line right here, this is the QQQ that we were just looking at. And then we have BITO, that's the Bitcoin proxy I'm looking at here. Here's that bull flag. Even though it is a bull flag, you'll notice the trend is down over this very short period of time. But then we finally got resolution popping back up to the upside here. And just to give you an idea of how much more volatile crypto is than the ordinary market, we can see a lot of these swings in here tend to be a lot bigger when we consider what's happening in the crypto space. So overall, I'm just going to go back to our heat map here. I'm going to show you what's happened over the last 4 days. Really positive technical action. But to answer the original question, is Bitcoin overbought right now? Could be a little bit overbought. Here's that year-to-date chart. I was looking at one measure of being overbought, which is RSI. It's a scale of 0 to 100. It's not even past that 70 period. And so anybody looking at a chart might say, well, it has a little bit to go. Based on the technicals here, you'll see that it almost matched this high, or actually did exceed this high right here. And that would probably be cause for a pause. Maybe a little bit more, hard to say.
Indeed. I know a lot of crypto enthusiasts have been waiting for that breakout moment. We'll see if this can hold. A big thank you there, as always, our very own Jared Blickery there.
All right, let's bring back in Anastasia Omarosa, iCapital Chief Investment Strategist, for more on the current state of the crypto market. So Anastasia, I got to point this question to you. So it just seems like it's risk on in general. So is that what's happening here from your view in terms of crypto?
I think that's absolutely one of the things that is happening. When you look at Bitcoin, it has been more correlated to the NASDAQ recently than it has been to other things. So the fact that the Fed is seemingly pausing and risk assets are rebounding, that's also propping up the price of Bitcoin as well. I think that's one thing. The second thing is, of course, the Fed expectations, and the reason why it's really difficult for Bitcoin to do anything throughout 2022 but go down was because the Fed was aggressively hiking rates. You were getting paid on your cash, and inflation was elevated. And now if the Fed does eventually pivot to staying pat or maybe cutting rates, then that advantage of holding cash, once again starts to potentially go away as well. So that's longer term, but again, incrementally supportive to Bitcoin. But I would say there's one more factor that is driving the price move here, and that is Bitcoin and the crypto ecosystem has been through a hugely enormous important test, whether they can actually withstand the test of time and sort of the test of some of the scandals that we saw in the crypto space last year. And the fact that institutional investors are still stepping into the space and still stepping into Bitcoin, that really tells you that this is an asset class that is most likely here to stay. And amidst, I think at some point there's 6,000 different crypto protocols out there. Amidst those 6,000, the ones that are not viable have fallen away, but the ones that are here to stay, like Bitcoin, are gaining strength.
And Anastasia, do you all have a recommended allocation to Bitcoin at this point? How has your thinking sort of changed on that over time?
Yeah, we've thought about this a few years ago, and like I've always thought about Bitcoin or maybe other areas of cryptocurrencies as a tech asset. The reason why somebody would invest in Bitcoin, could be potentially because they don't trust the Fed or the U.S. government to do a good job managing the currency, or they want to have another means of payment transfers. And also it's a more efficient, potentially more efficient way to do cross-border payments. So there's a technological aspect to Bitcoin, but there's also a volatility that is associated with that is much more in line with a high-flying, high-beta tech stock than anything else. So when thinking about sizing that allocation, I would think of it as sort of one of the tech holdings in a diversified 30-plus stock portfolio. And so when you think about it that way, an allocation somewhere between 1% to 3% of the overall portfolio, that's what we would guide as a starting point. Now, obviously, as the asset class gets more established, gets more regulated, and perhaps the volatility subsides, there's scope to increase that allocation, but I would start small, 1% to 3%.
Speaking of the regulatory climate, Anastasia, so when you look at, say, Binance or Coinbase and the issues going on there are different allegations for both of them, but you're certainly seeing that crypto crackdown that, the SEC talked about. Do you, one, think it's warranted, or do you think they're kind of two very different types of companies that we're dealing with here, where we're talking about Binance or Coinbase?
I mean, I really think the regulators are trying to figure out exactly how they want to regulate the space, and we're sort of seeing that play out. But the fact that, there is so much more regulatory attention and trying to draw the distinctions between the companies, I think that's a long-term positive for the space. The other thing, too, when you go outside of the United States and when you go to Asia and other places, there's regulators that are also trying to legitimize and regulate parts of that crypto ecosystem. So to me, that's a really important part. So I don't want to comment on specific, stocks, public or private, but the fact that regulators are paying attention, I think, is a very positive thing for the system.
Anastasia, good to see you. Thanks so much for joining us this morning. Anastasia Amoroso is iCapital Chief Investment Strategist. See you soon.
Great to see you.
There's another hot topic that we got to get to, and that is the crypto rally. It's escalating this morning with Bitcoin climbing above that $30,000 mark. It's not hit since April, and it's been a difficult level to reclaim. Could be tested today, perhaps on Jay Powell's remarks. But Bitcoin has climbed by about 20% since June 15th. That's when BlackRock said it was filing for SEC approval of a spot Bitcoin ETF. Yahoo Finance's David Hollerith joins us in studio with the latest. It's been a really interesting move here. And that was a surprise filing from BlackRock. We've gotten some other filings too. Is that what's going on here? Is it that there's this final move that a lot of people have been waiting for?
Yeah, I mean, it's always tough to pin it on to pin a rally on something, and it does seem like it started a week ago, right? With the BlackRock filing. And since then, obviously, we've seen what's become, the Bitcoin ETF horse race, which is like all these different asset managers have since filed. But we've also seen other moves, like Deutsche Bank has applied for a digital asset license in Germany. And then EDX Markets, which is backed by Fidelity, Charles Schwab, and Citadel Securities, is launched. And they're a new crypto exchange, and they look to be completely traditional finance backed. So there's like a lot going on here, and we're kind of getting a sense that it's maybe a winds of change for the sector. And obviously, earlier this month, we saw these lawsuits against Binance and Coinbase. So it's a very interesting time, and I think a little bit complex too.
Is the crypto winter over, if you will, or is it still, kind of just taking a little bit of a backseat while you get some credibility from this ETF?
A false spring.
Yes,
Yeah.
there we go. I like that analogy.
Yeah, I mean, I don't know. I think I saw one interesting interpretation, which is just that, cryptocurrency, Bitcoin has been doing great this year, but in some ways, the AI S&P rally that we saw last month hadn't really caught up with cryptocurrency. So in some ways, this might be interpretation, with these announcements that it's just sort of a shift and, cryptocurrencies is catching a bid now. But I think it's pretty early to declare any sort of end of the winter. But if you talk to like a technical analyst, they'll look at the charts and say that Bitcoin is out of its bear market. We'll see if it stays there.
I saw a comment yesterday that you're not in town very often, and I saw a comment, I think it was Joe Weisenthal yesterday, who said there is now a Bitcoin mined heated spa in Brooklyn. Like the Bitcoin mining generates the electricity that makes the heat for the spa. So you'll have to go visit.
I feel like we need a field trip for that.
Exactly.
Like, see what's going on.
Yeah, a little field reporting for sure.
Indeed.
Good to see you, Dave.
Yeah, great. Yeah, great to be here, guys.
Thank you for joining us. We appreciate your insight. Great reporting as usual.
Bitcoin extending its run higher, now topping 30,000, and it comes as Wall Street is giving the sector a vote of confidence thanks to a new exchange and ETF applications, and those were coming from BlackRock, Invesco, and WisdomTree. But our next guest says that even though we're seeing strong performance in crypto ETFs, the flows are still lagging. Joining us now is VettaFi Associate Research Director Roxana Islam in this week's ETF report brought to you by Invesco QQQ. So let's begin with the latest news here. And I want to call up the Wi-Fi Interactive where I have a 3-month chart of Bitcoin on the screen here. And you can see this down movement right here. That was actually a bull flag as part of another big uptick here. But in the last 2 days, really broken up. And I would say that the stage was set technically, and then we got word of the WisdomTree and the BlackRock ETFs. How much, and this is for a spot Bitcoin ETF, which is different from the futures Bitcoin ETF, is this really going to move the needle?
Yeah, I mean, I think this is an exciting event, among some of the action that we've seen this year. I mean, for a while, everyone was sort of looking at crypto and they weren't as interested as they were in the pandemic. And now everyone's been talking about crypto ETF performance again this year. And, if you look at some of the best performing equity ETFs year to date, a large portion of those are actually crypto ETFs. The best performing ones are, something like WGMI, which is giving you 170% year-to-date return. But there's been that huge mismatch between performance and flows. Normally, when you see something like that, that's giving that much performance, you're going to see investor inflows. And obviously a lot of that is based off of underperformance in 2022. But it doesn't change the fact that, if you're an investor and you got into this early this year, you would have made potentially 170% return. So, there's still this huge disconnect between flows and performance. And so I think investors are still shying away. But, now we're definitely seeing some interesting news coming here with some of these spot Bitcoin filings over the past couple of weeks.
Yeah, I mean, is that what's going to continue to drive the inflows? What have you seen in terms of the headlines that have particularly turned investors back to crypto after what we saw in the latter half of last year?
Yeah, so I think, first of all, there's several different types of investors we're dealing with. There was a lot of people that got into crypto during this crypto craze in 2020 and 2021. Maybe they were burned in late 2022, and now they're just not interested in crypto anymore. They don't really care about the good news. They don't really care if there's growth potential there. They're just hands off of crypto. And then there's maybe some bulls out there who, are still looking for some of that exciting price action. Maybe they were sort of waiting in the headlines earlier this year, waiting for something, maybe news like this to sort of boost the prices and sort of add to their positions. So, you have to consider several things. And, a large portion of these crypto ETFs, for example, are crypto equity ETFs. A lot of these are thematic in nature. So these have, broadly faded in popularity. People are a lot more into some of these large cap technology and communications names, things like semiconductors. And then from a thematic perspective, they're into, artificial intelligence has been the buzzword this year rather than crypto and the metaverse. So, a lot of people are seeing that as something that's, a little bit more tangible than maybe blockchain is, which is still something that you have to explain to an investor. So I think there's several factors going into this. this, but definitely there's still some investor interest and investor demand when you see these spot Bitcoin filings coming in.
I want to talk about bubbles and also AI. And first, let's go to the Wi-Fi Interactive. I'm going to show everyone a 10-year chart of Bitcoin. And I'm sure people here, some of us, remember what happened in late 2017, early 2018. That's when Bitcoin first peaked at 20,000. That was when a company could affix blockchain to their name and just see a meteoric rise in their stock price. And that gave way to another bubble a few years later. I'm just wondering where we are in the cycle here, especially with the rise of AI. Is there still room to get excited about blockchain and Bitcoin and Ethereum and NFTs in the way that we did a year ago, 2 years ago?
Yeah, I mean, and I think the market is still normalizing. If you look at what the crypto ETF market is now, it's actually a lot larger than a lot of people think. There's about 25 different crypto ETFs out there. And, there's a handful of those futures-based ETFs, but there's about 15 of those crypto equity ETFs. And so a lot of those crypto equity ETFs, they hold very similar things, and a lot of them are very small. Only a few of those have over 100 million in assets. And a lot of those are also, very relatively new. They all basically launched between that time frame between 2021 and 2022. And the latest of those actually launched in September 2022. It's been pretty quiet since then, except for a few closures. We did see about 3 of those ETFs close since 4Q22. And then also some of those crypto adjacent ETFs like NFTZ, for example, which was the first NFT-focused ETF. So, there's been some sort of consolidation within the industry, but, there's still that race towards the spot-based Bitcoin ETF, which I think has definitely picked up with that the BlackRock filing. That's something that is still very much in demand. And I think, once one person files, a lot of people will sort of fall into that race because there's a big first mover advantage when it comes to something like a spot Bitcoin based ETF.
Okay, well, we are seeing a big bump, at least on this day. Roxana Islam from Vetify, good to have you on today.
Looking at Bitcoin climbing towards $30,000, its highest level since early May, as more traditional finance firms are betting big on crypto initiatives. Investors are pricing in more of an upside since the news of BlackRock's Bitcoin ETF filing. But will the bullish sentiment stay? And if so, for how long? Well, for more on the crypto market, we're joined by Chris Ferraro, Galaxy Digital President and Chief Investment Officer. Thank you for joining me this morning here. So on the one hand, you have BlackRock entering this space here, and even Invesco applying for a spot Bitcoin ETF in conjunction with Galaxy Digital here. What does this mean when you have this sort of institutional push coming back into the fray?
Yeah, good morning. Thanks for having me. Look, while I can't comment directly on the filing with Invesco that we were involved in, I think investors should take away that this is anything but bearish for the future of institutionally adopted, regulated cryptocurrencies, not just in the US, but globally. We chose to partner with Invesco almost over 2 years ago now, and we set out with a goal of creating and launching and co-branding institutionally compliant and regulatory compliant access vehicles for investors to touch and own and get exposure to digital cryptocurrencies. We're starting with the Bitcoin ETF. And Invesco is one of the largest ETF issuers in the world. And so we're excited to partner with them. We think it's about time that the US entered the fray in terms of providing exchange traded regulatory products for retail investors to get access to cryptocurrencies. Other geographies around the world have already launched these products, and there's no reason why the US can't jump back into the fray and actually take the lead. And we think doing it the right way and partnering with Invesco is the right way for us to do it.
Now, for a lot of people who are sort of, your crypto purists, I know some of the social commentary I saw online described this institutional push as the wolf entering the hen house. Do you think that's fair, though, when you think of what we've learned ever since the FTX debacle about sort of the need for some of perhaps the traditional finance aspects, along with the innovation that comes with the crypto space?
Yeah, no, I think this is actually a natural evolution. I think the innovation always tends to be messy and fast and then have to reset itself. And we've seen that through technology cycles over and over again. And there's no difference in cryptocurrency. The market has made huge strides in terms of technological advancement, in terms of launching new technology forward networks that have higher throughput, higher security, sort of meet all the criteria for actually launching decentralized and secure blockchains. And 2022 was really a unfortunate negative catalyst where that innovation and need to break things first really caught up with the industry. What's super exciting and actually I think heartening, and what everyone should take real careful notice to, is in the background all along, traditional financial institutions, banks, broker dealers, custodians, retail platforms, you name it, have had dedicated teams building and are now at the point where, while the old industry players a lot of them have stepped aside or have been forced aside, they are stepping into the market. And this is a good thing, because those providers stepping into the market are going to provide the safety and the security for global adoption of the asset class for all investors to feel comfortable taking exposure, which historically was for only the most crypto native and sort of seasoned investors, a thing that they could do safely and soundly. So I think it's a natural progression. I think everyone should be that as wildly bullish, not just for cryptocurrencies, but for the future of tokenization and the digitization of all assets that we touch.
So how should institutional investors be positioning themselves? Obviously, you have now a lot more coming to the fray here. If BlackRock is able to get through, that certainly would open the floodgates here. How do they determine how they should be allocating here?
Yeah, I think it's sort of the same framework that we've touted for years, and it's sort of obvious, right? Like, start with Bitcoin. Bitcoin has been the bellwether of the space since its launch well over a decade ago. It has the most money invested in terms of security, in terms of track record of the network performing, and now you see these access vehicles coming out focused on launching a Bitcoin spot ETF. Anecdotally, or it as well, Bitcoin, from a performance perspective, while the headlines will tell you it's a volatile asset, when you actually look at the math, Bitcoin has been a top performing risk-adjusted asset globally in the world. Better performer than the S&P, better performer than the Dow, better performer than all the financials combined, including JP Morgan and Goldman Sachs, better performer than gold on a Sharpe ratio risk-adjusted basis. And so that should tell you that it should fit quite nicely into any investor's portfolio, 1%, 2%, 5%, quite mathematically, quite simply. And look, I think it's not often that you get to add a high Sharpe ratio risk-adjusted returning asset to your portfolio that also gives you the ability to take advantage of what is a global growth trend on the digitization of assets, on the digitization of store of value, and the moving of value out of the analog world into the digital world. You get to play all that at once with actually a secure, strongly performing asset. So we say start there and allocate appropriately.
So then for people who usually tend to sort of lump Bitcoin in with all the other crypto tokens, then when you're differentiating them, then outside of Bitcoin, what else looks attractive for you as perhaps what could be the next one to have like a catalyst here? A lot of people looking at Ether and Ethereum, but that's a very different use case for Bitcoin.
Yeah, I think differentiation in cryptocurrencies is incredibly important. I'm not in the business. We're not in the business of necessarily trying to point out the next speculative cryptocurrency that for one reason or another might go up more than Bitcoin. Bitcoin is an obvious rock steady start. It's been the best performing asset. Ethereum is the next natural place to go. Ethereum, you should think about as a bet on the decentralized technology future, the decentralized internet. Whereas Bitcoin has really found its lane as a digital store of value. It portends to potentially also go after payments long term, depending on how the network scales. But it's not being used for that today. It has a clear lane to run as a digital store of value. Ethereum is a bet that people should look at as do we believe over the long term, particularly as we start spending more and more of our lives digitally. Dare I say the metaverse? I won't, but all of us spend a lot of our lives on our screens. And as we start to move value out of the real world into the digital world, will we trust big corporations like Facebook, like Apple, like Netflix to basically be the gatekeepers of all of our value? And I think proponents of cryptocurrencies and decentralized networks think that that is not a pretty future and creates a lot of risk and will actually not help adoption of individuals moving their value and their lives digitally, which we think is an inevitability. And so the bet on Ethereum is that that is a future that people understand and want to have as the underpinning of not just our financial system, but also sort of our daily lives and how we own and move value in and out of the digital and analog world.
See, and that's why it's important to differentiate the cryptos. You really understand what it is that you're investing and betting on for the future. A big thank you for breaking all of this down with me, Chris Ferraro, Galaxy Digital President and Chief Investment Officer. Thank you so much.
Thank you.
Over the last 4 days, Bitcoin is up 20%, nearing a 52-week high. Let's throw it over to Yahoo Finance's Jared Blickery for more on today's Bitcoin price action. Hey, Jared.
Hey there, nice to see some action here because Bitcoin was taking a little bit of a snooze. Here is the 5-day price action. That 20% was from a low, the absolute low, to the high. And here's a 7-day look. We've seen some bouts. Bitcoin was already poised to break out, and we've seen little fits and starts here, but we have had some news over the last few days that has been potentially acting as a catalyst. EDX is a brand new exchange. It's being launched in partnership between Citadel, Fidelity, also Schwab, and that has been in effect here. That's giving some support to the notion that Wall Street is still behind Bitcoin and also developing blockchain as well as other digital assets. In addition, WisdomTree and BlackRock have now filed for cash Bitcoin ETFs. We know that there's been a slew of regulatory information that's been bad for Bitcoin, going after Coinbase, going after Gemini. Well, this is a little bit of good news because if these entities are filing for the cash Bitcoin, guess what? That means that maybe they know something. I think the market's getting perhaps a little bit ahead of itself, but it was due for a breakout. And I'm just going to show you. This is a 1-year price action. A little bit messy here because we do follow candlesticks, but here we have this nice rally in place since last December. This is a bull flag, and the market was consolidating, and it was poised to break out as we've seen, and potentially we do have some of these news catalysts. So good to see. Perhaps at least the market, at least a couple players, WisdomTree and BlackRock, think that Gary Gensler might finally rubber stamp that cash Bitcoin ETF.
Well, we'll see. There's been a lot of resistance so far, but thank you for getting us up to speed. Jared Blickery there for us. All right, taking a look at Bitcoin trading to the downside after the Fed decision revealed a more hawkish outlook than expected. The crypto has lost some of its gains over the last month amid the turmoil in the trading platforms. Year to date, Bitcoin is up about 50%, recovering from last fall's crypto winter now. BlackRock, though, is close to filing an application for a Bitcoin ETF. That's according to a CoinDesk report. Now, BlackRock will be using Coinbase for the ETF and the crypto exchange's spot market data for pricing. It's worth noting that the SEC, which oversees ETFs in the US, has rejected every application for a spot Bitcoin ETF to date.
On Tuesday, the Securities and Exchange Commission sued Coinbase, the U.S. crypto exchange, alleging the company violated federal securities laws. This comes after the SEC also filed a similar suit against Binance on Monday. We've got Yahoo Finance's David Hollerith here with us, digging into what's happening. David, take us through the latest.
Yeah, so, these lawsuits have been anticipated in some form for both companies for months. And it's worth pointing out, these are crypto's 2 largest companies. So while this is anticipated, it's a big deal. And the charges for Binance and Coinbase aren't exactly the same. Coinbase is facing a dynamic that essentially all U.S. crypto exchanges need to deal with, which is whether or not they have listed unregistered securities, at least according to the SEC's framework. And there's room for argument on both sides, and it varies depending on each token. So this is a very gray area. Coinbase has also said as far back as February that they would defend charges or claims in case the SEC were to levy these. The SEC obviously sent them a Wells notice last year. And so they've been aware of this for some time. But with those same charges, the SEC is also alleging that Binance has done some other things, such as wash trading, using a hedge fund owned by the CEO for market making and commingling funds. And we don't know to what end. Again, these are all allegations, but if proven to be true, that looks much more akin to something like FTX, which obviously we know was a pretty horrific collapse that occurred in November. But it's important to point out that the SEC is seeking a preliminary injunctive relief for Binance, which means if granted in the courts, they would freeze at least Binance's U.S. entities' assets. That being said, we're watching the funds flowing out of both exchanges. And we've seen since Monday, when the outlook was particularly bad, that outflows have been tapering off. So they're not as bad as they were Monday, and they have been easing, though in general, the net transfers are still negative, showing that customers are still taking out their funds, but it doesn't look anything like what we saw in the days after FTX, and that's obviously a really important thing to point out.
Yeah, to your point, though, there do seem to be some differences to some of the allegations between Binance and Coinbase. You're right. It does seem like the allegations against Binance are more serious. And you're right. The SEC also telegraphed this previously. But I saw the news yesterday, them putting out the brief seeking a court order to freeze Binance assets. Coinbase defending itself on Twitter. Is there any silver lining here with regard to how the SEC is coming after these big players within the crypto space?
Yeah, I mean, I think people, a lot of crypto investors and insiders in the space will take like a longer term view about this. And they will say, I have heard things like, longer term, this sort of brings up sort of the clash that crypto has had with the SEC sort of to the courts, which is ultimately maybe not the ideal way it would be decided, but it's a way to, force an outcome. And that would mean regulatory clarity for crypto investors and entrepreneurs in the space. So that would seem like a good thing. Another silver lining, I guess we could point out, is that Bitcoin is largely considered to be a commodity. There's no written law about this, but just based on public comments or personal views from the SEC chair, Gary Gensler, as well as the CFTC chair, that seems to be the case. And I've never seen an argument that would point out that Bitcoin is a security. So Bitcoin investors do appear to be in the clear more than others. And we have seen within the industry, Bitcoin seeing more flows. Its market cap relative to the total crypto market cap has been spiking since yesterday morning.
All right. Well, we will certainly continue to watch this crackdown on crypto and see where this lands, Coinbase and Binance. David Hallerith, thank you so much for breaking that down for us.
Well, AI hype has driven tech stocks higher so far this year, with Nvidia, of course, leading the way, up over 100% year to date. And Citi analysts say this boom could continue. Here to break this down for us is our very own Jared Blickery. So, Jared, before we get to tech, let us know what's happening in the crypto market, of course, following all of the news this morning.
I'm glad you asked, because I do have our crypto heat map up here. Coinbase got served, and you can see Bitcoin down about 3%. The SEC going after them, saying that they were selling unregistered securities, I believe acting as an unregistered broker-dealer. This comes only a day after a very similar suit filed against CZ and Binance, at least Binance US here. Here is a chart of the year-to-date of Bitcoin, and we can see a little bit of a downdraft here yesterday, but I think what stands out here, we're still in the upper about 1/3 of its trading range for the year. This is still an intermediate uptrend that we're looking at. But now, with these series of lower highs and lower lows, we are now in a short-term downtrend. So 25,000, or roughly speaking, is a big approximate level that we're looking at there. What's the fallout in crypto from this? I think, Coinbase has said that if the SEC had its way regulating everything the way they said they were going to, in theory, it'd be very difficult for them to be in business. So this is a life or death struggle here. The SEC has gone to war against crypto. I think a lot of the bad news is already out, but I will say if Binance were to fall in some way, shape, or form, that's probably just too big for the market to absorb. And I would expect that to be a big liquidity taking away event. That's about all I have on the crypto front right here. I'll just take a quick look at some of the crypto stocks. Coinbase itself, not surprisingly, down about 13.6%, Rochelle.
And some of this bullishness on Citi that we talked about here, what are you watching there?
Well, I'll tell you what, you mentioned that Citi note. Their big theme is really concentration risk, and that's something that we've been talking a lot about. Here's what's going on in the market today. We have the NASDAQ up 28 basis points, not a lot. Dow up about half of that. But really the story has been the mega caps this year, and the concentration risk is real. Whether you consider the top 7 or top 8 in the NASDAQ 100, the Magnificent 7 or the something 8, these guys are really driving all the action here. You take a look at what's happened over the last month, some incredible statistics here, but the big question on everybody's minds, can this continue and for how long? We've seen concentration risk survive for over a year, maybe a year and a half in 1999 to 2000 in the tech bubble. These things can be irrational, but they can also be irrational for longer than you and I can stay solvent. Important to remember. So these things have momentum. Sometimes they just feed on themselves. I'm going to do a quick technical analysis on Apple because I think it's still relevant to what we're dealing with right here. Apple is overextended and it just barely managed to poke above its all-time high yesterday and pulled back down. Apple is a bellwether stock. This tells me maybe it wants to pause. But on the flip side, if it just gets going again, if it just takes off, guess what? These other guys, these other mega caps, probably going to go along with it, and so the NASDAQ. And there's your pain trade up.
Well, there you have it. Jared Blickery there with that great breakdown there for us. Thank you so much.
All right, let's take a look at crypto. Bitcoin sliding over 7% in May, headed for its first negative month in just about a year here. David Hollerith David Hollerith is here with a closer look at the declines that we're seeing in that space. David.
Hey, Shauna. Yeah, after 4 months in the green, Bitcoin is closing down about 7%. It's hit a peak in mid-April around $31,000, and since then it's kind of fluctuated in this range between $30,000 and $26,000. More recently, since that peak, it's lost about $66 billion in its market cap value. And so this total rise year to date has actually still been 63% so that's since the beginning of the year. And that has far outpaced the S&P and NASDAQ, but has fallen short of those major stock indexes with a 15% loss from a year ago today. So excluding this past day, which we've seen, the volatility for Bitcoin and other cryptocurrencies has dropped significantly in the past 30 days. And that signals a lack of selling or buying conviction amongst investors. Obviously, the hot labor data and Fed official talk has not been kind to Bitcoin either. Edward Moya, who was with Awanda, was telling us that Wall Street is appearing not to take as much interest into crypto as it has in past years. I say crypto, he said Bitcoin specifically. And it's important to point out, that this time last year, Bitcoin was at the beginning of what was a very long sell-off. That was pretty rough. And we saw a lot of company failures and potentially some fraud. So, even though it's a down month and things seem to be quiet, that might be interpreted as a better thing. Bitcoin and cryptocurrencies in general are still sort of trying to get past the hype from 2021 and are kind of looking for more application or utility for adoption. So that's the month of May. In June, it's about a toss-up historically in terms of what prices have done. We've seen gains in the month of June for about 5 of the 10 past years. And July is usually better. It's the third best month historically for Bitcoin and crypto assets more broadly. I also do want to point out the stablecoin Tether has been on a tear since around the time of regional bank turmoil, which started in March, Tether has gained about $11 billion in market cap value. Its second competitor, Circle's USD coin, has lost about $14 billion for the same period. Diane?
All right, David, thank you so much. Debt ceiling impasse has had a ripple effect across a variety of asset classes. Market participants have been cautious of treading too far into riskier assets, including alternatives like crypto. For more on that subject, we have Anthony Trenchev, co-founder and managing partner of Nexo. So, Anthony, set the stage for us. How has the debt impasse been affecting the crypto market?
Well, for those of us who have been around a little longer, with every debt ceiling debate, the U.S. is the closest it has ever been into to the abyss. And, we know how this ends, after all the rhetoric and the political capital has been maxed out on both sides of the aisle. I think there will be amicable resolution, and it will be raised, and we can return to normal. I find it insane that the credit default swaps on U.S. debt are higher than UBS, which was amidst turmoil in mid-March. I looked to short CDSs. Turns out you have to have at least $100 million to do that. So not really my risk profile, but I think the whole thing is insane. It will settle down. But the good thing is that this all is positive for crypto.
So, okay, you speak of some positives, but crypto has been experiencing what's called crypto winter. Are we still in a crypto winter?
We are. When you take the midterm view, obviously we came a long way down from the all-time highs of 70, but then again, we had more than 100% in appreciation year to date, and we still are closing to the highs of the year. I think it was very positive for Bitcoin as an asset class, the way it performed during the regional banks crisis mid-March. We saw the decoupling of the asset yet again, crypto in general, in particular Bitcoin, which performed as the inflation and catastrophe hedge that it was designed to be. And I just think that this shows us that Bitcoin is in a class and a league of its own when compared to other crypto, maybe Ethereum as well, but a better version of gold. So obviously it's going to thrive during uncertainty, and uncertainty is the only constant we have had this past few years, and that we will continue to have in the years to come, in my humble opinion.
So I know Bitcoin has been searching to kind of break out at, say, the 30,000 level, and it's not there yet, even though it's up today. How is the macroeconomic backdrop, whether we're talking about inflation or where interest rates stand, affecting Bitcoin, Ethereum, and the broader crypto market?
Yeah, I mean, like whatever we talked about, whether it's interest rates, whether it's U.S. debt ceiling, it ultimately comes back to the Fed and, their expanding or contracting monetary policy. I think we've seen the contraction part play out to a large extent. So I, probably will have a few more modest rate hikes, but that will be about it. And then I think we will be in a sort of a permanently high plateau for a while. So this is already been priced in, and that's why we have been trading flat across the crypto for a while now, but also equities and some commodities as well. And I think that is already priced in, but we will soon start to price in what will then be imminent, and it is the late in the year lowering of rates, which I anticipate will be the response to not so high inflation, and we already saw it coming down to 4.5% in real terms. So I think this is all good for crypto on the 1.5 to 2 year horizon.
Okay, and I got to ask you really quickly about just these meme coins. Look, they come into play, they develop a lot of just interest, they become really popular, but then some people also call them scammy. You had Dogecoin, now you have, I don't even know how to pronounce it, Pepe coin. What does that do to confidence in the crypto market?
Yeah, here I'm not going to make many friends in the crypto industry, but I think that this simply shows that we have not learned some of the lessons of the past, and people get caught up in the next cool thing and a mania, whether it's now NFTs on Bitcoin that are causing congestions of the network, whether it's other forms of insane NFTs which have zero to no utility. And actually, that is the thing that people wear as a badge of honor, that this has no utility and it's a big middle finger to, the financial system. It's all fun if you can probably exert, risk management and prudent asset management for your portfolio and your family, but this can all pretty quickly end in tears. So you have to tread with caution, but it is reminiscent of some of the stupidity that the blockchain space has exhibited in the past. So I really think it's counterproductive.
And Anthony, it would be remiss of me not to ask, crypto challenges have affected your business, particularly some legal challenges overseas in the UK. Where do you stand with those?
Oh, there are no legal challenges to speak of. In the UK, I think there was a non-news event that for some reason got reported very heavily. We dissolved 2 dormant companies that we had intention to apply for certain licenses, that then we changed plans. So really no event here. The way we go about servicing our clients on a global basis is very transparent and remains unchanged. So nothing changes for the clients. We had some positive news in towards the end of January, where we exited the United States in a manner which, caused some eyebrows, settling, with all 50 state regulators, the SEC on the federal level. Turns out this was the smart move, because we know all the charges to companies that happened in the United States with this regulatory crackdown. So I beg to differ. This has all been very positive news on the legal side of the Nexo business, and we are set up for the next bull run in crypto, which is imminent in my opinion.
All right, we'll have to leave it there. Anthony Trenchev, co-founder, managing partner of Nexo.
Ethereum has completed its highly anticipated Shanghai upgrade, while crypto investors are reportedly encountering delays withdrawing funds deposited on the Ethereum blockchain. The industry appears excited about the change. The price of Ether hitting the $2,000 mark today for the first time in 8 months. Joining us now is Scott Melker, host of the Wolf of All Streets podcast. Good to see you, Scott. So let's first start with what we're seeing. A lot of people wondering, is the crypto winter over, or is this just a brief reprieve? What's your take?
I was calling the crypto winter over about 9 months ago over the summer when we bottomed in June. Of course, we then had the Black Swan event of FTX in November, but quickly retraced that move to the upside. I think it's been crypto spring for quite a while, but people forget that spring is in like a lion and out like a lamb, and there are very horrible weather days in spring as well. So I think it's a little too early to start calling for a crypto summer, but I do think that we're transitioning and that the bottom has been in for quite a while.
And so a lot of people wondering, what are going to be the next catalyst? First of all, with Bitcoin, it's going to be halving next year. Break down what that means and what the expectations are.
In the most simple terms, every 4 years or so, there's a Bitcoin halving, which means that new supply coming onto the market is effectively cut in half. So even the most basic understanding of supply and demand, if new supply is being cut in half and demand even stays the same, reduces slightly or goes up, of course, that means that price goes with it. And we've had a 4-year cycle where we've basically seen price rising into the halving. Then a few months later, you have this major move to the upside. And then we see these huge retracements of 75 to 85% coming into the next halving. Price starts to rise and we do it all again. If you had literally fallen on your head, been in a coma for the past couple of years, ignored everything happening in the macro, the entire bear market, you would look at a chart and see that we're still in the middle of yet another one of those same 4-year cycles.
And I want to talk Ethereum as well, the Shanghai upgrade, because obviously we're seeing, at least today, Ethereum off to the races here versus Bitcoin. I mean, up about almost 6% on the day. What are your takeaways from that? Obviously, a lot of excitement surrounding this.
Yeah, there was a bit of a nonsensical narrative that everybody who had staked their Ethereum for the past few years was going to try to withdraw at once, which you couldn't do anyways, and sell all their Ethereum. But you have to remember that anyone who staked their 32 Ethereum, which, by the way, for most people was over $60,000, but anyone who staked that 32 Ethereum had no guarantee they would even be able to withdraw. These are the people who were the biggest believers, the maximalists of Ethereum who really wanted to help secure the network. So now that they're getting the opportunity to withdraw, they're going to continue staking. I think there were more people, and I can speak to this anecdotally from fund managers that I speak to in institutions, there were a lot more people who are actually waiting to deposit because they would then know that they would be able to withdraw at some point. So we're actually seeing net inflows over the past 24 hours. It's going back and forth, but there has not been a huge demand for people to withdraw, and there are just as many people putting their money into the contract. I think that this is a huge development for Ethereum, yet another major step in the right direction for the protocol.
And do you think perhaps investors are more bullish on Ethereum given the use cases versus Bitcoin?
I view them as completely separate assets. I think that the flipping narrative is completely irrelevant. I view Bitcoin as a digital gold store of value, flight to safety, and we've obviously seen that, especially with the banking collapses a few months ago and Bitcoin rising a few weeks ago, with Bitcoin rising from roughly $19,000 to over $30,000. Ethereum is more of a technological investment. It's the internet of value. And I think that we're starting to see that separation in people's minds. So I think you can love one, love both, and it's totally fine. You don't have to really choose. I think they're separate asset classes and should be viewed as such.
And so for people who are trying to, obviously, we're seeing more widespread adoption here, although with some scrutiny, as we mentioned there, from regulators, having people wondering, should I be using this as a security or an asset? But then now you have this partnership between eToro and Twitter, making it even more accessible. What's your take on that? Because when you throw in social media and obviously the speed at which misinformation can flow and misunderstandings as well, what's your take on that partnership and what that perhaps does to the adoption speed?
I think it's going to be great for adoption, both in the stock market and in crypto. eToro's founder, Yoni Assia, is an early Bitcoiner. He's a real firm crypto believer, and I think that that's going to be huge for this market moving forward. But really, I think that this is more bullish for eToro than anyone else, because if you click on a cash tag on Twitter, you see that market data and you want to trade. I think it's obvious that you're still going to have to become an eToro customer or go through KYC to be able to do that. I do think that we live now in a hyper informational market where things travel at the speed of light. I mean, even with the bank runs we saw in Silicon Valley and Silvergate, you're talking about 42 billion in withdrawals in a day. That was something that would have taken weeks or months in the past. So with that fast information and the fast moving market, I do think that this is going to increase volume and excitement around both crypto and the stock market moving forward, especially with that younger retail audience.
And so I hate to put you on the hot seat here, but in terms of where you see Bitcoin and Ethereum's prices going, what's your outlook telling you?
It really always depends on timeline, and nothing makes you look like more than a fool than pretending you have a crystal ball and then attaching it to a timeline. But I think that in general, we will see probably a choppy market for quite a while. I think it'll be the same for stocks, maybe some retracement coming soon for Bitcoin and Ethereum, and then slightly higher prices going into the end of the year. And then once again, since you brought up the halving before, I think next year, May 2024, April 2024 is when we're expecting to see that. I think a few months after that is when we'll see the next true bull market.
We'll definitely be keeping an eye on that. Always great to have you on with your insights. Scott Melker there for us. Thank you for joining us this afternoon.
The market is digesting the latest read on inflation. Consumer prices rising 0.1% in March and 5% year over year. Those numbers coming in below analyst expectations. We'll get another read on the economy Friday with bank earnings. Here with more themes to watch this week is Cynthia Murphy, ETF think tank director of research. And this week's ETF report brought to you by Invesco QQQ. Nice to see you, Cynthia. So Bitcoin has been a bit of a surprise this year, tipping above the $30,000 level earlier today and then just below it now. What are we seeing in terms of inflows in that space?
Yeah, it's been it's a crazy year when you look at things like Bitcoin and gold making an equal amount of headlines. You would think they're opposite types of trade, one a safe haven play, one a super speculative play. But it's been kind of fascinating that in this market, filled with uncertainty, we're seeing, Bitcoin not only perform really, really well, but actually start to find new assets coming in, some through ETFs, a lot of it just directly Bitcoin buying, and is just this perception that selling momentum we saw so much in Bitcoin last year is over. There's no really big sellers out there anymore, and people are just optimistic about the opportunity here A lot of it triggered by the banking crisis, as you know very well, and just that concern that, when there are doubts about financials, when the dollar is weakening, as we've seen, Bitcoin suddenly sounds like an interesting safe play, if you will.
Cynthia, you also mentioned gold in there very briefly. What do the inflows look like there in terms of how many investors are favoring some of those safety plays given all of this uncertainty?
Yeah, gold has actually done very well too. It's picked up, I think, globally about $2 billion so far in recent weeks, which is a lot of money if you think that gold has kind of lagged the whole commodities segment for the last 2-3 years. All of a sudden, it's found its momentum and assets are trickling in big time. But if you look at, portfolio managers and strategists out there, the call is one about risk management. And in that scenario, it's all about the diversification. So you keep your core equity, you keep your core fixed income position there. What do you do on the edges? Gold is standing out as a big opportunity here because it hasn't really gone anywhere. So people see upside in gold more than downside. It's a safety play in a time of uncertainty. It's a hedge for inflation, and people are buying it. So it's been really a phenomenal year for gold so far.
And to your point, it is a really strange dichotomy seeing gold and Bitcoin rise together in this environment. In terms of volatility, in terms of risk, how do you compare them?
Yeah, I was trying to look at some volatility numbers to compare the two because they're so different. And I mean, you can easily say Bitcoin is any given day 5-6 times as volatile as gold is. If you look at, gold prices have moved between $1,800 and $2,000 an ounce in the recent past, where Bitcoin moves in the tens of thousands of dollars, any given week. So the volatility is much, much bigger. So could you argue that Bitcoin is a safety play? Probably not. It's definitely a speculative asset, but it's been interesting to see that idea of its role is exclusively speculation has been starting to change. I'm seeing more and more calls for Bitcoin as a long-term hold. And, as utility increases, as that, restrained supply keeps prices supported, and as concerns about banking and the dollar escalate, it just is an opportunity. So it really is an interesting divergence between gold and Bitcoin as their storylines, but their role in the portfolio is starting to look a little bit similar.
It's very interesting. Really tough to make sense of all of it. But Cynthia Murphy, great stuff. Thanks so much for joining us. Bitcoin is still well off its highs from late 2021, but it did cross above an important level today, surging above $30,000 for the first time since June. Yahoo Finance senior reporter David Hollerith joining us now. And David, we're really seeing Bitcoin steadily move here, trend to the upside.
Yeah, Shauna, I mean, Bitcoin's sort of been teetering just below the $30,000 mark for the past 2 weeks. And it's up 82% year to date, which is huge. Obviously, still down a lot from last year. So, there's a question about whether or not investors are looking at it as still being cheap at this point. And I think it's pretty clear, too, that the people who bought last year still might not be, out of their loss, so to speak. But, sort of the debate has come up a lot recently about whether or not it's a safe haven or it's more performing like a tech stock. It's sort of never ending. But there are two interesting charts from Kaiko Research, which I wanted to point to. First, this one was against the Chicago Fed Financial Conditions Index. It has Bitcoin looking far more resilient than it has during past sort of periods of financial tightening and loosening. Typically, Bitcoin is sort of, when loosening happens, it performs like a very risk-on asset. And it's not really been doing that as much year to date. But also there's this other chart about market depth. So essentially, Bitcoin's market depth has dropped by about 50% since the FTX collapse. And that's important because it means that large buy or sell orders can more directly impact the price. And that's kind of brings us to an interesting story here, where we're not really seeing a lot of retail interest in Bitcoin at this point. What's been going on? We have had a lot of indications that as far as the crypto market or the older money, people who are already involved in the asset, there may be some signs of consolidation. So at least within the crypto market, Bitcoin is being looked to as a safe haven for sure. Year to date, it's sort of increased by 6% out of its market cap valuation versus valuation of all digital assets, which is roughly $1.2 trillion. So it's very difficult to understand what's going to happen tomorrow with inflation, which is typically something that causes Bitcoin to react a lot. Given that inflation is also kind of dealing with this OPEX situation, it could go either way. We're also looking at Ethereum, which has a protocol upgrade that's coming out or expected to be finished by 6:30 tomorrow evening. And that could lead to a selling event for the second largest cryptocurrency. And we don't really know how that would influence Bitcoin. It's an improvement for the long term, but we're kind of looking at that as another thing to keep an eye on.
All right, David, we'll see tomorrow how CPI impacts the price of Bitcoin, whether or not we'll be able to hold above 30,000. David Haller, thanks so much.
Anthony, let me ask you, what's the path forward for SkyBridge with respect to crypto? You've had to introduce some redemption limitations. Are those pending here? What happens with crypto prices as they rise, and what happens if they fall? For instance, if there's a fallout with respect to Binance?
Yeah, it's a very good question. But I mean, again, provide context around that article and just the facts. I think it's very important not to have this thing be overly biased. We have in our prospectus the right to move our tender. It's a closed-end interval fund that tenders every 6 months. And then pursuant to the board and our recommendations and so forth, we can have a 5% tender or a 25% tender. We reduce that tender primarily because of the zigging and zagging that sometimes takes place in the wirehouses. There was a buy on that fund in February. They abruptly move it to a sell 4 months later. And we have a lot of privates in that fund. And so 33% of the fund is private. As a fiduciary of the fund, to maintain the integrity of the fund and the consistency of the percentages around the portfolio, we have to do those things from time to time. In the 21 years that fund has been open, the average tender is about 20%. There's been 8 or 9 periods of time where we reduce it to 5. And by the way, every single time we reduce it to 5, it was beneficial to the investors. You guys remember the 2008 situation. Investors that held on more than made their money back and got very high returns. Now, you're asking about the volatility in the crypto markets. Bitcoin's down from 100 vol. It's probably a 50 vol asset right now. There is Bitcoin in that portfolio through some of our hedge fund exposure. I would guess right now that we're through the bear market. And again, that is a guess. We don't know. But any time that you've held Bitcoin in a 4-year rolling interval, so you pick the day, hold it for 4 years, you've outperformed every other asset class. We made that position, we made that investment in November, December of 2020. We are up on that position. Now we're down from the high, and that's what gets all the press because the press likes car crashes. But we're up on the position from November of 2020. And let's see where the position is as we enter into the halving cycle in February of 2000 or April of 2024. I like the odds there. And you mentioned Binance, so I think it's worth mentioning Binance. It is a super important centralized exchange in our industry. If something happens to Binance, I think there will be a short-term hit. We were talking about FTX at the opening of the show. You guys know I had a relationship there with Sam Bankman-Fried. When FTX went down, it hurt the crypto market, but it was a temporary hurt to the market. I think Bitcoin got to 16,000. It's now well through where it was on the announcement of that debacle. You guys may remember something called Mt. Gox that failed in 2014. 60% of the Bitcoin trading was on that exchange. People say, well, that's the end of cryptocurrencies and Bitcoin. Of course, that didn't happen either. And I wish CZ well. I know him personally. I like CZ.
I hope he sorts through whatever these issues are. I certainly don't want to see anything happen to Binance. But I think people need to understand that the ecosystem known as the cryptocurrency markets, Bitcoin, Ethereum, et cetera, are very resilient. And there's a lot of pent-up demand coming into the space. You can just see it in the on-chain analysis that we do at the firm.
Let's talk about another big winner in the first quarter, and that, of course, is Bitcoin. It has certainly been on a massive run to the upside, climbing more than 70% since January 1st, and Ethereum not too far behind, up just about 50%. We want to bring in our crypto reporter, David Hollerith. And David, when you take a look at these massive gains, lots of questions just about the biggest driver here and whether or not that's going to continue.
Yeah, Shauna, that's always the question. The crypto market, I think the story here is that it's had no real issue shaking off the value destruction that we saw last year. I mean, but that being said, in the U.S., the asset class isn't exactly away from facing challenges. Bitcoin stole the show, and it closed out the quarter above 70%. It's leading other major cryptocurrencies by about 10%. It's also sort of broken away from its correlation with the NASDAQ, which it typically is pretty high in correlation with, though it's still moving in sync. They're both up, obviously. And just for the wild rise, it sort of started in January for Bitcoin. It rose about 40% above $20,000. And then it kind of fluctuated between 20 and 25. And we saw the voluntary liquidation and involuntary liquidation of Silvergate and Silicon Valley Bank, and then also Signature Bank happen in March. During that period, Bitcoin slipped below $20,000, sort of in between Silvergate's message of winding down and Silicon Valley Bank's news of seizure. So that was sort of the moment of panic. And after that, the major cryptocurrency it's just been flying. It's up another 20% from that time, it's up another 30% since that time. And while the bank failures have definitely shown that bank stocks are kind of the area that's hurt right now, the two major banks that did fail, Silvergate and Signature, or that wound down, that has reduced liquidity for major cryptocurrencies and trading. And what that basically means is that the price is a little bit more easily influenced by buy and sell orders. And that's especially true over the weekends. That's what we've seen. Other cryptocurrencies I'll point out, XRP, which is currently sort of on the home end stretch of being ruled as either a security or something else in its related court case between Ripple Labs and the SEC. It rose about 57% through the quarter. And then the second largest cryptocurrency, Ether, rose a little more than 50%. And that one's a good one to keep an eye on, as it has a new upgrade coming in the coming weeks in April. That's the Shanghai upgrade. Shares of Coinbase have also moved fairly similar to the cryptocurrency asset class. Moving along with Bitcoin, Coinbase is up. It fluctuates even more than Bitcoin, at least today, but it's up more than 70% from the last I saw it. On all those notes, though, I think I'll also point out, just in general, in the U.S., there's still been no shortage this quarter of regulatory tightening going on. So it's interesting to sort of see this split continue between sort of what's happening with regulation, which is uncertain, and then the asset class, which is obviously moving pretty well right now.
Moving very, very well to the upside. All right, David Hollerith, thanks so much.
Right, the crypto winter seeing a hot spot with Bitcoin. The volatile digital currency finds itself with a roughly 70% gain thus far this year, as the industry continues to face scrutiny from U.S. regulators. Bitcoin sets its eyes on closing out its best quarter since the 3 months ending March of 2021. That's after what was a brutal 2022 for the crypto market. Be sure to stick around when we take a deeper dive on Bitcoin's market moves later this hour.
Well, Binance appears to be the focus for crypto watchers amid a CFTC crackdown. Our colleague Rochelle Akufo spoke with former FTX spokesperson Kevin O'Leary on the sector and fears that Binance and founder CZ could be the next shoe to drop.
I think it's game over, checkmate for CZ, and it's only a matter of time till there's a run on that BNB token, $64 billion. Now, either the Chinese government is backing that token or they're not. But if there's a run on that, it's sayonara CZ.
Well, Rochelle is going to be diving into Binance and the entire crypto industry later this morning. Obviously, he was quite outspoken on that and a lot of other stuff. But what can we expect to hear from your show this morning?
Well, it's interesting because we're going to have some guests who are going to be coming up looking at some of the repercussions here. Obviously, the CFTC suing the world's largest centralized digital asset platform, Binance. Now, they're alleging that CEO CZ and his former compliance chief violated trading and derivatives laws, claiming the company has an ineffective compliance program. Now, CZ has disagreed with the characterization of this on his blog post, but we did see Bitcoin fall alongside some other tokens on the news. It did recover, but investors pulled about $1.6 billion out of Binance in the 72 hours following that CFTC announcement. That's according to blockchain data tracker Nansen. So we're going to be taking a look at that and the broader impact because a lot of crypto investors are wondering about the next shoe to drop. So we'll be diving into that.
And so this is happening while regulators for traditional banks, they're dealing with their own fallout right now. So kind of pair the two together for us.
Well, that is one of the issues that we're going to be talking about. Scott Melker, who's host of the Wolf of Wall Street podcast, he called out this irony, tweeting that regulators are busy fighting crypto while their own properly regulated system is collapsing around them. Now, Scott is one of the people joining me in the 11 a.m. show, alongside Axios crypto reporter Brady Dale, looking at the next exchanges to watch, including, of course, Coinbase, given the size of its market share, where investors are moving their crypto, also looking at how to walk that line when you have the two primary regulatory bodies overseeing crypto blurring the lines on how it's classified. You have the SEC, the vast majority of crypto, excluding Bitcoin though, considered a security based on the Howey test. The CFTC seeing crypto as a commodity. So a different set of regulatory and legal requirements for each. And just to note that the lawsuit with Binance is a civil one, not a criminal one, as in the case with FTX, and Sam Bankman-Fried facing his 13th indictment today in federal court in Manhattan.
Right, he's going to be in court again at 11 a.m.
Yes.
Yeah. Well,
Just
we'll
in
look
time
for the headlines, just in time for the show. Exactly.
All right, going to see that floofy hair somewhere. Rochelle Akufo, thanks so much for joining us this morning. Got a lot to look forward to at 11 a.m. with Rochelle.
Well, speaking of some of the volatility this week, it wasn't only for the banks, but also for Bitcoin, or was it when you take a look at where we ended the week? But the Fed's latest 25 basis point rate hike sending the price of Bitcoin down from nearly $29,000 to below $27,000. Now, the SEC issuing a Wells notice against Coinbase, saying that it plans to take on what is called, quote, enforcement action, and Binance suffering a 2-hour outage earlier today due to a software glitch. But the price of Bitcoin remaining relatively unchanged. If you take a look at where we started the week to where we ended the week, still close, just below 28,000, right around 27,500. But certainly you can see in the chart, lots of volatility, but ending the week not too far from where we started on Monday.
Bitcoin, BTC, USD hovering around $28,000 after hitting its highest level in 9 months as investors look to the Fed decision as the next key benchmark. Yahoo Finance's David Hollerith joins us now live and live in color from Nashville, Tennessee. David, what are you tracking with Bitcoin right now? And can we push through that $30,000 mark, do you think?
Well, Brad, if you look at the futures market for Bitcoin, the strike price, the highest level of strike price is at the $30,000 mark. The highest amount of expirations is for the end of March. So there's definitely, I think you could say the majority of at least long positions are looking for that $30 mark. It has been interesting, just given that last week Bitcoin saw one of its highest weekly gains on record. And so the cryptocurrency's price has been mostly consolidating leading up to the Federal Reserve's decision on Wednesday. And, just to give you an idea of where we came from, this rise we saw last week was effectively from $24,000 to this $28,000 mark. Now, for the last 2 days or so, Bitcoin has kind of been hovering around that. And the big question here is how much the banking crisis is playing into this and whether or not people are moving to Bitcoin as a safe haven asset. And that question is honestly very difficult to prove and I would argue not provable yet. So we also obviously have the Fed potentially, giving a 25 basis point hike or even less in this next decision. So that's also very good for risk assets, or better than what could be. And I wanted to point out, too, that since FTX has collapsed, and also more recently Silvergate and Signature Bank have gone offline, liquidity, or sometimes called market depth, for Bitcoin has dropped across exchanges. Research firm Kaiko has pointed this out yesterday. And this has been such a substantial drop that what it means is that price or orders on Bitcoin, whether they're buy or sell orders, can more easily influence the price movement of the asset. So that's definitely something to watch for, especially on weekends when trading is lower. So that might have a little bit to do with what's going on with these movements. I don't know if you've noticed them, but even when we say tight trading range, Bitcoin's been relatively more volatile than it was, towards the end of last year. But that being said, Matrixport, another firm, has sort of put out that in this most recent rally, U.S. investors appear to be sort of the majority investor, regional investors who are buying Bitcoin. So that's obviously something interesting to see. Again, not going to find an answer on Wednesday about no matter what the Fed does about whether or not investors are looking to it as a safe haven yet.
No, but we'll be able to watch the price action at least. Thanks so much, Dave Hollerith. Appreciate it.
Bitcoin rising over the past week amid fears of contagion in the traditional banking system. And with the rise of Bitcoin price comes some of the familiar traits in crypto trading, like increased leverage. Our David Hollerith here to break it all down. David, we see Bitcoin up nearly 15% over the last 5 days. What's happening here below the surface?
Yeah, Dave, I mean, the question about, why people are buying is it's going to continue to be debated about whether or not it has to do with the Federal Reserve loosening their rate hike decision on Wednesday, or it has to do with the banking system and the fact that Bitcoin is just completely separated. But in the derivatives market, traders have been placing bets in the futures market at a elevated rate, a rate that has not been seen. It's only been seen one other time, since November. And then also in the options market, Deribit, which is sort of the main options platform for betting on which way Bitcoin will go, has sort of seen a surge in contracts over the last week. It's an all-time high as far as the amount of open interest they've seen go into their contracts. So what we're seeing is a lot more leverage building in the system right now. And we don't know which way that leverage is positioned. So there's, if we look at an outbreak, at least in the futures market, it looks about 51% long, 49% short. But we don't really, whatever happens to the downside or the upside, that's obviously might be decided on Wednesday. I'll also point to the fact that in the futures market, there's like a very large amount of futures contracts set to expire at the end of this month. So that's another thing to watch. And obviously the bulls, from how they're positioning their strike prices, are looking at the $30,000 mark for the target for where they're expecting Bitcoin to be around that time.
Sure would be interesting to see another surge. David Hollerith, appreciate that. Thanks so much.
Keeping an eye on Bitcoin moving higher today, the cryptocurrency surged last night on the announcement that the Switzerland-based bank UBS reached a deal to buy rival Credit Suisse. Also in focus is the potential rate pause or hike by the Federal Reserve. For more on what impact that's having on the crypto market, let's get to Yahoo Finance's David Hollerith. Hey, David.
Hey, Rochelle. So it's been a very interesting past 10 days, I guess we could say, for Bitcoin. It's been on a tear. And, there's two things going on here. And one, is the fact that we've been into a couple weeks of what we would call a banking crisis, and that's obviously changed how the Federal Reserve might need to react in its upcoming rate hiking decision that's set for Wednesday. And so as a risk asset, a lot of analysts I'm speaking with, or I have been speaking with, have been saying that Bitcoin and other risk assets are poised to do well in the near term. Technology stocks have benefited a little bit from this, but Bitcoin by far has sort of outperformed other assets. Goldman Sachs put out a research note on Friday before Bitcoin sort of crossed this $28,000 hurdle, pointing out that it far and away was the best performing asset of 2023 so far, so year to date. So that's interesting. And then we have this other sort of story, which, Bitcoin diehards sort of believe in, which is that Bitcoin is, its purpose was, when it was created, was to sort of not be in the control of government. And given that we're seeing, sort of this banking crisis issue, Bitcoin is sort of being viewed again as a safe haven. That being said, that's investors have thought of it like that for a long time now, and that's often debated. And for the last 2 years, it was debunked. But it looks like that narrative is sort of coming back into the market. I think the problem of deciphering the two is that it really comes down to the fact that both are happening right now. So in terms of Bitcoin's trajectory, that obviously looks good for it. We're going to need more data before we can sort of see if investors are moving to it as a safe haven asset. But interestingly, its correlation, so how much it moves compared to gold and the NASDAQ. NASDAQ you can think of as technology stocks. Gold, it's traditionally thought of as a safe haven. Bitcoin has been correlating more with gold recently and less with the NASDAQ. So that's been a change that we've seen over the last 2 weeks, and we'll continue to watch that. But in general, Bitcoin compared to other crypto assets is definitely seeing the highest bid right now.
I certainly wasn't expecting Bitcoin to go back to being the safe haven after, the wild ride that it's been on then. So what are the expectations here? We know there are always these astronomical sort of predictions as to where Bitcoin could go. How much more of this will we need to see, though, before we can say, yes, this might actually be the turning point for crypto?
Yeah, it's a good question. I mean, I think if you're looking at the crypto market, Bitcoin including, about a month ago, things didn't necessarily look so bright. And now we have people coming out with a $1 million price target in 90 days or 87 days, I guess, is what we've seen. And that looks like it has about a 1% chance of being true. But, I think that if risk assets stand to benefit, and Bitcoin is not something that is, as connected. I mean, it's less connected from the banking system than it's ever been. I think hedge funds, at the very least, will look at it as a way to play on a macro narrative that is more beneficial to risk assets right now. That's what it sounds like from what I'm hearing.
Certainly one to watch, and we'll see what happens when we get that rate pause or hike, whatever the rate announcement ends up being from Jay Powell this week. Yahoo Finance's David Hollerith, thank you for that breakdown.
All right, crypto resuming its rally. Bitcoin climbing above 26,000 for the second time this week. We're on track for the best week that we've seen in just over 2 years. We want to bring in David Hollerith to break down the action that we've seen. And David, it seems like investors are turning to crypto in a time where there's so much uncertainty.
Yeah, Shauna, I mean, we saw Bitcoin begin to rise a lot yesterday, and this was around the time, where the U.S. banking system, was getting sort of this infusion we were seeing with First Republic, and it's hard ever to figure out what exactly is driving the Bitcoin price. But it's continued that rally into today, and Bitcoin's been achieving new price highs, or sort of, for the past couple of weeks. Obviously, the end of last year was pretty rough for it. That being said, when the Silicon Valley Bank seizure happened exactly a week ago. We saw it plummet over uncertainty around how that might impact the market. And there's the industry in the U.S. has had, its two major banking partners close. So now at this point, it's at a very interesting point as, stocks are also rallying, particularly technology stocks. So there's that. And there's a lot of, there's sort of a growing camp of people who are looking at, what's going on in the U.S. banking system and trying to anticipate what the Fed might be doing from here on out. So that's in play too. But in general, this is a really interesting time to pay attention to Bitcoin as it was created, at least arguably, during the 2007 to 2009 financial crisis. And during that period, the idea was that to create a currency and banking solution that was out of the reach of governments. And obviously that's an interesting thing here because you can look at how Bitcoin may have benefited from the government stepping in to backstop some of these banks in a certain way if you just track it with the price. So it's a very interesting time. I think that the thing that needs to be paid attention to is that Bitcoin is right now, it makes 46% of the total crypto market, and it hasn't achieved that high since June 2022. And during that time, crypto was sort of dealing with its own credit crisis. And that was seen as a flight to safety. And at this point, it doesn't seem like investors are scared as much, but it does seem like Bitcoin is rallying a lot more than the other coins.
And Dave, crypto-related stocks, Coinbase is reportedly in talks with clients about a new overseas venue. What's the significance behind this potential move?
Yeah, using three unnamed sources, Bloomberg put this story out today. And this is basically that institutional clients were said to be approached by Coinbase for potentially doing, what we would consider in the U.S. to be an offshore trading venue. And international expansion for Coinbase has been something they've been doing for years. Like Robinhood, for example, which is trying to launch in the UK by the end of the year, they've made that commitment. These companies, like their mission is, in so many words, to democratize finance. That's really only achieved by going all over the world, especially in places where banking or local currencies aren't hitting the mark as much. But Coinbase obviously is dealing with a few other things. It's already in 100 countries. So this is different in that they're talking about creating an actual different operating entity is what it sounds like from the information we have. Obviously, it's not really been extrapolated for us by Coinbase. They've declined to comment. But, we'll want to pay attention to this, especially in light of the fact that U.S. regulatory crypto legislation has not really been moved forward, and it has progressed in other countries, such as in Europe and Asia.
Coinbase is up 12% right now, up 43% over the last 5 days. David Hollerith, thanks so much for joining us.
Crypto's rally is back on after February's cooler than expected inflation report. Bitcoin breaking the 26,000 level threshold amid worries over the regulatory environment and risk in the banking system. Its price action now suggests a bullish streak ahead. Let me get to the Wi-Fi Interactive. I don't know how cool we could say this morning's inflation report was, at least on the services side, but nevertheless, I've been saying for quite a long time, several months now, that Bitcoin has been leading the way for risk markets on a lot of these reports, Julie, that deal with inflation, the big jobs report, Powell standing up in front of people and opening his mouth. All of these things seem to hit Bitcoin disproportionately more. And now we have it bumping up against former price resistance at the $25,000 level. I could go into some technical analysis here, but any comments on the great crypto rally that we had?
Yeah, two comments. Mm-hmm. We spoke to two guests today who cited crypto as one area that still could cause risk in the system, right? Which I thought was quite interesting. Unprompted, not necessarily surprising that Bill Smead would say something like that because he follows Buffett and Munger closely, and Munger has been very anti-crypto. But we also heard Matt Miskin of John Hancock mention that would be an area to focus. So price action aside, that's something I think people need to keep in mind. The other thing that I find absolutely bonkers bizarro is that people seem to be flowing into crypto over the past few days because they said, well, this was a failure of the banking system. DeFi and crypto this solidifies our view that that's the answer, which is just a little bit confusing to me, shall we say.
If Gary Gensler has demonstrated anything, it's that crypto is under the big thumb of the United States regulatory agencies, at least going forward. I think it's going to be heavy-handed in that regard. I will say this. In this part of the business cycle where we see the Federal Reserve having hiked already a lot and now just beginning perhaps to step on the brake or at least lift its foot off of the brake here, at this point of time is when gold usually takes off. And so we've seen gold futures perk up over the last couple of days. Here is a year-to-date chart. Let me just get a longer term. Here's a one-year chart. And you can see this latest liftoff is only a few days worth, but really occurring with the same fervor that we saw interest rates move over the last day in reaction to what the Fed is doing. So if the Fed and the other federal authorities here are creating moral hazard by guaranteeing all deposits, and we're seeing gold perk up, and Bitcoin is right there with it, maybe there are some parallels there. But I will say historically, this is a time when gold starts rallying the business cycle. People are saying, why was gold not rallying last year? It's because the Federal Reserve was way too hawkish. And historically, and we can watch this pan out over several cycles previous, that does not happen.
Let's keep the conversation going now on what the fallout from the SVB episode on the crypto industry is. Joining us now is Anthony Trenchev, Nexo's co-founder and managing partner. So I want to ask you, Anthony, as you're stepping back and looking at this, what is your big takeaways from what's been happening over the last 24 hours and perhaps some of the lessons that could be learned from this?
I think there are very important lessons here, and it's a few of them. And let me start off by saying I don't think we are out of the woods yet for a couple of reasons. First of all, we are seeing a flight into Bitcoin and Ethereum because people want to escape some of the smaller caps and some of the stable coins that are out there. So there is this internal rally within blockchain, the blockchain space, okay? Then secondly, I think an important lesson is that this particular crisis in crypto, and we as an industry have our fair share of sins, especially with the unraveling of last year, that has become clear. But I don't think this particular crisis it is the blockchain industry as such to blame. This is like, USDC, they did everything right. They placed dollars in a federally insured bank, the 60th largest, and that created the commotion. And then the third important takeaway is that obviously the regulators and politicians in the US are not as excited about crypto as we thought they are a few years ago. And I'm saying this euphemistically because what we are seeing is going to have repercussions and second order effects for a very long time within the industry.
And I mean, we're still seeing the fallout from FTX as that continues to unravel. But do you think we'll see the same sort of contagion or the same sort of domino effect after the breakdown now of Signature Bank and SVB as well?
Well, with Signature Bank, it was a total surprise. From what I heard, even the executives, they found out that Signature is going to be closed out just 5 minutes before the Fed issued their press release. I do not know what exactly was wrong at Signature Bank, and I'm not a fan of conspiracy theories, but it's obvious right now that the blockchain space has very limited access to fiat, and that the banks that were servicing the space are all but gone. There are a few small ones left there. And this is of some importance for a number of reasons. And I think a notable one is the fact that new money, if it wants to come into the space from US dollars to, crypto native assets, will have a really hard time. So, the second order effects of the shutoff of the fiat ramps will be felt in the months to come. It really depends on what the regulators have in store for us. And by the way, this is the reason why foreseeing this 18 months ago, we started to exit the US market in an orderly fashion and replace that market share with other regions of the globe.
So then what are Nexo's customers doing in light of this, and how are you positioning the company?
Well, I think as a company, we are in a very strong position financially and, just as products and services, because they are devised by what we see demand by our clients. And, weaker hands have left the platform during the course of 2022. So we have hardcore fans are the only ones left. What they're doing right now is they are on the sidelines. They are waiting to see how this plays out and are ready to be deploying capital because, a lot of people, certainly some of the larger whales that I personally am in touch with, do see this as a bear market rally, despite the fact that Bitcoin is up, I don't know, probably 17% on the day. But as I started, this is a flight to quality from some of the other assets and, a lot of money on the sideline, that's for sure, and it will be deployed, but I think at slightly lower levels than where we're currently trading at.
And so I want to also ask you about Fed reaction to this. Obviously, we saw the government step in, making some special exceptions here in terms of backstopping these sorts of accounts. What does that mean for crypto? Once you have that precedent start to be set, is that a good thing for crypto?
It is a confusing thing for crypto because, we had Janet Yellen saying something and but President Biden this morning contradicting her. And, it is unfortunate because it turns out that regulation and having watchdogs regulate the entities does not stop bad things from happening. I'm talking about the banks because this is always the critique about, crypto companies. Oh, they need to be regulated, to be managed, they need to be with proper checks and balances. And what happened with all of that in the sector? Because what we saw is the fact that depositors are getting their money back is not because of stringent risk management by the banks and prudence, but it is because the federal government is stepping in and is guaranteeing everybody's dollar. So I think that speaks volumes about structural problems. And this will have some effects on the industry, most notably what we talked about, on and off ramps. And, but one of my favorite things about crypto as such is the ability for startups to fail and fail quickly so that the good actors can succeed, the bad apples can be sorted out. And this is what fosters innovation, I think. And over the past few years, we haven't seen that possibility in traditional markets. Yes, it's painful, but I think it's a cleansing process, which is a net positive.
A cleansing process. That is definitely a good way to look at it. Anthony Trenchef there, Nexo's co-founder and managing partner. Thank you for joining me today.
Bitcoin is sinking below $20,000 today to its lowest level in nearly 2 months as Silvergate's liquidation and wider stock market losses hit the digital asset. Yahoo Finance's Jared Blickery is at the Wi-Fi Interactive with the details. Jared.
Yes, let's first check out the price chart here. This is Bitcoin's price reaction. It got a number of moving parts. Let's just start with today, or actually this is 5 days. So we can go back in time on Tuesday and Wednesday. That's kind of when we got more information about what Silvergate was going to do, and it's winding down its operations. This was a funding bank for the crypto enterprises, a lot of which have failed. And this is just kind of a prelude to what happened in Silicon Valley yesterday with Silicon Valley Bank. Now, we also had Powell speaking Tuesday and Wednesday. It's hard to see here, but this little spike down came on Powell's testimony, and then it was kind of down, a slow drift down from there, the bottom really falling out yesterday. In the context of the larger price rally that we had seen earlier in the year, now looking pretty much in jeopardy. This year chart shows that essentially Bitcoin had been trading in a very large range, or a long range. Looks like the touch isn't annotating right now, but the 25,000 level was something that we reached last August. And then down here we have the bottom, what is that, 15,000, 16,000? So would be very easy to see this $15,000, $16,000 level traced out right here. Until we move above 25,000, probably not going to mean much in terms of price action. And 30,000, what you see right here, that is a real delineator. Now, if I sort by performance here, looks like my screen is frozen, and that's why we're not annotating. So it looks like I'll just have to wrap this up here. Lots going on in the market, also with Bitcoin. I would imagine the Bitcoin stocks as well, crypto exposed stocks especially, getting hit today, guys.
All right, there's a chart for you behind you.
There we go. Thank you.
The 5-day.
Yes.
I don't know if we can draw on this one either. Jared, without drawing ability.
I know. My hands are tied.
Jared, thank you so much. Earlier this week, a panel of judges on the D.C. Circuit Court of Appeals heard arguments from Grayscale Investments and the Securities and Exchange Commission to determine whether the SEC's reasoning for rejecting Grayscale's application to convert its Bitcoin trust to an ETF was reasonable. I talked to Grayscale CEO Michael Sonnenshein following those closing arguments and started off by asking him how confident he is that the ruling will go his way.
We were certainly really appreciative of the opportunity to have this case heard by the DC Circuit Court of Appeals. Walking out of the courtroom, I would say we all felt very encouraged by how oral arguments transpired. And I think that's really a function of the legal team we have in place. We've put together the best-in-class legal team, and we've been consistent. The arguments that we've outlined why GBTC should be an ETF was the same when we filed our application, was the same when we had to litigate and file our briefs with the SEC, and they were the same earlier this week when we had oral arguments. And I think that consistency really works in our favor, and I think the market reaction is similar. Investors and folks are telling us anecdotally that they appreciated the oral arguments, and they're hopeful that the court will, side in our favor.
Yeah, GBTC rising in the wake of the hearing. You've talked about a timeline if you do get positive approval, which can take some months. Mm-hmm. Maybe even as soon as fall, we could see that ruling and a conversion. How quickly can a conversion happen if it goes in your favor?
Well, so what we've been guided by counsel is that we should expect a decision out of the DC Circuit by this fall. What transpires from there in terms of proactively working with the SEC on a conversion will obviously be something that we'll need to work out with them when that time comes.
One of the things that you were questioned about yesterday is the possibility. Right now, the SEC allows Bitcoin futures ETFs, but not a spot ETF. And the judges really talked about the sort of dichotomy or the questioning around that. On the flip side, the Securities and Exchange Commission, which has approved those products, in theory, could at some point rescind approvals, not just for the ETFs, but for Bitcoin futures, for whatever reason. What then would that do? What would be the cascading effect for you if that were the case?
I'm not aware of precedent where we've had, a year plus and billions of dollars of capital in investment products that are trading every single day and seen the SEC rescind those types of approvals, right? We don't have just one Bitcoin futures-based ETF here in the US. I think we have 3, maybe even 4 of them.
And some in Canada too, I believe.
Some in Canada, some in other jurisdictions as well. And so that, again, is really the bedrock of the case that we have. Mm-hmm. These are 2 markets that are inextricably linked. Bitcoin futures is a derivative of the Bitcoin spot market. So if the SEC got comfortable with Bitcoin futures as the underlying asset for a Bitcoin futures ETF, well, then they ultimately really also got themselves comfortable with the underlying spot market as well. And that's why GBTC should convert, as well as giving investors greater protections, right? That's the big takeaway from oral arguments and what we've been hearing from investors. This is the chance to take the world's largest Bitcoin fund, built in the U.S., raised in, under U.S. rules and regulations, and to bring it closer into the regulatory perimeter. That's an opportunity that, as a regulator who's meant to protect investors, should be seizing.
Why is it so important? Forget about the regulatory perspective for a moment. Why do you think it's so important for investors to have the trust be converted to an ETF?
Well, certainly today, the trust, trades at premiums and discounts. It doesn't have that embedded arbitrage mechanism. And so GBTC today, could be at a 40% discount to its actual net asset value, to the discount of the Bitcoin that it actually holds. And so in an ETF format, investors trading in GBTC, whether it's short-term, long-term, holding it for a very long time, investors will be in an instrument that effectively tracks the price of the underlying Bitcoin it holds. And we've seen now in the US, I think there's over 2,000 ETFs. This is a tried and true wrapper that will give greater protections, greater transparency, and all of that also comes with sitting on a national securities exchange, which in our case is the NYSE ARCA.
You could also argue an ETF is easier and more liquid to trade, right? Just sort of ETFs by definition is not a closed-end fund. And you can also redeem your funds. And this is something you've been hearing from investors as of late, some of whom want to more easily redeem their funds. There is a sort of a loophole, if you will, called Regulation M. Mm-hmm. You guys could, in theory, go under Regulation M and allow some of your investors to redeem those funds.
Why not? Why not go that route? Why not even go that route simultaneously while you're still trying to get ETF approval?
Well, so Reg M is a separate and distinct set of rules than things like tender offer rules, right? So Reg M is something that is granted, or actually relief from Reg M is granted to ETF applicants. So the lawsuit itself is actually at its core asking for Reg M relief, the ability to simultaneously create and redeem shares of the fund, which will allow it to track the underlying value of the Bitcoin that it holds. Earlier in our life cycle, Grayscale did have a redemption program for GBTC way before it even went to the public markets as GBTC, and it was deemed to be in violation of Reg M. So since that time, we haven't operated a redemption program. We got a cease and desist from the SEC back then and haven't been able to operate a redemption program. So
have you tried to do it in other ways, in talks with the SEC? Or did you just sort of say, okay, once you got the cease and desist, we're not going to try and do that again?
Well, under the cease and desist, we can operate a redemption program. So what we've really been focusing on is offering public market liquidity for GBTC on the secondary market. It's become one of the most liquid securities on the OTC market here in the US, and was really a pioneering move on our part to be able to take a private fund and bring it out into the public market, which has really opened the opportunity of investing in Bitcoin to a very wide audience.
One of the specific examples of an investor who is asking for a redemption is FTX, or I should say now the administrator in bankruptcy of FTX, who wants to redeem some of the funds. Is there any way to do that under the existing framework?
So I think the complaint you're referring to is actually coming out of Alameda, right? So Alameda is the now defunct hedge fund arm of Sam Bankman-Fried's FTX empire. So if we look at Alameda, they're not a US-based business. They're not under US regulations. And that's really in sharp contrast to a business like Grayscale or Grayscale Products, built in the US under US rules and regs. Alameda now, obviously we all know, we've talked about this, a lot of fraud, a lot of things that transpired that have forced those companies into Chapter 11. And so under the new leadership at Alameda, from a fiduciary standpoint, they're wanting to try and recoup assets wherever they possibly can. And we don't fault them for doing so, but they're quite misguided with this complaint. It completely flies in the face of what we're doing with GBTC. Converting it to a Bitcoin ETF is the best long-term product structure, and also, more importantly, the product structure that's going to actually unlock the most value for investors, which includes Alameda.
But they're not long-term holders. The job of John J. Ray is to retrieve as many of the assets as possible, right? So you're referring to an investment case, which is not really necessarily relevant to what they're seeking, right?
Well, I think it's fair to say that the newly appointed management at Alameda is inheriting a series of investment decisions that were made prior to them. So actually being able to speak to the intent of their timeline or however it was that they made those investments would be really tough to do.
And that was Michael Sonnenshein of Grayscale Investments.
And Grayscale Investments seemed to gain headway in its case against the Securities and Exchange Commission in its most recent court appearance as it looks to convert its Bitcoin Trust ticker GBTC into an exchange-traded fund. But why should investors care if they're getting shares in a trust versus a spot Bitcoin ETF? Santa Clara University Levy School of Business So-Young Kim joins us now. So-Young, thanks so much for joining us. Talk to us a little bit first about this difference between shares in a trust and spot Bitcoin ETF.
Right. Well, thanks so much for having me, Ines. Now, with the way that ETFs work, there's a redemption feature where you have these authorized parties that are going to serve as a market-making mechanism where if the shares of your ETF depart too much in value from what those underlying assets are worth, you'll have these authorized participants that step in. Now, what's happening here with the trust is that this trust is actually holding Bitcoin on its balance sheet, but now the investors who hold shares of this trust are not able to actually redeem their shares for either the like-kind money or the Bitcoin itself. Now, where that might become an issue is if investors start to have if their faith is shaken in terms of whether or not a trust is going to be an appropriate custodian. So we've seen now numerous cases of custodians that were improper custodians. We've seen FTX, we saw Quadriga, we've seen Bernie Madoff. So it's not just a crypto problem. But if investors are worried when they can't redeem their shares and they're concerned as to whether or not you have the assets that you claim to have, that could be one reason that the value of your shares will depart from what the underlying assets that you supposedly hold are worth. Now, there are other reasons that investors may become scared, which is that during this time of illiquidity, they might become very worried with the volatility of Bitcoin. And so while so many other things in the crypto market are happening, if you're not sure when you'll be able to cash out, you might be willing to cash out at 50, 60% of the price that you think the market value of something is. And that's another thing that's happening with some of the investors where they've decided they'd rather cash out at a 40% discount. And that's where part of the departure of the value of the share of an investor's share in the Grayscale Bitcoin trust, why that's departing so much from what the underlying Bitcoin should actually be worth.
Right. Well, and it's also departed because Grayscale, right, so young, has not been able to make progress in actually getting the trust converted to an ETF, which would, in theory, increase liquidity of the instrument, accessibility of the instrument, would also solve this redemption issue that you're talking about. The company's faced some lawsuits related to all of that. It seems like the conclusion of the hearing yesterday was a step in the positive direction for Grayscale. So just to sort of put it all together for us, what would it mean if it does succeed in its quest to convert this to an ETF?
So there would be a couple of things here. One is that if Grayscale indeed doesn't have the Bitcoin, then all of this will fall apart, and simply becoming an ETF won't help the price of its shares converge to what that net asset value should be. Now, the way that Grayscale is fighting for this, it seems that the belief is as long as they can get investors to truly trust that they have those assets that they have taken custody of, that they can actually trust that the trust is holding what it's supposed to be holding. Now, if an authorized participant comes on board to serve as that authorized participant who is going to redeem and also create shares on behalf of this ETF, then that'll give investors more faith that the authorized participant itself has taken a look at what Grayscale is actually doing. Because these authorized participants are going to be very large financial institutions. So we're talking about the Goldmans or the Barclays of the financial institution space that step in to serve as an authorized participant here. So that's one thing. The other thing is, of course, a lot of other players are going to step in, because the question here that Grayscale is litigating is whether or not this Bitcoin ETF is going to meet the exchange standards for listing and the SEC's criteria as to whether or not the focal point here, where the focal point has been, is there a regulated market of significant size? And the SEC decided that the Bitcoin futures market is a regulated market of significant size. And what's strange about that argument is that the Bitcoin futures market itself is predicated ultimately on a reference price that comes from the underlying spot market for Bitcoin. And so to piggyback off of the Bitcoin futures market by dint of being run by the CME, to say that that is a regulated market of significant size when you won't allow the spot market to be one of significant size is a little strange. And that's the argument that I think Grayscale has been making. And it seems like that's gaining a lot more traction than it did 5 or 6 years ago, when the first arguments for putting together a Bitcoin ETF were shot down.
Yeah, and that's what you're talking about is very similar to, it seems, to the line of questioning from some of the judges, the judge yesterday, I should say, in this case, which is quite interesting. So ultimately, and you've sort of talked about this, but just to put a fine point on it, if I'm an investor in this instrument, why do I want it to be an ETF versus it being a trust? And again, I know you've talked about it, but just to kind of tease out the specifics.
Right. So with it being a trust, now there are several ways that you can set up these types of investment companies. One, the most that people are familiar with is the mutual fund concept, where with a mutual fund, you can never have a departure from NAV. A mutual fund is highly regulated, and anytime a single investor wants to redeem their shares, they get to do it at what we call the NAV, which is the net asset value. So the mutual fund is holding on to a lot of different types of securities, and whatever is the pegged closing price, whatever is the total basket of what those securities should be worth at the end of that trading day is what I would be able to redeem my mutual fund share for. Now, if we depart from that and go into more of a closed-end fund structure, that's the way that Bitcoin, that's the way that the Grayscale Bitcoin Trust has currently been operating, which is very close to a closed-end fund where they have a trust that's actually holding on to this Bitcoin. And now they've issued shares, and each share represents a fraction of a Bitcoin. Now, where the departure from that model versus the ETF comes in is that Grayscale is not required to redeem shares. So I may hold shares of the Grayscale Bitcoin Trust, and if I want to cash out, the only way for me to do that is for me to sell my shares on the secondary market. But I can't go to Grayscale and redeem those shares myself, either for the cash equivalent or for the Bitcoin itself. Now, the move to an ETF is a bit of a hybrid where you have a large financial institution that's stepping in to serve as this function to allow investors to redeem their shares by way of this authorized participant. So what the authorized participant would do is if Bitcoin is trading at a higher value than what the shares of the ETF are trading at, then this authorized participant will want to create more shares of the ETF. They'll go out and buy Bitcoin, deposit it in the trust, create more shares of the ETF and sell those shares. So you'll start to see the value of those shares converge to what that Bitcoin is worth. And now at the same time, if those shares start to become worth less than what Bitcoin is worth, then the authorized participant will do the opposite. They'll go out and they'll purchase shares from investors, and then they'll redeposit those shares because only this authorized participant has the institutional size to collect enough shares. And now the trust will be required to redeem that large quantity of shares that the authorized participant is coming up with. And the trust will, in that point, as an ETF, be required to redeem. So now that authorized participant will get the Bitcoin and will be able to sell the Bitcoin in the open market. So that's the mechanism here that would be keeping the prices closer in line. That's not happening right now with a closed-end fund-like structure that Grayscale is operating at.
Thank you so much, So-Young, for breaking all of this down for us. Santa Clara University Levy School of Business's So-Young Kim on Bitcoin ETF products and specifically Grayscale. Thank you so much. Appreciate it.
Bitcoin fell nearly 5% Thursday night, its largest one-hour drop since FTX's collapse, and still, as you can see, under pressure today by more than 4% in the red. Yahoo Finance's David Hollerith has the details for us. Hey, David.
Hey, Rochelle. So the price, not just with Bitcoin, but across the crypto market, Ether as well, and the total market capitalization for all crypto assets, had a plummet within the hours of 8 and 9 p.m. New York time last night. And it was a very sharp, direct, short plunge, meaning that, it looked pretty much like something was happening. A lot of people were all reacting to the same thing. And since then, there's been a lot of concern as to, what the market faces today. That being said, since the price had that one plunge, it's relatively stabilized at levels, Bitcoin trading at the $22,300 level right now. We saw a massive liquidations of Bitcoin long positions in that time too. So over all of Thursday, yesterday, we saw more than $200 million in Bitcoin long positions liquidated. And that is what causes a lot of these really sharp moves in a short period of time. But that being said, we haven't seen anything like this since FTX. So it's, of course, worth keeping notice on to see how investors respond and whether or not they see it as a time to yank more capital from the market.
And David, we did see Coinbase and others tweeting, talking about their association with Silvergate and saying how protected some of their customers were. What should we be looking at in terms of the fallout from Silvergate, say, versus the fallout from FTX?
Yeah, and Silvergate is kind of it's the event right now that it's a crypto-specific event that everyone's paying attention to as maybe cause for this sell-off. And it's not really clear at this point, even though there is that happening, that Silvergate is at all directly responsible for this in terms of what's happening at the company. That being said, there's obviously going to be concern, and crypto firms have, over the course of Thursday, rapidly distanced themselves from Silvergate, warning anyone who has money at that bank that they keep it there at their own risk. That came from crypto exchange Bitstamp. So clearly there's a lot of uncertainty surrounding that. But Silvergate, although it is a crucial provider of US dollar to cryptocurrency conversions for accounts and businesses especially, it's not directly connected with retail, so this would affect businesses. And most of the businesses we spoke with said they had no material impact or connection to Silvergate. That being said, stablecoin issuer Circle did say that it does need to unwind some of its services with Silvergate. So we're still watching that, but it's a fairly isolated incident. And as to this point, I think it's more the impact would be what would happen, what regulators would see as needing to happen in response to something like this. This is an exact example. If Silvergate is to hit a worst case scenario of what a lot of regulators have been cautioning and fearing for months in terms of crypto connecting with the traditional financial system. Excuse me.
Indeed, a lot of banking partners probably, have their antennas up as they look at this, and of course, crypto already under scrutiny from U.S. regulators. Yahoo Finance's David Holloway, thank you so much for that update.
Welcome back to Yahoo Finance Live. A dramatic fall for Bitcoin as concerns mount over the contagion caused by crypto-focused lender Silvergate. Let's get on over to the Wi-Fi Interactive, where Yahoo Finance is. Jared Blickery standing by. Jared.
Yeah, Silvergate earnings came out a couple days ago. Well, actually, they were supposed to, and that's a problem. They had to file a notice that they were going to be late with the SEC. A bunch of analysts have weighed in, and I'll get to that in a second, but I just want to show you the reaction in Bitcoin. This is a pretty big deal. Silvergate, one of the huge bankers to the crypto industry. This is a year-to-date chart of Bitcoin, and you can see this is the biggest down candle we've seen in a long time. And just on an intraday basis, Bitcoin never sleeps. This happened while I was sleeping. Guess what? Pretty steep drop here from the 23.5s back down to about 22.3. So pretty big handle that we're looking at right there. Now, on a longer term basis, I think this is significant because 25,000, that is the high that we were looking at before, and that is a high right there for 2023. This was a level that was pretty much in play for a long time, and the inability to get above it is a little bit concerning. The next stop would be 30,000, just because round numbers have been in play here, but that's actually where a lot of price action coincides as well, something around there. So I guess the bottom line is we're going to have to see what the fallout for this is, but we already have some analyst reaction, and I think this kind of encapsulates. This is from Canaccord Genuity. First of all, they're downgrading Silvergate to hold from buy, price target down to $9 from $25, but they're quoting, here's a quote from them, given its success, and this is Silvergate, and becoming a key component of financial services infrastructure to the digital assets industry, the bank to some degree has become a lightning rod victim of circumstances, given industry news flow over the last few months. One more quote, we are not aware of any chartered bank in U.S. history, going back a long way, that survived such a deposit drawdown as did Silvergate post the FTX collapse late last year. That I would assume that includes the Great Depression, where we saw a number of bank failures. So Silvergate is still a going concern, but there are questions about its survival, and we've seen this before. Let's take a look at a Bitcoin chart and just plot what's happened over the last year in response to the FTX fallout. Of course, we had Celsius first and some other failures basically in the middle of last year, but these were the losses we were looking at. Now, when you have leverage built up in a system such as crypto, it can take a long time to deflate that. And one of the key things that I've been looking at is Binance and Binance token. And that is something that we've still seen kind of hover around $1, and that's what it's supposed to do. So as long as Binance token, I would say, isn't deviating from its benchmark too much, probably have a decent chance here of avoiding another catastrophe. But let me go back to a Bitcoin chart. Guess what? If we go to see the lows that we had from several years ago, we could go all the way back down to 13,000, and that is if we have another huge failure here, and that would be the big one, Binance. So I don't know what's coming here, but that would be my warning. Before I go, I just want to take a look at crypto stocks, how they're doing today. We can see kind of a mixed board here, and let's just take a look at what's happened over the week. A lot more red than green. Silvergate down 61%. Looks like Marathon is down 7.5%. Coinbase, let's see if that's there.
Upper left.
Yeah,
wow,
upper left.
I'm surprised.
Coinbase up 6%. Was that it? Did they announce earnings this week, or was that last week?
They also made the move not to engage with any of the transfers from Silvergate.
Yeah, so no, well, I think
And they're going to be doing maintenance this weekend, aren't they? I think they're shutting down for maintenance.
Coinbase?
Sounded right, yes.
I'll take your word for that. I know that Coinbase has shut off access to Silvergate along with just about everybody else. So that's what's been happening there. But here's the Coinbase chart. You can see not much of a liftoff despite that 7% gain that we were looking at. Not much of a liftoff off of those lows just yet, guys.
Thanks. Appreciate it, Jared. I was trying to look up more details on that Coinbase shutdown. Did you get it?
That is correct, yes. An 8 hours to complete is the technical systems upgrade that's starting Saturday, March 4th on or around 8 a.m.
Coinbase sleeps. Bitcoin doesn't sleep.
Yes, it is.
8-hour nap. That's what we're talking. That's all they need.
Just a nap.
Investors piling out of Binance Coin with more than $6 billion of outflows over the past month. David Hollerith here to discuss what is happening here, my man.
Dave, so 2 weeks ago, the U.S.-based crypto trust company Paxos, which creates and issues the Binance USD stablecoin, the stablecoin you're talking about, was ordered to stop creating new versions of the token by New York regulators. And since then, we've seen about $6 billion fall from the market cap of this coin. A little more than half of that total has flowed into two larger stablecoins, Tether and Circle's USDC. So prior to the regulatory crackdown, Binance USD was the third largest stablecoin. But this is sort of the beginning not the beginning. This is sort of the latest of what's been a series of sort of kerfuffles and financial sort of questions that have been thrown towards Binance in the wake of FTX's collapse. There's also been this Forbes article that came out on Monday that drew attention to the fact that Binance may be moving assets the assets that support stablecoins linked to this stablecoin, which are also known as B tokens. They've been moving those sort of outside of the exchange's wallets and to other parties, including trading firms, which also include Alameda Research. So there's a lot of questions about that transaction flow and what it could mean for customers' assets. And Binance has rebuked a lot of these charges. Their statements have been mixed, but more or less they've said that the report has been a misunderstanding of blockchain data. Now, while it sort of remains to be seen what is correct, the CSO of Binance, or shortly after Paxos experienced this crackdown, had said that that regardless of how the exchange keeps cryptocurrency in wallets, it keeps a separate ledger for corporate transactions or corporate money and customer money, but it's really not been made clear whether or not that's actually being divided in practice and how they keep the money in wallets. And if what Forbes is sort of alleging is true and backing, I will say, with blockchain data, it would seem that at least for a period in late August, Binance did move funds that were supposed to back a few of its stable coins to trading firms, which would mean the company was lending and not necessarily backing its assets one for one, as they have said they've been doing. But again, this is all something that we're going to continue to watch as it unfolds.
We certainly will. And David, while we have you, Bitcoin, let's talk about the price that we have seen, the rally that we have seen since the start of the year. You're looking at Bitcoin up just over 40% since January 1st. What do you make of this massive rally that we've seen? And we're starting a new month today, the first day of March. Enough for that momentum to continue?
Yeah, January was momentum fueled for cryptocurrencies, and through February, we actually saw the rally fizzle out. Cryptocurrencies in general ended yesterday, the end of February, flat. And while volatility has fizzled, traders are still piling into the crypto options market. And they have concentrated bets, according to the data from platform Amber Data, of Bitcoin hitting $30,000. And that's the highest concentration, although there's a lot of bets that have been placed between $25,000 and $30,000. And $25,000, of course, is sort of the price that traders have been looking for Bitcoin to rally past. It did breach that price point in February briefly, but that's kind of been the point of contention here. And the expiration date for options right now, the highest amount is set for March 31st. So unless the price goes higher before then, we could expect a large liquidation. But that being said, it looks like because there's little resistance in between 25 and 30, if the price does get a momentum rally this month above 26 or something like that, we could very easily see 30.
All right, David Hollerith, always great to have you there. It's certainly been incredible watching the price action as of late when it comes to crypto and Bitcoin more specifically. Well, let's get you up to speed on Bitcoin because take a look at that. Price is moving even higher again today, up another 6%, touching the highest level that we've seen in months. Jared Flickery is at the big board over there with a closer look at this movement. And Jared, it's hard to wrap your head around it because the moves here, it's not really connected to reality, it doesn't seem.
Well, has it ever been?
Detached, really, given the...
It's
very detached.
We're talking about memes
from the SEC, right?
Well, yes. So that, I guess you could consider that a fundamental, and it does count. But what I've been saying for months now is Bitcoin has been leading the way. It's been leading risk markets higher and lower based off of important inflation reports and also what the Federal Reserve is doing. Over the last 24 hours, it's up 6%. Over the last 3 days, up 14%. Now, let me show you what the S&P 500 has been doing in the meantime. And I'm going to come full circle on this. Let me put some candlesticks. And here we have, this is a 6-month chart. So over the last few weeks, the S&P 500 has basically been going sideways with the other major indices. And this is as rates have been going up. And they're responding to some of these reports, sometimes in an odd fashion. But the last time we had a consolidation period like this, that was in the back half of December, another period where rates were going higher. So let me show you what's happening with the 5-year and also with the 10-year. Here's the 10-year. In that late December period, rates were going up and then they came down. This facilitated stocks going up. Guess who was leading the way? Bitcoin. In early February, we have rates going up and guess what? Stocks going sideways, but Bitcoin is not. So let me just show you Bitcoin once again, and I have a chart from our site that I prepared. You can get this on our website, yahoofinance.com. Key indicator here, volume profile. This shows you the volume that has been transacted at every price. This goes back several years, and here's this huge top we have, but here's where we are right now. And you're gonna notice a vacuum, a little volume vacuum all the way up to 30,000. So we could see prices rise and fill that volume vacuum all the way up to 30,000, but that's where the rubber meets the road. So impressive that Bitcoin has done this so far, maybe leading equities higher. We'll have to see if this continues, guys.
All right, Dr. J, thank you, sir. Appreciate that breakdown.
Bitcoin prices are up big today as the crypto markets seem to be shrugging off any crackdown attempts that include New York regulators aiming to end issuance of the Binance token, as well as SEC Chair Gary Gensler's proposed changes to acquire companies to gain or maintain registration in order to hold customer assets. And wow, suddenly Bitcoin top of mind with investors coming back here. I just find it shocking that we're seeing this move higher, just given all the activity in the space, and it hasn't been pretty.
Yeah, I mean, and there has been so much activity even over the past 24 to 48 hours. Just here yesterday when we were at the desk, it was the SEC and SEC Chair Gary Gensler that was really looking to institute this new move to make sure that firms are actually required or have to register in order to be custodians or have some type of kind of account holding process for their own customers. And basically what that would do, as I was understanding it in real time at the time, is basically they could not act as a bank or kind of holding accounts without registering through the SEC, and then wouldn't be able to stake some of those coins that they hold as well in accounts under custody, which would impact a portion of their revenue as well. Now, that is for some of the publicly traded companies, notably a company in Coinbase that does have its own staking practice. But even in the price action that we've seen of Bitcoin, based on some of the data that's come through, it seems like this is the reaction that's taking place as a result of a bit of a short squeeze as well here in this near term. And there's been some interesting data in terms of the liquidation of more than $60 million worth of short positions. CoinGlass actually tracking some of that data. And that was what was particularly sticking out to me with regard to the move that we've seen most recently over these past 5 days, too.
Past 5 days, yes. If you look at the intraday chart, I believe we see a leg down when we got those Mester headlines, right? Because if she's saying there was a compelling case for a 50 basis point rise at the last meeting, I'm seeing it on my chart. I don't know what, anyway, but regardless, you know, you have to think that if there is a view that higher rates are going to be a little bit more persistent, you see it leg down there, that's not going to be good for Bitcoin. It hasn't been good for Bitcoin, right? So that's just something to keep out an eye on. And just a reminder, yeah, we've had this rally. Like, this is kind of what Bitcoin does. Right?
Yeah.
So,
well, it seems that
I don't know how much to make of it, I guess is what I'm trying to say.
I think it's just been fueled by this expectation that, you know, we get that pause in Fed rates. But this Mester commentary this morning is striking. And it is more hawkish than what we have heard from members the past week or so after that big Fed meeting.
It is, and I think for everybody who was tracking when there would be more of the appetite to get back into risk assets, perhaps there's none more risky than a volatile holding or asset like cryptocurrency and Bitcoin specifically here. Being the poster child, that's going to get a lot of the attention and the fanfare. But I think after this washout, it's really just going to be the focus on which projects, which tokens and coins are left after the dust settles here too, and even more than dust, after the avalanche perhaps subsides in this ice age that we've heard some of the crypto profiles talk about it as right now.
Loving the metaphors, man.
Trying. You know, we had Ava Labs on yesterday, so yes. Ava Labs, excuse me.
So you're thinking about the...
Did you ever think about what leg down and leg up means? I've been listening to these stock market terms for all these years. It just sounds funny. So do I take a step down? Is that what we're getting at?
Yeah, a leg down.
I'm just decoding things in real time for our audience. I just can't help myself.
I guess, anyway.
Gap up, gap down. I like that.
That one's easier to understand.
Yes.